All right, hi everyone. Our opening analyst today was supposed to be Jim, the option professor, but he's not here, and I can't get a hold of him. So I'm going to play this other uh, presentation for you while um, while we're waiting. But then Fausto Puglisi will be here in about 28 minutes, and then Anka Metcalf after him, and then the full rest of the day. So I'm gonna go ahead. If you haven't seen the schedule yet, I'm gonna post it in the chat for you. And then while we're waiting for Jim, like I said, I'm gonna play this other presentation that I think you'll find interesting. It's about gold and silver investing and trading. So very interesting topic right now.
Hi, everyone. I'm Maggie Legg, and this is Samantha Molinari, Director of Customer Success at goldsilver.com. And we are going to tell you a little bit about the goldsilver.com platform and what sets it apart from everything else in the precious metals space. Make sure you stick around until the end for a special offer as well. Hey, Samantha.
Hi, Maggie. Thanks so much for inviting me.
Oh my gosh, it's so great to catch up with you. And it's a big deal because I know you have been on the phone nonstop, which is understandable given the record rally in metals this year. Gold, last year rather, gold up 60%, silver up 140%. And it's the sort of massive run. It has a lot of investors in the process of trying to figure out what their allocation to metals should be. Should they own more? Should they sell what they have? So I think it might be good to kick off with the end user. So talk to me a little bit about what type of customer does goldsilver.com cater to?
Everyone, honestly, from the little guys to the big fish, anyone who has metals in their home, who has even a small amount that they even want to get started with. We have developed the platform for you to very easily and safely purchase precious metals. We can solution what you're looking for if you want to hold it in your IRA, put it in the name of a trust, ship it to your door. We send everything signature required, fully insured. But our storage facility is probably most popular, and that way you can purchase and sell very quickly. And these are all hard assets, all held and ready to be used.
Yeah, so maybe we can put up the site. And I think what's really interesting is we're at a point in time where there are people who have been involved, and this has been a part of how they think about investing. But I think we've got an awful lot of people who are newer to the asset class, who are maybe thinking about it but haven't pulled the trigger yet, or who need to be more active. They're just having a sort of, they're rebalancing more. They're thinking about doing more. Maybe they want physical delivery in a way that they didn't before. I mean, these are the kinds of conversations and frankly, the questions that I'm getting as I sort of move through the macroeconomic landscape. Curious to hear what you're hearing from people as well. But talk to me a little bit about how this works. Like, what do I do if I go to the platform?
Coming to the platform, it's completely free to open up an account. We're very big on education. So you're going to see a lot of different avenues to take depending on the type of investor that you are. Just coming here, you're able to sign in or just create a brand new account. We ask for information such as your email address, your first and last name, and here you're able just to start that account with us. Depending on what you would like to accomplish is the type of account that you'd create. So we have just a basic account. You can come and just purchase and ship right to your door. We have a few easy ways of doing it. You can fund your account where you can send in a wire, or you can do an ACH transfer. Or send in a check. It takes a little bit longer, but once we receive that check and process it for a couple of days, then you have a cash balance on your account that you can then use for a purchase.
Fantastic. So what is, in terms of how this typically works, like what are the problems that the platform solves for? What makes this different?
What makes it different? Well, There's not a lot of other platforms that will allow you to purchase in your IRA. We can solve for that. We've partnered with a specific IRA custodian. It's kind of that one-stop shop for you to open up an account, see what type of account that you'd like to purchase using, educate yourself as to the different precious metals, um, and hold them in either your name or the name of a trust. It's
Mm,
an easy way for you to buy, sell, dollar cost average if you want to. Um, we have a few different products that I can probably take us through. I have an account that I can show you, one that's already established, so it's all unlocked as to what we can do. Let's take a
let's
look.
do it.
All right. So on our buy side, a lot of these investors, they already know that they want to purchase precious metals. It's just a matter of what kind of metals that they want to purchase. Do they want to have them shipped to their door, or do they want to hold them in storage? So we have the American Gold Eagles, Canadian Maples, and we have detailed pricing. And ours usually is pretty low, but we do have a price match guarantee with specific competitors. So if you
Mm.
do find that their price is lower, give us a call. We're happy to price match that because we don't want you to sacrifice the good customer service that we're offering just for price. So let's see. American Eagles, for example, or actually, Maggie, what do you want to buy? I've got a little
Mm,
cash in this account.
well, good question. And I'm going to be honest. This is new for me. I've
Mhm.
covered markets for many years and thought about it, but I think some of the barriers that I thought were there kind of have held me back. So I've never actually done purchasing, but I think I'm going to go with gold.
All right, that's
It's
it.
not financial advice, people, but I think I'm going to go with gold.
Perfect. Um, for these products that we have available, we give a little, education into them, and of course, our customer service team, we're happy to provide you with any question or answers to your questions about, let's say, coins versus bars. We do have certain discounts depending on the quantity, and you'll kind of see that the coins will be a little bit higher in the price just because of the high demand for those
Mm.
products in the market. The bars, usually you tend to see a little bit lesser of a price. Um, and depending on how you want to purchase, like the payment method, that'll also affect it as well. Convenience is credit or debit card, but there is a bit of a processing fee. So the best price is pre-funding your account and
Mhm.
then purchasing right from there. So I've pre-funded a little money onto our account today. And let's say that we want to purchase gold. We have a few different vaults to choose from within the United States as well as outside the United States. But for this one, our most popular is the Salt Lake City, Utah location. And let's say that I want to do a cash order where I've got, I don't know, $10,000 in my account that I want to use for a purchase. And it'll kind of do the math for me, which is really nice because I'm a little lazy. It gives me a little discount, and it says, all right, use from my cash balance the $20,000. And as I click on next, because I can purchase two, and it'll confirm.
Mm.
It's as easy as that, honestly. And so if we go over to like our account balances, it's going to show that.
Okay, Jim, are you there now?
Right here.
Okay, you should be able to share your screen now. And for everyone in the room, sorry about the technical issues and delays and stuff. But if you want to see find out more about the gold and silver that Maggie and Samantha were just talking about in that video, you can check out that link that I just posted there. And Jim, the option professor of optionprofessor.com, is now here, and he is
I'm
going
going
to
to
share
share
his
the
screen.
screen right now, and then we'll get into your stocks right away. Okay.
No.
We hit
So
here.
yeah, go ahead and add go ahead and enter your symbols for Jim now.
Can you see everything?
Yeah.
Okay, good. All right, guys, we're all ready to go. Get your stocks in here. While you're doing that, I'm going to give you a quick review of what's going on. As you can see from my work, the market had better hold on to my gold line. So when I tell people I wanted to hold the 6,400 level, you can see why. Because if it doesn't, there's a lot of nothing underneath of it. If we go to my 5-year graph, you can see it's already broken most of the line. So the path of least resistance would be a total drop down underneath 6,000. And so we've got to stop going down, and 6,400, 6,435 is my number, and getting back above the number here, which would be 6,703, which would be a great start if we were going to actually recover. So you look at 6,703, as you can see, we peaked through my blue line, but never closed above it ever since it dropped. Okay, so you've got 6,703. Put that one down as something to watch. And obviously right down here, which would be 6,434. If I go to my real long monthly, again, there's a reason why it stopped here. So that's why I'm saying 6,500 is a big line in the sand. 6,507, you know, it's been holding that number. So you got 3 numbers to work with: 6,507, 6,434 on the downside, and start closing above 6,703. And then you'll have a much better idea of where we're going on the next major move, in my view. So I give you a little bit of a view on how I'm seeing things. A couple of other things real quick. Want to keep an eye on the VIX. The VIX has been steadily above 20, and that's not good. So you can see the VIX here on a long-term basis has broken out to the upside. You look on the 5-year basis, it's broken out to the upside, and it's got a lot of support at 20. So the longer it stays above 20 is not good. The one good thing is we did hit 35, and that's on March 2nd, March, I thought it was March, yeah, March 9th. I thought it was March 2nd. Anyway, whatever it was right there, early March, has not taken it out yet. So even though the market's made lower lows since then, again, we have not taken that out. So that divergence might be a positive, but that trend looks like it could explode at any point. So you've got to be using risk management here, and you have to be very careful. A break of 6,507, a break of 6,434 would break all those moving averages I have. And then basically, if this thing starts spiking above 30, you could have a very large precipitous drop. So, and of course, the way the news is going back and forth, we're talking, we're not talking, they want peace, they don't want peace. It could break either way. And so the bottom line is you have to be very careful with risk management now, if you ever were going to be. A couple of other things, the percentage of stocks above the 200-day moving average. You can see that has broken down. And the last time it broke down very badly, we were back in April. In November, when we went down to 65.27, it was here. So but it held the yellow line. Here it's broke the yellow line. The trends are clearly down. So you've got a problem that you've got a gap down here at around 25. If we were to break 6,400, and if the VIX started getting into the 50 or 60 mark, I would not put off the table the percentage to really have a big drop. So again, you got to get this back above 50, 55. Got to get it back above there. You got to get that VIX under 20, and you got to get the S&P above 6703 before we can even talk, in my view, of a major rally in the indexes. Obviously, individual stocks do their own thing. Okay, so in the chat box here, you have HRMY. Okay, that's going to be a Harmony Biosciences. Okay. As far as I'm going to start out in the 20-year, but it's not been around that long, so we're not going to use that one. Use the 5-year. Hasn't really been around that long either, so this is a relatively new company. Let me check on RSI here. Give me a second. I'm trying to give you any idea of where this could be at a low point or not. Okay, you see the RSI down here? It's in the 35-40 range. And down here, it's in the 36. So it's a little weaker on the RSI, no help there. Go to the 1-year graph. Down here, the RSI was in the 28-30 neighborhood. Now it's in the 30 neighborhood, and now it's in the 35. This could be a support zone. It had to come down and fill that gap. You know, the gaps get filled. You see this gap? Who would have thought when it was way up here, it was going to fill this gap way down here? But it did, didn't it? So the gap's been filled. That's a positive. So again, right now it is languishing at best. I'm not familiar with this company. I do know some other biosciences that seem to be doing pretty good. I'll put those up real quick for you here. These are ones that I own. Twist, breaking out a little bit on the upside. And this is 10X, breaking out a little bit on the upside. So these are two in that neighborhood that seem to be doing a little bit better. Maybe this will start turning. Let's look at the shorter term graphs. See the 1 month, if we can start getting above 27, 28, 27.80, 28, that could turn these things up. The longer if you can get to 28 or up in this area, the longer it stays there, these averages will turn up. So again, I would personally like to see a little bit more of a turn in the averages before I got too excited. On the 5-day, again, got resistance here. So remember I said, get it above 28 bucks, you'll be in a lot better shape. So that would be my number on that. It had to come back down and fill this gap, which it did. Had to go up and fill this gap, which it did. So now it's going to make a decision. My personal view on this would be get above 28 and hold. And that would open the door for a recovery, maybe up towards 33, where there's going to be some problem there. And if you got through 33, then you'd be all set here. But, you know, the blue line pointing straight down is not a good thing. You'll notice you make your money when the blue line is going in that direction. And it is not going in that direction. So you're a little bit fighting the tape on this. But it is stabilizing. But again, holding on to things that are in downtrends that are stabilizing is not the best place to be, right? So again, could it be hitting a low down here? It could. And has it shown any evidence that it has turned? I don't see it. Okay, so that's Harmony, HRMY. All right, so let me go through some that you guys might be looking at here. One of the big things that people are talking about is the IGV. And what is the story here? This is the software. Look at this thing, 118 all the way down to 76. Okay, and it just had a rally and it had a pullback. Let's see if that's a Fibonacci pullback with rough math. It went up $12. You take 61% of that, you get about 7 and change. If you take 88 and take away 7 and change, you come down to about 80, 81. So that's why it's holding. So this could be a Fibonacci pullback. Closes above 84 and above 88. We'll make a run on a reversion rally to fill this gap and to hit the purple line. So this is an opportunity area. Now you got to ask yourself, what stocks are in this thing? Well, the big one is Microsoft. And this might be the one to take a shot at here. You got RSI at 31. Now you got RSI at 30. No big divergence there. Down here, you've got the RSI at 24, and then you got the RSI at 32. So there is a divergence there. And then on a 5-day, you had an RSI of 30, and now you got an RSI of 50. So there is a little bit of a divergence here, which could be an indication that the selling has dried up. Another reason why Microsoft might be slowing down here, you see my gold line. So if you're going to take a shot at Microsoft, I'd say right now is not a bad place to start thinking about it, or taking a shot or figuring out what you want to risk. Because again, you got 360 as a line in the sand, 362.42 to be exact. You've got a bit of a divergence in the short-term graphs. And you got a company that used to be 560 bucks that's on sale for 360, 370. So, I would probably look at the call, because again, if you're selling calls down here, if you're going to buy calls, you got to think who's selling them. Well, the guy who's selling them is doing what? He's selling calls after we drop $200 right against the long-term support. His premiums are probably not that great. And he also has to worry about a gap being filled, because you see this gap between 440 and 480, that's a big gap. Now, again, that chart does not look bullish at all. So that's the problem. But you can see that it is coming into some long-term support. And if the news were to change to make things a little bit more bullish, then this thing could have a rally. And again, if you thought it was going to go into the 440, 480 level, first thing you'd want to do is get some time on the clock. So say you went out to May, give you for instance here, if you went out to May and, because the premiums are rather rich, well, obviously, if you just wanted to buy it, well, let's look at all strikes. Okay. So if you think it could rally by May 15th, okay, so that would indicate something happens with the war, it changes, the market starts getting bullish, people want to come in and put money to work. They want to put money to work on companies who have good growth. Microsoft has very good revenue growth, and ergo, you're looking at what? An opportunity to maybe place money if you were on the sideline or looking for a U.S. exposure. And so basically, just to give you a vertical call spread idea, if the market is at 372 and you want to think about a very big snapback rally, maybe to 440, you could look at something like the 380 call for $16 here. This is rough math, 16, just using last trades. And then if you sold, let's just say the 440s, you'd get a little under $2. So if you put up 16 and you got $2, rough math, you put up $1,400. And if it got back to 440 or better at expiration on May 15th, the maximum the spread could get to is the difference between 380 and 440, which would be $6,000, and your risk in this example, rough math, not exact, 1,400. That's certainly not too bad of a risk reward. If you want to raise your strike and risk less money, you could do something like the 400s for 8, and then you got the 440s for 2. You're putting up $6 to make $40. And so that would be vertical call spreads if we're going to get a rally towards 440 or better. And why would you do that? Obviously, the news would change on everything. And then you would be looking at a situation where that gap, where it starts at 440, it might be able to jump up to the gap. Again, the world has to change. The news has to change. But again, obviously, the world can change because we've gone from 560 to 360 almost. So obviously, things change. So again, and there are some people who believe that the software is very discounted and that there could be some gains to be had if it obviously can hold some support. And again, where did we get our idea from? The longer term moving average coming in here at 360. So at least you have something to defend. If you break 360, then you might take a loss on your position or do something to risk manage it. But, maybe we're in a low area here. That's something to take a look at. And there's other ones as well. People have been looking at Oracle. And Oracle, again, is down in that same kind of neighborhood. So I think that's kind of interesting. The other thing that people might look at down here is put writing. And why would you look at put writing down here, Jem? Well, let me explain that. Again, these are just ideas and information. I'm not giving advice. I'm not recommending, but I'm showing you illustrative examples of the ideas that I'm talking about. Now, again, every idea has a risk reward. On the vertical call spread, you put up a limited risk of money, but if the market stays under the lower strike, in that case, it was either 380 or 400, and the time runs out, you lose the entire debit amount that you paid. Here, this strategy is called writing puts. And basically, you're trying to take advantage of the fact that people have bought puts with a pretty reasonable premium. You think that the market may not go down. So you're looking at something underneath the level that you think is a support or a floor. So right now, if you looked at the yellow line here at 127 and you thought that that was the floor, and you thought that this stock has already been discounted from 340, 350 all the way down to 130, 120, 135, is it? Yeah, 135, which is a heck of a discount. You might want to look at the puts. So let's just say we looked at some puts for May. And you look at puts in May and say you looked at the 110 puts here for $169. and just use, I'm going to use round numbers. Let's say you could get that done for, well, look at the 115s. Well, let's just say this 110, and let's just, for an example, math purposes, it's going for $2. If you sold that put, you're going to get $2. And what are you signing up for? You're agreeing to buy the stock for 110. So if your suitability is cash secured puts only, you have to have $11,000 in your account because 110 times 100 is 11 grand. And you're going to get, in this example, I'm rounding up $200 cash flow. So basically 110 minus 2 is 108. So that's what you're net going to be agreeing to buy the stock for when you collect your premium and you take it away from your strike price. So where's the stock? It's at 146. Where would you be agreeing to buy it? 110. Would you get put stock at this point? No, because as long as we're above the strike price and the time runs out, that option premium on expiration, if it's above 110, will be at 0. Now, some people, and again, so stocks at 146. If it goes up from here, you'll keep the premium. If it goes sideways from here, what does that mean? 130, 120, 150, 130, 150, 160, sideways. You keep the premium as the time runs out on May 15th. And then on the downside, you're still okay. As long as it stays above 110, that premium will still go to 0 at expiration. Now, what some people like to do, if they want to get a little bit more aggressive, say they've determined they don't think it's going to make a new low under 135. So they give themselves some room. Now, by the way, on a risk management basis, if it were to break 135, or I think we had our line in the sand about 127. If it broke 127, you could go in and buy your put back, and when you buy it back, you take the risk off the table. That's like liquidating a position. Okay. Now, let's just say you were more aggressive and more suitable to do aggressive, and you said to yourself, you know what? I don't think it is going to go under 127. And so basically, I'm going to go up to the 120 calls, puts, I'm sorry, the 120 puts, and I'm going to sell that for $3. Now I'm agreeing to buy at 120 for, until May 15th. And so basically, rather than just keeping that premium, somebody might want to hedge themselves against an up move. So they got $3 to spend in premium. So what could they do with that $3? They could either buy it.
Hey, Jim.
Yes.
Sorry, I got to cut you off there.
Oh, I'm sorry. Okay, guys, thank you very much. Again, we'll get to more. If you have any stocks that I haven't covered and you want to do anything, send an email to me, optionprofessor@gmail.com. Thanks, David.
All right. Thanks, Jim. That was Jim, the option professor, to open the day for us. And next up is Fausto. Fausto, are you there?
Yeah, I am here. What's up, David? How are you doing?
I'm good. How are you?
I'm doing good, doing good. Hold on,
I
I'm just gonna
turned off your camera when you came in, but if you want to turn it back on, you're welcome to now, and you should be able to share your screen as well and get set up.
Sure, no problem. Let me just fix something here. And
Oh, and while you're getting set up, just a reminder for everyone in the room. Unfortunately, Jim had some technical issues this morning, so he had a shorter session, but if you he does host my panel discussion every Monday. So if you missed Monday's panel discussion, you can go to TimingResearch.com and see that. Okay.
all right, we're good.
Fausto, I see your screen now. Yeah.
Perfect. All right, so basically, Dave wanted me to come in here and talk to you guys for about 30 minutes, and want to talk about some stocks that are moving. Want to talk about some things that are going on. Does anyone here follow me on social media? Just out of curiosity, just do a quick little chat. I see we got a bunch of great audience in here. Anyone? See, you do. Okay. Okay, good. There's a bunch of you. Okay. For some of you that didn't, I want to. There was a very big trade that we did this past week, and I want to share it with you. So I just want to bring you really quick before we go into the trading, because it's going to lead to the stock, but I'm going to bring up my YouTube channel. So if anyone here is not subscribed to it yet, here's the channel right there. And I want to bring up this one. Hold on, let me get my pointer so you guys can follow along. There we go. All right. So did everyone see this stock VCX? Did anyone get a chance to watch that one right there? It's an IPO that went from 31 to 170. It actually went to almost $600. You know, we were ahead of the game before it even started. Dan, you saw it. Okay. Anybody else saw it? What I want to do is I want to play the video really quick. Now we do a lot of shorts. I do a lot of shorts. I don't really do too many big long videos. Sometimes because it's just sometimes people just want to see it and get right to the point. I want to play this video, and then I did a second one, which is right here. Okay. And, my goal is I want to talk a little about what made this stock go up? How did we find it? Everyone's having issues. Like, how do you find these stocks, and how do you protect yourselves? And here's another one right here. That's a really good video too, which I loaded, Traders for Beginners. Who are the buyers and sellers? So, I want to play that video, and I want to go to the execution system. I want to show you what happened, because I think obviously a video is worth 1,000 words. So let me just clear this out and let me play. You should be able to hear it. So let me just go right to it. Have you ever traded an IPO? Well, let me tell you about a stock that's went from $31 to $170 just in a couple of days, and almost no one understand what actually is happening. I'm talking about a stock called VCX. Now, this is not a normal stock IPO that you see. This stock had a massive run this morning. It started from 120, already ran to 170, still looks higher. But what's serious is making this momentum is what this company does. This isn't your typical company. This is a venture capital style fund, which means you get access to companies that you can't get public or you have access to. I'm talking about names like OpenAI, SpaceX, Stripe, even Databricks. These are companies that most retail traders can't even invest in because they're all private placements. So the real story is this, that people are still waiting for these IPOs to happen, but VCX has already exposed itself and is already hitting the market. This is why the stock is getting so much attention, and that's why the move is in real high demand. If you were to learn more about how to trade stocks like this, then you'll basically know how to take on it, and you'll also be able to know how to trade, like using something like level 4 quotes, which I'm going to show you. But if you want to know more about it, please leave a comment. Tell me what you think about the stock, and I'll be happy to answer you, because these are things that don't come very frequently. Thanks for listening. See you in the next one. Have you ever traded? Okay, so now let me go to the actual execution system. Let me show you what happened with that stock. Okay, so here's VCX. Now, when I posted that video, okay, the stock was right around here. This was the day I did it. It was on the 23rd, I believe. And you could see how the stock literally just exploded. Okay, and it went from 118 to 120, right close to about 200. So all my traders that were in my trading room, which, by the way, all of you are invited to come. Let me bring up that trading room really quick so you guys could see it. Where are they all? Which room are they in? Nope, they're not in this one. So many windows opened up here. Is it in here? Yeah, here it is. So here's our trading floor. And, right now you could see that there's, about 200 people in there. These are all our instructors. Right now they're looking to stock Apple, and you can see how the thing ran up. So I'm going to invite all of you guys to come in here, whoever's interested. I know some of you are already have been in there. So let me clear this out and move this over and put it here. So this stock went up, and the main reason is that these things move all the time. And you could see on that day it ran, and sure enough, its stock ran all the way up to a price right around 550. Now, I have multiple accounts that I trade with, and, I want to bring up one of the accounts and just show you something. Okay. So here is my email. Hold on. want to show you this. I had 3 accounts I did it in. All right, so here it is. You should not be able to see my account number. Okay, so here's my Schwab account. And right here, you could see that it was sold. And I didn't have that many shares in this account. It was only about 100, but it was sold right there. And then the other one, there was another 150,000. Yeah, another 150. I sold that at 190, on that day. And these are some of my, I actually trade my kids, I have my nephews and nieces. I trade them. I bought them stock too. So that's where I kind of sold it at. So everybody could see that's the account that came from Schwab. People that never show their accounts, but I was like, I do that. I show you in our trading room. Now, the question is why? My question to you is this, everyone, why did that stock go down? How did I know to get out at 500? How did I pick this number right here? Does anybody know? Let's see if anyone could figure that one out. Let me zoom in a little bit closer so you guys could see it. Why did I get out at this number right here? Anybody have a guess? Any idea? Because this is the lesson I'm going to kind of show you. Yes, no. Give me a question mark if you're not even, just give me a pulse to let me know you're paying attention. I know some people have their chat to like blank. The hammer, that's an old line, but yeah. There's no hammer in this stock, Dan. No hammer in here. Nobody knows. Traders, can I be honest with you? If you can't answer this question, you should not be trading. You really should not be trading. Stocks go up and down on for 2 reasons. You got a buyer or you got a seller. That's it. Ron, you're right. You hit the nail on the head. By the way, Carlos, what do you think the stock is doing? Okay. I mean, I hear from you, George, Jay, Jose, who else? Steven, what do you guys think? Don't be scared. No one's going to, you know what? When you got money on the line, you better know what you're doing, because how many people own the stock and thought it was going to go to 1,000? And I thought it might go to 1,000, but then all of a sudden, as a day trader, things change. So that's how it went down. Now, the reason why it went down is this. All right. This stock started to consolidate. And what that means is that the sellers started running out of shares. The buyers started pressuring it down, and that wasn't normal. And you could see how the candles started getting very thick here, where they were not thick here. So what happens is that the volume started dying off, and if the buyers start dying off, the demand's not there, the supply starts kicking in. Now, remember, everybody's looking to take a profit, no matter what you're doing. Everyone's looking to take a profit. And, there was times that I was thinking like, maybe I should jump in. Maybe I should not jump out. So what drives these things up is not what we call, Dan, the hammer. Is what we call iceberg orders. Okay. The hammer doesn't really exist anymore. You're probably reading some of the old books. The hammer is a dominating market maker. We used to call him the hammer. Well, with today's markets and the way we use ECNs, there's market makers don't have to expose themselves anymore. They don't have to show what they want to buy and sell. And that's the reason for it. But anyway, it was a pretty big winner. And you could see that video was there. And I continued with the videos on that stock. And let me play the last one, because that's when we sold out. That was the day before of that trade, before I made the big pop. So let me go back and let me just show you that one. And by the way, if anybody here, wants to register, please go to that channel and, feel free, because you could see that there are just tons and tons and tons and tons of great videos. All right. But this is the last one. Well, I want you to watch this one, and then I'm going to show you something really cool. Yesterday, I showed you a stock, VCX, exploded from 120 to 170. And if you thought that move was big, this morning it broke down. And exactly what happened around $200 level in the stock trading room that we run, now it's breaking records. This stock has pushed even higher, just under 300. Now let's sink this in. The stock is trading only about 600,000 shares, making the move like, how is this even possible? This is what happens when you got a very low float stock, tight spread, and serious money is stepping in. But here's the part nobody's talking about. It's not the chart that tells you the story. It's the order flow behind it. Now, we've been watching massive iceberg orders on level 3 and level 4, hidden orders that are sitting there and reloading, absorbing everything in sight. And it's exactly why the stock keeps pushing higher. This isn't the hype. It isn't luck. It's how pros follow money. Now, if you don't know how to see this, you're always going to be late to the move. But if you do, you can spot it before it happens. Drop a comment. Let me show you exactly how we track and do this in the live markets every morning. So I'll see you there. Yesterday, I showed you a stock, VCX, exploded from 120 to 170. Okay, so basically what happened there is that it kind of showed you the day after what happened, you know, how the stock made its big move. Now, there are other stocks that also, what I was saying in there is about what tells the story is the orders. So I want you to watch one more video, and then we're going to check out another stock where I'm going to show you iceberg orders, which I thought was a really cool video. It's Traders for Beginners. And once again, these are all brand new videos that came out. I want you to watch this one, and then we're going to go into the trading. And I promise you, I won't show any more videos. Okay. But the video does tell the story when it comes to the stock. Oh, wrong one. Sorry about that. SMCI just got destroyed, and it's exactly why traders are watching it right now. You probably saw the news issue tied to NVDA chips being sold to China, and the stock took a very big hit. Panic kicked in, everybody started selling. But let me ask you something. Why is it after bad news, the stock suddenly starts to run back up? Who's buying it? Because it's not retail traders pushing this thing higher. It's institutions, hedge funds, the market makers. And this is where most traders get it completely wrong. They focus too much on the left side of the chart, the indicators, the patterns, the lagging signals, but that's not what moves the stock. Stocks move because of orders, buyers and sellers. Real markets step in. The pros don't guess. They watch the right side of the chart. That's where you see the orders come in. This is where the momentum is built because the move is where it happened with those orders. Now, let's take a look at SMCI. Big drop, fear everywhere. And then all of a sudden, the stock starts to see some buyers. They start stepping in. Then all of a sudden, institutional money starts coming in. Support starts building up. And then here's the stock starting to make its move. That's exactly what we teach you when we use NASDAQ Total View and Level 4 tools. Level 4 tools. Those stocks show you how to follow the market and show you not to guess with indicators, but to learn from the orders. Now, all you got to do is reply back level 4 below, and I will show you exactly how to do this. So don't miss my live session. SMCI. All right. So basically on that one, we're going to bring up the stock SMCI. So I was trying to talk about SMCI. Let me just bring up the chart here so you can see a little bit bigger. Apparently, the CEO goes out there and he smuggles in chips to China, NVIDIA chips. Why would he do that? That's another story in its own. But as traders, those catastrophes make opportunities, and that stock went from 31, dropped all the way down to a price around $19. Now, looking at it, you could see, okay, the news came out, it dropped, and it finally stopped here right around that price. Now, why did that stock decide to go back up? Because of buyers, okay? Now, we here at Cyber Trading University, all our traders in the room, we bought it. We went long. We got in right around the 21 number, right around there. Now, as we were on the mic, I ended up selling it. Okay, I got out of it. I took a profit on it because as much as I like the stock and it started going up, there does come a point where it's like, well, why is it going down now? You know, I mean, I thought it was going up. You were positive on one side, and now the next point, you're negative. Well, I want to bring something up and show you something really quick. First of all, does anybody here have something called Total View, NASDAQ Total View? Just give me a yes or no. Anybody here have one? NASDAQ total view? If you don't have it, I'll show you where to get it, okay, in the next few moments. But I want to bring this over here. I want to show you this. This right here tells the whole story. This is 9:30 in the morning. This is pre-market, okay? This is when the market opens up. Now, do you see this right here? That's what's called program trading, okay? This is what's called the right of the chart. If you follow and go all the way to here, this is all those orders, okay? Now, Dan, you've been very positive being listening in. Dan, could you tell me how many shares do you see that are looking to be sold between $24.20 and $25? Could you give me a ballpark idea what those numbers add up to? Or anybody here? What do you think? About 500,000, Joe's saying. Dan says about 200. Well, you got 1, 2, 3, 4, 5, 6, 7, 8, 9, and very dead. You're all wrong. It's about 900,000 shares. Okay. So let me do something. Let me show you something really quick right here. Because I think you guys need a little bit of what was a wake-up call for me. Bring on a calculator. 900,000 times, let's say average cost $24.50. There's about $22 million worth of stock that's looking to be sold there. What makes you think you know more than the 900,000 of $22 million looking to be sold out there? What makes you think you know more than them? All right. So the big thing is you are what we call reading the right of the chart, the right side, where most of the people look at the left. They don't know where to look at the right. Now, I'm not here to change anyone's style. Okay. This is only something that's going to help you to at least know where the buyers and sellers are. You all agree, no matter if you're trading options, cryptocurrency, swing trading, options trading, you're always going to have buyers and sellers. So you hear a lot of great speakers, and I'll tell you, hey, I love this company and everything. Okay, great. Then why is it going down now all of a sudden? Oh, well, Mr. Fibonacci and the MACD, and it has nothing to do with that. It really comes down to order flow. Fausto, can this be used on all stocks, even the ones listed on the New York? Yes, absolutely. So first of all, the New York Stock Exchange is no longer its own entity. You could trade stocks on the New York, on the NASDAQ, and the CBO. It's more of a global thing now. That's why you don't see any traders on the floor anymore, other than just there for just good looks. You know what I mean? Pretty soon, that's going to be you could have bar mitzvahs there and weddings soon. Okay, that's what they're going to probably end up using it for. Yeah, everything is electronic. That all changed. That whole thing all changed, Joe, when we had the Hurricane Sandy. That was like the end of the ending of the New York Stock Exchange. So they kind of followed the NASDAQ model. If you want, Joe, and this goes to everybody, if you send me an email and, basically just open up your inbox right here. Let me bring this up. Open up your inbox and let me clear this out. And send me an email to Fausto@ctutrading.com. Let me get a copy of that, and I'll put it in the chat here. And just write NASDAQ, okay, book. Just write those two things, and if you can, I don't know who you are, so just give me your first and last name, so I can call you by your first and last name. Some people here have Ron. I mean, I don't know. Like I said, I always call people by first and last. And just hit and make sure you write NASDAQ book. Just hit send, and this is what I'll do. Okay, I'm going to send you 2 videos that will show you where to get total view. And by the way, it's directly through NASDAQ. You can get it through your brokerage firm. You get directly through, but if you want to just make sure that you want to get the correct data, because some people, some of them don't even know what you're talking about. Oh, yeah. They all say, well, we have it. And you're on hold. You're talking to this guy, talking to that guy. At the end of the day, I'm just going to, you technically have a seat on the exchange, so you could all get it. So just send me that email, and I'll be happy to send you 2 videos. They're about 5 minutes long. One will show you where to get it on their website, and the other one will show you how to set it up, because that's another problem people have. Everyone's looking at these platforms and like, shoot, I don't even know what the hell I'm looking at. You know what I mean? What's all these numbers mean in this? Let me give you that 5-minute video so you can go from there. But the thing is this, look what's happening to the price of the stock. It's basically started all the way up here, and now look where it's at. Since we've been on the phone, been on this webinar, I started right around 10:30. The stock was at 23 right there. Look where we're at right now. We're at 22.60. How many of you here have traded and like always like, man, I wish I sold it sooner, or whatever it is? The thing is, you're not following the orders. Now, if I go to the execution system, and I just want to show you something really quick here too. And this is an intraday chart. And you'll notice how this stock had such a great move when I made the video. All of a sudden, right here, if I draw a trend line, it decides to stop. What are those numbers? Does everybody see those numbers? And this is from yesterday, right? And then this morning, we did have a spike. It did go all the way up, but look what happened. Now, Dan, Joe, I know some of you probably, I don't know if you're listening or whatever. I hope you are. But why is the stock going down so heavily right now? Does anybody know? Why is it going down? Sellers. Big, Joe, big sellers, right? A lot of big sellers. Now, does that seem confusing? Did I lose anybody, by the way? Here's my email, by the way. Again, sorry about that. I think some people I didn't hit send. Dan says no, right? I mean, like, could you imagine like buying a house and there was an area where you could see where everybody you're bidding against and what the seller really want to sell it for doesn't exist? You know, they always kind of force you, and you might not even, you know, how many times have you probably tried to put a bid in a house, and the ones that you wanted, you didn't buy because you didn't think you were going to get for that price. And the ones you did really want, they blew you out of the water. And if you knew that, you would never took the time to go out there and put a bid in, put all that work and effort. But that's the difference between trading. Okay. So like I said, as you guys were on the phone, I don't know if you guys could see this, but I sold SMCI when we started. Okay. I sold it just now because I felt like it's seeing the orders. I'm going to be on with you. And I says, you know what? Let me get out of this stock. Let me get out of it. And here's basically a close-up shot. I don't know if you guys could see that. Everybody could see that right there. That shows you the time that I just sold it and at what price. So I actually own SMCL, which is the ETF. So another thing that we teach here at Cyber Trading University is sometimes you don't have to own the common. You could own the ETF. And you could see it trades exactly the same, just moves twice as fast. So getting out of that stock at, there it is right there. 170. Yeah, right there. You can see it right there. That's the time. You guys could see it. And I sold it. Okay. So got out right when we just started talking. I didn't have that many shares. Only had about 7,000 at 176. I sold it, but you could see where it is right now. So, you know, it's getting close to support. That's the big thing about trading. You know, you see the orders out there. You know, I could have sold it. I could have sold it a lot sooner, and I could have probably made more money. But listen, that's trading. That's trading. They showed up this morning. You see the game. You're like, do I jump in? Do I jump out? And sure enough, this is what happens. Okay. That's what trading is about. Let me show you another one. Yeah, I think that's all of them. All right. Now, by the way, anybody now, if any, I know I have to get off right now. A couple of things before we go. If anybody here would like to, let me clear this out. If anybody here would like a copy of my book, I'd be happy to give it to you. It's a color book. It's a fast read. It's one of the, it's a #1 bestseller. You could, if you like, you can go to Amazon. You could pay me right now $60. If you want, I'd rather give it to you for free. I always feel like, you know, you give a little, you get back a little from everybody. So the two biggest gifts I'm going to give all of you is this. I'm going to give you my book, and I'll give you access to how to get NASDAQ Total View. That's something that I think is a great way to get started. Let me just tell everyone before we move on, trading is not for everybody. Just to let you know, it's not. And, you know, when you listen to all these presenters that David and Anka put together, you'll see that some people you relate to, some people you won't. You definitely should try a little something from everyone. But when it comes to trading, it's okay not to do it. You know what I mean? You got to find the right mentor. You got to try a little bit of everyone's courses. You know, to me, I rather put the fear in God in you, but it is a 80 to 90% failure rate. You have a better chance of starting from scratch, opening up a restaurant, not knowing anything to get into the trading business. And the reason why everybody thinks the problem is it's so easy to get into it. And, you know, unless you know how to play the game, you know, one stock could destroy you, and you probably know what I'm talking about. So go out there, register, listen to all the presenters that David has going on. And like I said, I just saw a bunch of you just sent me a bunch of emails right now. Joe, I got yours. Barb, I got yours. Mike, I got yours. Just feel free to get it. All right. So I'm going to pass the mic back to David. Give you guys a few minutes. Thanks for having me, David. And guys, just remember, just trade safe. And just always remember what I taught you. Subscribe to the channel, watch some of those videos, watch them over and over again. Please like him, leave a comment, and I always answer them all back. And just like I said, just make sure trading is for you, all right? Because it does pay a lot, but it is a very big failure rate. You got to have a good mentor. Thanks for listening, everybody, and look forward to seeing you all. See you again soon.
All right. Thanks, Fausto. All right. Yeah. So be sure to email Fausto to get that ebook. I'm going to post his email there again. All right. Yeah. Thanks, Fausto. Thanks for being here. Yeah. So Anka Metcalf is up next, and just a reminder, in case you didn't hear this, I am recording each of the presentations individually, and they will be available on TimingResearch.com as soon as I can get them processed. Also, if you search for Timing Research on YouTube, Substack, or your favorite podcast app, you'll be able to get them there as well. And I just started doing this recently. I am live streaming the event to YouTube. So if you have to leave the Zoom room for some reason, but can still access YouTube through your phone or whatever, you'll be able to still listen in that way. And Anka, are you there?
Hi, David. Hi, everybody. Good morning.
Hi, Anka.
All right.
You should be able to share your screen and get set up now.
All right, here we go.
All right. All right, everyone go ahead and enter your symbols for Anka.
All right, so good morning, everybody. Waiting for your ticker symbols. My name is Anka Metcalf. I am the CEO and founder of TradeOutloud.com, which is a trading education company that is specialized in educating individuals how to day trade, swing trade, and invest in the stock market and the futures market, and in any market for that matter. All right, so I see the first ticks that are coming in. All right, the first one, and I'm glad that the first one is the financial. Here it is. This is, okay, so this is SoFi, and by the way, financials have been, absolutely, I could look at gold, I could look at everything. Okay, let's just start with this one first. Financials have been holding. If you are looking at stocks like Goldman Sachs, Bank of America, they have been pretty resilient and they have been holding on pretty strong lately. And when you have the market backed up by strong financials, it's likely that the bottom is close or it may be in, and it's a matter of time before we get into a rotation pattern. Now, as you know, the market right now is very sensitive to whatever is happening in the Middle East. And it's more of a geopolitical volatility context into the market right now. So there's a lot of fear going on. One thing that I want to draw attention to, and this is not only for SoFi, but it's, for every single stock in the stock market, and especially the futures market right now, we are seeing very low volume into the market. We've seen this type of volume last year before we had that Liberation Day drawdown. And then we saw a lot of volume coming back into the market after that. So if history repeats itself, this may be a clue. Last year, we had our reversal in April, and we may very well have a reversal this year, but yet things are unknown at this point. All right, so we're going to do a top down. Now, as you know, we are going to be ending the quarter next week. We have basically tomorrow and 2 more trading days outside of today. And we are going to be closing the month of March, and also we will be having the end of the quarter, and that's very significant. So when we're getting very close to the quarter end, I like to zoom out, and I love looking at longer time frame charts like the quarterly chart that we have here. And you could see here that there is a tremendous amount of pressure that came in within these 3 months of this year. And I can't believe that this quarter is almost over and we're gearing up for spring here. But as you can see, we had this last quarter of the year, and this was for last year, that pretty much ended the year into a massive indecision phase. We popped up a little bit from the third quarter of the year into the fourth quarter, and we snapped a little bit higher. And this is, again, a lot of indecision that came in. And because we violated the low of the prior quarter, this triggered a massive sell and a massive pullback. Now, as much as I want to be very optimistic for this stock, which I absolutely love from all standpoint of view, but it's not as bullish as it seems, or at least the bottom is not close to being formed, and it's not even close to tapping. If the price action continues, and I believe that there is not going to be a significant change in the pattern that we're going to look at very quickly into the next couple of seconds from the daily standpoint and the weekly standpoint. The quarterly standpoint is very weak, and we are closing a very weak quarter for SoFi. Very, very weak quarter for SoFi. So the quarterly is very weak. The monthly chart, which is going to close on Tuesday, is leaving a big topping tail behind. And this is, by the way, this is the quarter that is coinciding also with the month of November low that we have traced here. And this is actually signaling a lot of selling pressure that may potentially come in. So I'm seeing in this pattern a potential pullback to around $12 to where the 50 SMA is at, this green line right here. I'm also seeing that the volume is pretty constant right now. So we're not getting a lift in volume that would potentially trigger more buyers in, for example. And it's not looking that good. This tail is suggesting more selling our way, and watch where it closes. For example, see where we have the lowest point on Tuesday, because if we get a trigger into Wednesday, Thursday, or any time throughout the month of April below this low right here of $16, we are definitely going to go lower, like serious tackle into the next support zone, which is going to be right here into the let's say $12 to about $11 to $12. And this is formed from this prior high right here. So we're at an inflection point now in here, and we should have had a reaction because of the rising 20 SMA and because of this prior high. But from the technical standpoint, we didn't have anything. And this bar is just showing us further pressure to the downside. This is the low that is hypothetical for now, but it could be lower as we're heading into Wednesday. Again, gauge what Joe, like, if you're looking at the stock, just look and see how it closes on this week. Obviously, if this is going to be the low or if it's going to make further lows throughout the day today or tomorrow. And of course, into Monday and Tuesday. So it's not ready yet for a pop-up. It proved to us that this high right here did not hold. So the $18.50 did not hold. We didn't hold at $17. Now we're into the $16. We have, again, another pivot low right here, which could be another line in the sand. So if it breaks below $16, my thoughts are that the price will continue to $14 and ultimately to about $12 and perhaps even lower. Perhaps even lower than that, but it doesn't look very good on the weekly. It doesn't look like a buy zone, so I'm going to take this out of here. It is a massive power trend to the downside. As you can see, I'm going to squish the chart a little bit here so you can see the breakdown that happened. It has relative weakness in comparison to the market, in comparison to the SPYs, the diamonds, in comparison to the Russell or S&P or what have you. So it's much, much weaker because if you look at a daily structure into the Qs or the SPYs, we don't have this breakdown. So here's just a quick example. This is the Qs, right? This is the SPX. Okay, so it's still holding the base. For example, these are the diamonds right here. So it's holding this massive support zone. This is IWM, which is holding here. So it's holding really well in here. And then again, if we go back to SoFi, we can see that it has relative weakness in comparison to the market ETF. So it has this potential of further continuation for a further continuation lower. So if you're thinking about, for example, like buying a bottom or buying a rotation, this would not be it. First of all, because of the incredible low volume. Look at today's volume. It's incredibly low, and it has been getting lower within these last couple of days. And this is very similar to what the market indices have been doing, Qs, SPYs, diamonds, like the overall, ETFs when we look under the hood for the market health. So basically, this is not something that you would just buy over here. It's a massive downtrend, and it could potentially continue lower based on the monthly and based on the weekly. So it does have a lot of room to continue lower. So I hope this analysis helped. I'm going to move on to the next symbol, which is APEI. All right, so right off the gates, this is totally different, super power trend. In fact, it's a super duper power trend, and this is one of my favorite patterns. I also call this a Gucci pattern, by the way, and because it delivers a lot, so you can buy a lot of Gucci. Okay, but all in all, this is basically a really gorgeous sandwich. This is a bullish sandwich. It's also called a red bar ignored, an RBI right here. It's a very powerful pattern because it sets support. So you had a mega rally and then a very shallow pullback, and then now you already have the trigger from the weekly structure. So anything that trades over $58.70 is very bullish. But I'm going to take you out to the quarterly chart. Look what a difference between SoFi and this stock right here. This is American Public Education. So massive, massive rally, almost a 54% push. And also you have the gorgeous sandwich that happened over here last quarter. So last quarter, you see the tail right here. This is a strong indication of buying because it dried out, because at one point in time, this candle was all red, right? So the pressure was to the downside. So it opened, let me just zoom it in a little bit. It opened at the top right here. It opened at the top, and then it was all red, all red. And right now, it just, I mean, not now, but then by the end of the quarter, and that is at the end of December, the price action zipped back up and closed over here. So gorgeous. So it gave you the indication that buyers were coming in, and buyers were coming in. Okay. And this was the gorgeous trigger up again for this quarter, more than 54%. The monthly is, this is a power bar right here. Look at the beautiful breakout, monthly breakout right here, gorgeous, into the power trend following the 10 EMA, nice fanning out of the major moving averages, which shows traction. And that's what you want to see when you want to enter a trade. And again, the weekly is just absolutely stunning. It has this gorgeous opportunity to get back in action. And I want to see something here. Okay, so this is the all-time high. So now let's take a quick look and see how far this the price action can go. So I'm going to take it to the daily right now. By the way, if you're a very active swing trader or even a day trader, you could have taken advantage of this rotation that happened here. But anyways, absolutely gorgeous. So let's take a quick look and see where the price can run into, because it's going to make new all-time highs. $60.42, 62, 64, and $69. And that's a pretty good risk to reward ratio if you look at it, because this would be, okay, this would be the stop over here. And let's take it to about 64. Let's do 64. Yeah, that would be about, let's see. Oops. Okay. All right, let's see it here. Yeah, that would be about 2 hours into the 64. I'm sorry, into the 68. And then if it further rallies towards the 70s, because it does have the void, then you go into the 2.5 hours. So a very good risk to reward ratio. If you would have gotten this a lot sooner at the first rotation, the risk to reward ratio would have been about 5 hours into around into the 70s. So really, really nice. Okay. A look at gold. Let's take a quick look at GLD, for example. Actually, I posted this on my X feed yesterday. So this is GLD right here. So I just want to say something that I also mentioned in my trading room this morning, and I keep on repeating this. Pay attention to the patterns, but at the same time, this is more of a geopolitical kind of guesswork into the market, where you have to be very cautious about the volatility and about sizing, because you want to make sure that you keep those losses in check and equal. So basically, there is gold is trading right now into the resistance area, and there is a 50-50 chance. This is the line in the sand. It could be bullish above or bearish below. This could, like I said here, this area could be a very strong rejection where the price action can potentially rotate to the downside. So it could go like here. This could be the high, okay? And it could rotate back down, like with candles back to the downside. Again, this is the 200 SMA. If that area is going to hold, we could potentially see rotation back to the upside. But again, this is case number 1, okay? Case number 2 is that we hold this level, okay? And then in which case we are going to hold the low, which is right here. So this is going to have to be your stop. And if you want to take it as a buy, take it above the 419 area. So above this 50-50 line, this is right into the minor. This is a minor support area, but this is actually a minor resistance here. So that's why it's 50-50 chance. So again, position sizing is key here. So if you want to take it long over here, you can, and you can, again, have the stop over here and look for a bounce back into this prior resistance, into the 475, into the 500 level right here, or this would be like the ultimate around the 520. At this point in time, and I love swing trading more than anything else, I do not hold any positions into gold, and we rode gold like bandits. It allowed me to 10x my account last year, all these gold trades. But like I said, this is a 50-50, 50% to the upside, chances of continuation higher, and 50% chances to the downside to continue lower. And this is a very bad scenario because you need to trade with at least 75% or 80% odds in your favor. And this is almost, it's almost like zero, right? Because you don't know which way the price action is going to go. So I really hope this helps. And I'm looking for the next ticker. All right. Next ticker, PLMR. All right, let's take a look at this one. This is as choppy as the market right now. We're going to take it far out to the quarterly. Okay, so quarterly, not so bad. So if you're, paying attention to this, this may be a little bit more interesting because as we're starting a brand new quarter, this is going to be your game plan for this stock. Okay, because if it pops above 138 within the next quarter, this is going to be bullish. However, if we are going to take this low down, the 107, it's going to start pulling back, and probably the pullback is going to be around $83 to $80. That's probably going to where it wants to go. So it's going to be bullish above 138, 107. When we move to the monthly chart, we can see here that we have a whole lot of range bound action, which from the quarterly, we already saw that it happened, right? So we have 1, 2, 3, 4, 5, 6 months, right, of sideways. We are coming, and we actually came in. This is where the red from the quarterly bar came from. But again, this shows sidewaysness. It shows that it's still in the trend. It's still above the 21 SMA. So this is not bad for a potential trade to the upside. So I wouldn't trade it to the downside, but I would trade it a little bit to the upside with a resistance into the 175. And then from the weekly perspective, as long as it's trading between this resistance and this support, I would not touch it. It's sideways. You can see that the price action is coiling around the moving averages. It's shifting directionless, so it doesn't give you any indication whether it wants higher or lower. Okay, so it had a pop-up of volume over here. So that showed that there was an impulse buy. So there may have been some, I wouldn't say a whale, but it may have been some pretty strong buyer that wanted to get into this 115 level to 117 level, 115 to 117 level. So this definitely is reflected into this pop-up of volume right here. But at this point in time, the volume dried out. So I don't see other investors just hopping in and following that bigger buyer over here. You can see that the volume dropped significantly, and this lets me to believe that this was an isolated case of probably one hedge fund or portfolio manager that dabbed into it, so they just initiated a position over here. So they initiated the position here because it was towards the bottom, right? They saw the opportunity to buy it here. They didn't really see it pull back lower, but I'm pretty sure that if the price action is going to come lower, you're going to see like another pop up of volume. And keep in mind that its volume didn't come on earnings, right? So it came outside. So check and see if there is any news on this. Because this could have been it. But from the daily, still bullish above 138 and bearish below 107. All right, so I hope this helps. All right, next ticker. It's funny nobody's asking about the Max 7 today. It's not a Max 7 year, is it? All right, any other ticker symbols? All right, I'm going to, take a quick look at the market right now. Just so you know my take on the market, we have a massive level of support in the Qs. We have a massive level of resistance into the Qs as well. And the market pretty far is very relentless. It's holding the support. It had so many opportunities to break down with the war and everything, but yet it did not. And just remember, we didn't have a war context in November. And here, we were just pulling back again, was actually the first significant pullback of the year. And we held, and we're still holding around this 200 SMA and into this bigger range support right here, which is very relentless. And if you're looking at the SPYs, we have pretty much the same context where we have a lot of support going on here between the 140 and 150 level. And we do have a lot of resistance. Now, again, and I understand it's getting a little frustrated for a lot of us that are swing traders because we don't have a lot of continuity. We don't have a lot of follow through into this market. But I just want to remind you that if you guys were around trading or swing trading the 2015 to 2016 market, we had a year and a half of this type of price action. And by the way, we've only been here since October. So we have October, November, December, January, February, and this is March, almost 6 months of range bound action. Back then we had a year and a half. And we didn't have a war. We didn't have anything else in 2015 and 2016. So just so you know, try, blaming it on something else. But in war conditions, this could have been like the SPYs could have been back to around 420, and they're not. They're still holding the 560. I'm sorry, they're still holding the 650. All right, next stock is COPX. All right, so COPX had a really nice rally. And this is copper. Okay, this is copper. I like trading futures copper or FCX. This COPX is a little thin for my taste, but it has been trending down. It is a little bit weaker than gold and silver at this point, and its trending is finding resistance into the 10 EMA. And at the same time, we have a prior pivot high, which is setting up the tone for support. This is the reason for the bounce. It's technical. It's not in the news. It's just a pop-up, a technical pop-up. And the reason why it's getting rejected or it's having a hard time here is because we have a prior high, prior low, and here it is, the rejection point. So it's having a very hard time right here into the 75 all the way to about $78. It could potentially come down. Again, everything that I'm telling you from the technical standpoint, and anything can happen because of the geopolitical context. It's pay more attention to the geopolitical context and try to corroborate that with the chart pattern. But this is exactly like gold. in a sense, because it will be very sensitive to any kind of news, any kind of data. And again, the problem is the very low volume into the market. So if you have been sitting on the sidelines, kudos to you, because guys, this is a very messy market. So from the technical standpoint, this is a weak candle that we're getting today. So if this was an 100% technical trade, it should have continued back down into 67. And if it breaks 67, it could land into the 200 SMA. As long as the price is above the 200 SMA, funds still have interest into this stock or anything that is above the 200 SMA, whether it is the stock market or the futures market, whether it's whatever it is. It's pretty bullish. It's not literally bullish above, but it may be like a buying opportunity as long as you have a technical pattern and the geopolitical context. All right, so this is it, guys, for me today. I hope you guys are going to have a great rest of the day. Just want to show you a little bit of what I'm doing. And if you want to take advantage of our swings, we're still making money in this market. Whether day trading, which we're killing it, or swing trading, we're almost going for tripling the account, tripling our accounts, and it's only the first quarter of the year. And this is again for swing. This is for swing trading. It is an invitation. I'm going to post it in the room for you guys. It is right here. If you want to take advantage of, this is our swing trading program. And there is a special code for you guys. Use this coupon code START10. Okay. Oops. START10. Okay. And if you use that coupon code, that's going to give you $100 off the price. So that's for the first month. You can find out a lot of details on that page. Don't really have a lot of time left. Here it is. It's Start 100. Sorry about that. It's not Start 10. It's Start 100. And you could get $100 off for the first month only. And that's going to give you it's kind of like kickstart into our program. So you're getting a lot of information in here. This is the program detail. Basically, you're going to swing trade with us towards wealth. So thanks so much, David. Thanks so much, everybody, for being here. And all right, this is it. This is a wrap up.
All right. Thanks, Anka.
Thanks, David.
Thank you for being here. So, yeah, check out Anka's offer there. And next up is Matt Timpain of Schaefer's Research. Matt, are you there?
I am here, David.
Okay. You should be able to share your screen and get set up.
It says send a request, so.
Oh, sorry. Yeah, Anka's split. Okay. Now you should be able to share.
Perfect.
Okay, I see your chart now. So everyone go ahead and enter some symbols for Matt. And are you ready to start now?
I am. I'm just trying to pop out the chat here quick.
Oh, okay.
Where'd it go? Where'd it go? Where'd it go? Why is it not
Yeah, you
pulling?
have to find that Zoom menu. Sometimes it hides. Should be either at the bottom or the top of do you have multiple monitors?
Yeah, I found it. I think it's over here.
Okay.
All right. There we go. Some reason I went way off to the side. I have a wide screen, so sometimes it
Oh, okay. Yeah.
does weird things.
Yeah.
Everyone. There we are.
Hold on. Okay. Are you ready to start?
I am ready to start.
Okay, I'm starting my recording again now.
All right. Thank you, everyone, for joining us today. Messy market still, since the last time we did this. If everyone could just put their tickers in, that would be great. We'll go over some things here. If not, um, do see, okay, perfect. Last message, it looks like. There you are, David. All right, to everyone. All right, perfect. Um, yeah, I mean the Nasdaq, right? I mean it's that's the thing I have up here to begin with, just because it's showing you kind of what it is. My bars kind of show momentum a little bit, right? Like at least in the near term, I've done a script and things like that. And you can kind of see here every time it tries to kind of start turning a little bit. It's kind of been solid red lately, but even on like a early indication, we have one here just this 10 days just rejecting. And the same thing with the S&P 500, right? So if you look at the SPY, same exact thing. I get some these little yellow early signals. It doesn't show up well on the white. Usually works a little bit better on the black side, but for the background. But we get these little shots right up into this 10-day moving average, and we're still in this kind of slow, drawn out. I mean, it feels a lot worse than it is, but this is a very controlled sell-off. Um, so you have to kind of be quicker taking your profits and managing your risk in these environments. And we'll get to some of these right away. So all right. So looks like our first ticker is AX. AX. All right, let's just take a look here. It's been a while since I've traded this. It used to be underneath a different ticker symbol too. Can't remember the name, but yeah, I remember it swapped over to AX. Yeah, I mean, what can we say here? We're bumping up against the 200-day moving average right now, so you're going to want to kind of just be a little bit hesitant. You're at the 1-year volume point of control as well. This is the dotted orange line. Momentum has shifted a bit, but we're seeing a little bit of a rejection here. And then you also have the 6-month moving average rolling overs there as well. I better make sure that is the 6-month. Usually it's the 128 when it's pink. Yep. Or 126 it's supposed to be. That's my bad. Typed it in, but it's close enough, right? So like it's the 6-month moving average. So you're seeing now, okay, we're coming into these bigger levels, like at least from a moving average standpoint, right? Of trend and momentum. And it's, 200 days still rolling higher, but you're seeing that 6 months even starting to roll over there a little bit. Uh, so we'll have to see. I mean, for me, I would look for like if you want to be long this, you're kind of in this pivot point right here. So you can see this low was marked. And you can see here how you kind of just have this resistance. It also was formed by this gap down area. And then, as you can kind of just go over, you can see here again, you have this other level, right? You kind of broke down and then came back up, tested it, and now you're back down lower as well. So I would just kind of stay out of this unless you break this range high. That would be my kind of situation here. I'd look for a break above like 87 here, 86 and a half. That way I know I can at least trade it back up to about $92 right now. You have this year-to-date anchored VWAP that's coming down as well with the 50-day. So that would be the range if you're trying to go long. If you're trying to go short, if you're looking at short-term short right now, you're kind of in the optimal spot to try it out, right? Not a bad spot, but you do have this 1-year moving average, as you can see, is held multiple times in the past. It's something I like to look at because not everybody's got the 200-day up. Not everybody's got the 252-day up. So that's something too, like you would have to be worried about. You only have like $3 to that. So it's kind of tight for the short. So if you really want to, I mean, you can look at it like that and say, hey, let's take the short down here and then see where it goes. Run a tighter stop on it. But otherwise, I would look for a breakout above 87. I'm going to guess you want to be long something like this. That's kind of how I would play this from the long side here. Otherwise, you have other support areas. Even if you did break this 252, this is the old 2024 anchored VWAP down here. That would be a level that would be of some interest here. It's around 78. You can see these prior lows here around 76. So if you got some kind of capitulation move off of, a headline, especially risk here, that might be something that worth taking. We've seen that just with gold the other day, and we could see that with a lot of stocks, is where we're going to get this flush out down to a big level, and then it's going to rally back hard. So that's kind of where I would be looking for opportunities, is on those days where it's the most scary. A lot of the times those create the best opportunity. All right, next one, RCAT. That is actually a name I have been watching. It's been trying to break out recently, and it just hasn't been able to get going. You would think it would be pretty good, right? Because it's in the automation side. I think it has the drone industry. Um, so I mean, it's something you would think would be doing better than it is, especially during this conflict or war, whatever you want to call it. We kind of thought about that with ONDS as well, and that isn't doing as well. Um, Also kind of what was the other name? Fly, FLY. That's a newer issue, but that one had a big day yesterday. But we're not seeing as big a move out of the drone stocks now that the conflict is live and ongoing. A lot of those moves in the drone stocks kind of happened prior, in 2025. So for me, you have a big base here. You really need to watch for this to clear out. I actually, like I said, was looking at it. If you want to be, I would say, aggressive, look for this closing high, right? So back in January, if you get a move above that, you're close to the bell and you're above, that 1736. I would like it to be at like 1750, right? You want it to be a little bit decisive. I think that's worth a shot on the breakout then. We are seeing some breakouts work, but it's mostly in the oil and energy industry right now. Um, so that's kind of how I would play it if you want to get long. I don't think you're probably trying to get short. If you are trying to get short, that's also the level to look against for short-term shorts, right? Like, hey, this conflict's ongoing. We don't really have a lot of momentum in the market behind us. You can take shots up there. You just got to keep your stop tight on it. But that's kind of how I would play this. If you're looking for anything to the downside, I mean, I would just look back towards those prior lows. You got the 2024 anchored VWAP there. You got the 6-month moving average there. You can kind of see the 6-month here did act as a top. I don't know if it will again. It's not, going back here, I'm not seeing it as the most historical moving average for this. You're seeing some little things, but I mean, you can find that with any moving average, right? Moving average is really about following kind of trends a little bit more and looking for some spots that might have some significance from the past. Um, so that's kind of how I would look at it is if you get an opportunity down at 11, I think that's a good shot. You have the 200-day moving average right underneath that as well. That's something more people will follow. So there'll be a little bit more of that self-fulfilling, uh, you know, I guess you would say prophecy or something like that, but self-fulfilling indicator that where people are going to look at opportunities there. So that would be the two ways I would look at this. So either you need to see it much higher from here or lower for optimal entries. You're kind of stuck in no man's land right now, is how I look at it. And it's a wide range. So, I mean, this would be something, like if I'm stuck in no man's land like this, I like it's a volatile name. I'm going to be trading it more intraday than I am going to be looking at it from a swing perspective. All right, silver. Yeah, I mean, silver, right? Great 2025. We had the blow off kind of top now, and we're coming down to some levels that are starting to get a little bit interesting. You can see all the way down here, it did find that 6-month moving average. That's where we kind of had this washout kind of bottoming action, right? Like you can see the stalling. And now we got this little pop, right? But now we're back down today. So it's not anything that's triggered yet for me to go long on this. I was in a gold, which looked a little bit better on the rebound. That got stopped. So, I was in a gold position. It was a minor credits, gold minor in a credit spread. But so, that's going to happen in these kind of markets. You're just not going to get away from that. But you're not in a bad spot, but you are running right into those previous lows right now from yesterday's candle. And now you can see you got an immediate rejection. So I would still lay off of this. If I'm looking for something, in the very near term to take a shot, you could take it down around 60. If you get down there $2 less, get a little bit of a move down there to that 2024 anchored VWAP. It's worth a shot there. I would like to honestly see this move down to about 52 and a half. So around this 200-day and around these previous highs. So, I mean, you kind of got a little bit of a range there between 50 and 52 and a half. I think that's a level that would be of interest to me. Just because you kind of got these breakout levels, right? And then you got the 200-day moving average. That's the only reason why I kind of look at it like that. I think it's just that would be where I think a lot of people just say, okay, I can't take the pain anymore that held this all the way down. So that's kind of how I would look at that is just say, hey, that's the optimal entry point. If we continue to have this volatility in the markets due to the Iran conflict, there's easily a shot that we can get there, within a week. I mean, it could be a day, literally, depending on what happens. But, within a week or two, that's not really out of the possibility here. If you're looking for it from like a higher perspective, I would say let's clear this 10-day moving average right now. And then let's clear these prior lows, right? So like retake of that level. So you got to be prepared when you're looking at a trade kind of in two ways, right? Where's my dip opportunity going forward, or where's my trigger that, hey, momentum is shifted? And that's kind of how I would look at this, right? The momentum shift would be retaking those prior lows and breaking above the 10-day moving average. But then you still have all kinds of resistance. So you just got to be aware of that, right? Like you're going to have people that are going to try to trade off that 20-day. You're going to be going to try to trade off that 50-day moving average. Again, not as big on moving averages as some people. I look at it from a trend perspective, but the trend is starting to point lower here, right? You got the short terms really have momentum lower, and then you even have the 50-day now rolling over. So medium term momentum is starting to shift. Does it hold? We don't know. If you break above, obviously, you're going to have some major resistance here in the 80s. That would be a great trade, even if you took it from, breaking above and holding, reclaiming that prior low there back in February and January. You would have a really nice trade off of that. All right. Put in more ideas. Last time we talked about this one was AXTI. It was a name that I shared that I was trading. And I got in on that break earlier, but we shared it somewhere around here. I can't remember when it was. It was early March, the last AYT. And we can see names like this, they continue to go. They have momentum. There isn't a lot of places for people to hide out, and they're going to find names that are moving and they're going to kind of pile in. Also, there is other aspects on this one that was, I think it's the only American publicly traded substrate as well for the AI movement. There you go. There's an optical name, AAOI. That is a great name. I traded a lot of credit spreads on this back in 2025, to be honest with you, and even some long premium options on this a few times, and that was during the chop. But yeah, I mean, this thing has absolutely blasted higher, right? It's just been a monster move. It's very volatile right now. So what you're looking at here is what, a lot of the times you like to call like it kind of happened the day after. So you're right, you got the earnings candle move, but then you got this, move higher here. So it's kind of like a power earnings gap play, right? A peg pattern, as some would call this. So when you're looking at like a peg pattern, we're seeing here a lot of the times it's decided based off of the ER candle, right? So you would play against like the ER lows here, the earnings lows. This one, you got an extra day of follow through. So you didn't really get that consolidation. So as soon as you kind of start the consolidation, now you're seeing, okay, well, we got the follow through back down here. And now that's kind of gauging the lows, right? Like you're seeing this wick now acting as the support zone. So that's where an optimal short-term trade would be, right? And then for me, a lot of the times I'm going to look for that last big candle as the entry. You can see it didn't really work really well here recently, but even here, you got the close above this candle. You would have got a nice solid follow through for 2 days on like a nice aggressive trade, right? You just need to be able to manage these positions with a lot of respect to the risk that they're going to give you, right? Like this is, one of those stocks that graduated, right? AXTI was another one. It graduated from being this smaller cap name to now being a player in an industry that is probably going forward. It's going to be a decent name, right? Like, is it the number one name? Forever in the optical area, who knows, right? But right now it's getting a lot of exposure here. So that's kind of how I look at it. So you didn't get much here. You gave back. Again, I would look for kind of a re-break, right? of above 110. My guess is you're probably seeing a lot of call resistance at this 110 level, 115 level. I would look at open interest there and kind of see if that's what's happening. I don't have mine up at the moment, but I can always take a look at that as well. So that's how I would look at this is, all right, if you want, you could try to take shots here against these lows around 86 on any kind of volatile move. Otherwise, really kind of look back here and anything above 110, you can kind of take a shot. Just be mindful of it and keep a tight stop. You're going to want to try to hold this thing, but some of these ones are the hardest ones to hold, right? And this could chop, it could continue like this for a while, especially when we don't have momentum in the market. But, it's held up really well. That's one of the first things you want to look for when we're in a downtrend in the broader market is what's holding up well and what's actually working. Now, if things get worse, things like AXTI and AAOI, and you need to be aware of this, they're going to become cash registers at some point. People are going to be looking for liquidity, looking at taking profits off the table and adding to things that they're viewing as a value, right? So there is going to be a point in time if things get worse, they come for them all, and it doesn't matter how strong the stock is. All right, CIFR. We have 13 minutes left. All right, so this has been a go-to premium seller for me. It's been very choppy. I do like the company, but it just hasn't signaled a long premium strategy for me for a long, long time. You can see here, everything has just been in this huge consolidation. I'm not the biggest fan of like trend lines, but you can see, um, you know, it's just getting rejected every time it gets up near there, right? So you're kind of in, this, and I don't even like, it's descending or whatever it is. Usually they lean bearish. They don't need to, right? Like that's the one thing with all patterns, and this is, I mean, I see a lot of flags fail too, right? Bull flags, everybody talks about them, and you see a lot of them fail, especially the most horizontal bull flags. You typically get this washout move. We just saw it in NXT. It washes everybody out because everybody goes, it's a bull flag. We're going to trade this. And then they wash you out, and then they take it back up after they stop everybody out of it. So even though this is, slightly, I would say, lean bearish pattern. It doesn't necessarily need to resolve that way. But for me, if I want to kind of get long on this, it's tough. Because, I'm going to want to move, at least in the very short term, above 17. But where's your next resistance level? 19. So you got to be really tight with it if you're, trying to get long. It's fine if you're trading stock and taking some shares off here and managing risk. But if you're trading options, a move from 17 to 19 on a name like CIFR, unless it's like very short dated, isn't going to move the needle much, right? Like you're not going to get that 100%, 200% return that you need when you're trading options to offset those losses. So for me, it's been a premium seller. I've looked at it as, hey, this level down here, I've been selling some options. I started back here back in December, and then I've done a couple there. And it's worked out well, right? A scary moment here, got to close. My rule is if it can't retake it by the next morning, close it out. Luckily for me, it popped back up, and we were able to stay in that and let it go to expiration. But on the downside, yeah, if you take out this lower level 13, you got the 200-day moving average there. But you have the 252 and the year-to-date anchored VWAP from 2024. So it's not the end of the world, and that's all around 1150. I do think there's a solid floor around 1150, $10 in this name as long as we're not in a prolonged bear market. So even if you got a washout, that would be an area that you could throw in some stink bids, I guess, is what I like to call them, and say, hey, if for some reason, $11 gets hit, I'll take some shares and we'll see if we can, keep this, or if it can rally from that level, and then just put like a stop on it, right? Like you can do something to protect yourself. However you want to do it, just, really kind of rule of thumb is always you're looking for, whatever, 20 to 30% upside if you're looking at a 10% stop loss. I always look at a ratio of 3 to 1. So That's kind of how I would look at this. It's tough right now to just say, hey, let's get long and wait for it. We don't know what's going on geopolitically, and uh, it's just, I mean, it's not going to hurt you necessarily right now because it is a very choppy zone, but at some point it could. So for me, I would just stay away from it until you kind of see a definitive move, or you get a spot that you can take a shot at. On the lower side or on the upper side. And for me, the upper side is much tougher because you just don't have a lot of upside. And that's short term, I should say too. Longer term, I think Cypher is going to be a decent company. Um, if we get a bull market again, that's a name I would definitely be looking at. All right, CF. So fertilizer stocks, chemical stocks, everything in this space is higher because the Strait of Hormuz is closed. Right, that the majority of the world gets a lot of that, their chemicals or fertilizers from this area. Then the oil production that comes out of that, oil goes into everything. That's what people don't understand is oil is literally in all of our products. We hate it, um, yet we can't really live without it, right? So we're seeing this bid up, uh, Lionel Basil, LYB. Dow, any of the chemical companies, I believe CC was rallying to, um, you know, it's so far for the foreseeable future, it's there. If we got a de-escalation, a rapid one, this is going to give back a lot. So you just got to be careful with it. I'm going to pull this one out a little bit more just because I know where these kind of stocks have been uh, lately. And you're kind of seeing, right, when you want to look at like some bigger levels, you broke out of that 2022 high, right? That 2022 level here. And even if let's go back to the monthly and just see. Okay, that's what I thought on this one. But um, so you're out to fresh blue skies here, essentially from like a long-term swing perspective. So if you're in this, you're sitting pretty good. You can literally use these prior highs as a level, kind of like, okay, maybe I just want to take some chips off the table. But once you got this breakout, you can kind of see from this level, you knew it was going to push up to those 2022s. And that's kind of how you got to look at these. A lot of times, and I haven't done it on a lot of these, is a good rule of thumb is zoom out, because what looks extended on the daily at the time, really wasn't on the weekly, right? So as soon as you recaptured this 100 level, you can see came back down. As I mean, if any of you have read Reminiscence of a stock operator, right, or an operator, Jesse Livermore, followed any of his stuff from back in the day, legendary trader, boom and bust. Also one of the saddest stories, right? Because he couldn't control his own risk, but it's the rule right there, right? You break around the round number and you kind of, see if it tests it, and then you at least have 10 points in you. And in this case, you had a lot more. Trend was your friend. Um, Hard to get in here. That I won't lie. So you may have seen the stock recently. You may like it a lot. Much easier to kind of get in around here, run your risk level against that round 100, right? So you got that big gap up. It's always kind of scary, and you're like, well, you got to find a level, and I mean, it gave you the level. So it wasn't that bad, right? I mean, that's 4 or 5%. Even if you look at it from like one of these days, right? Like you could have got in. Here it's much tougher. You're going to want to see some consolidation. Either retake out the highs right now, or you're going to want to look for some kind of level. It does look like there might be something forming around this 120 level. You'll have that 20-day coming up there, but these are pretty stretched. So if you're in it, good for you. If you're trying to get in it, you're going to have to try to find a spot. Again, 120 might be a level somewhere around there. Otherwise, look for a fresh break and trade it on a momentum basis and then just run tight stops. All right. Anything else? Let's see what we're seeing in the markets right now. Not a whole lot. We're seeing uh, Dell options traders are still on Dell right now. Again, fresh breakout, prior high. They're staying on these names that are fresh. Um, So even this was aggressive. You know, you could have tried to trade this very short term. I do see another ticker in there. GLW. So I'll move off Dell. It's just a filler there. This is about you guys. All right. So pulling back, and this is an old kind of, you know, range area. Not a bad spot if you want to try to risk against it. I don't like it because momentum's already slowing. So I don't think I would take it. But if I'm going to take a shot here, maybe intraday, maybe we get like a catalyst of a move, it's not a bad spot, right? So I mean, against 137, I'm gonna guarantee if I pull this out to like the 65 day or 65 minute, yeah, you're gonna start seeing some support here. So not the worst level to kind of try. Um, but again, this is more of a, I'm betting that this is going to be an intraday reversal, maybe a couple day reversal, nothing more than that. From a long-term perspective, your opportunity really, if you're looking for a nice pullback, you can kind of see here, you got that stalling out on that capitulation low, and then you got this retest, right? So that's where you kind of want to see the accumulation, and then you're able to say, hey, I've defined my risk now against these lows. And then if we break above, we kind of get these opportunities here to sell some shares. And that's what you're seeing people do is they took that opportunity to sell some shares right now, just because the market is so volatile. You know, you get some profits, they're going to book some a lot quicker. So my guess is you might get another chance down here to see if they want to continue to accumulate. And now you have this 50-day finally catching up as well. So that's kind of how I look at GLW. It's a name we've traded a lot in the last year. Um, you know, I mean, imagine just a little bit ago, this thing was a, you know, just a glass company. All right, 2 minutes. If somebody has one more ticker, that'd be great. Take a glass of water. If not, let's just see. Everyone's favorite, Bloom Energy, right? It's a name. You know, that does kind of look toppy, but it is constantly holding these prior highs, right? So the November highs. But it does have this topping formation. So if we do break down these lows, I expect it to get violent. Probably go back to the round 100. Apple, we'll go there quick. Thank you for throwing that in there. Oh, got a few in there. All right. Apple, not a bad spot to take a trade against the lows here. 247. Again, watch your levels higher here. You're going to come into some moving averages that could end up being, uh, you know, resistance, but otherwise, you know, pretty clear trade back up to 277 if you can take those out. Break down those lows, then you have a shorting opportunity, likely down to about well, I don't know, probably around that 252 day, right? Because you're going to take out that 200 day. Good short opportunity, you know, and you can kind of see how it rolls. Amazon, great play, a little bit of an Anthropic play as well. You can kind of get off of it. Not as good as SKM, but really needs to retake these highs or these prior lows, in my opinion here. You also have a lot of kind of resistance from moving averages, anchored VWAPs here. So you are kind of in a sticky position below this 218, 220 level. ARTL, and we have just a second. I don't know what ARTL is, but it is a bioscience or it's not a stock I typically trade, right? These are really technicals are really hard to use on these. You're really looking for a huge catalyst, and from the looks of it, it must have had some bad data release here on this biotech. So that's, you know, you're really going to have to look at FDA schedules, things like that. Technicals work a little bit, but it's more catalyst driven on these type of names. I'm gonna guess our next person is showing up here, so I'd just like to thank everyone for coming out. Feel free to follow us on X. Again, my name is Matthew with Schaefer's Investment Research. Reach out to us anytime, and you know, we have a bunch of free content you can come check out on our website as well.
All right. Thanks, Matt.
All right, have a good one, David.
Yeah, thanks for being here. So Matt Tim Payne of Schaefer'sResearch.com. So check out their site. And next up is Gary Dean.
Hey Dave, how you doing? Can you hear me?
Yeah, sounds good.
Awesome. All right, my name is Gary Dean. I'm with Sentiment Time.
Oh, sorry. You should be able to share your screen. And
I'm sorry. Hang on one second. I haven't done one of these in a while. Okay. We want to do IWM. Okay. You all good?
It's loading, and yeah, it looks good.
Okay, awesome. So my name is Gary Dean. I'm with Sentiment Timing, and we actually just developed some software, the Institutional Pivot Matrix, and it really measures off of where institutions are going to be waiting for, what zones they're going to be waiting in. But then we have liquidity that also is really the driver of this. So what my charts are showing is when IWM was dropping here, these green balls, it means institutions were buying this dip. And typically when you run into a accumulation or a distribution zone. This is our accumulation, and you can see institutional volumes moving up, and we found a low, and that's where IWM ran from 249.25 to 250.63. Now this is a short-term chart, so it's you can go. We can put these on any time frame, and it kind of you're able to build a framework. So when IWM got this big jump here, we can see institutions were selling this, and from there, that's where it dropped straight down to the 249. But this is the software. It works. It's unbelievable how it does show you before these turns happen what institutions are doing. And a trade that we did today, I don't know if you're on TradingView, but I post a lot there with charts. And in the morning, I'd put out an information saying that I was going to be going long the ES, and the reason why was we saw our institutions were buying this dip right here, so we got long. I put it into the TradingView saying that it was we're going long, and we're looking for a target at the 66.20 or 66.30, and we actually came to 66.22. So it was a great trade. We made like 35 points on it. But it's and you can see once we got up here, it's given us a liquidity sell signal. So these signals come on when you see when price is moving up and institutions are selling. And the way we judge it is how many trades are going off at the bid and the ask, and that's what this indicator does. So it's actually showing you could have price moving up, but right here you're seeing that more sells are going at the bid than they are the ask. And even though price continues higher, this is the hidden really gem right here, saying that it's not going to last that long. And you could see each time we got one of these signals, we got a decent pop on it. And same with IWM. We had when it was coming down here, you can see institutions buying. Like this is on Friday, and almost as if they knew that we had some type of news coming out on Monday. And from there, you saw IWM go from 240 all the way up to 251. And each case here, so you can see they're selling. Whenever it's going up, they're scaling out of their positions. And if you don't see any sell signals, then obviously we have a lot more room going up. But we got one today, was it? I think this is the bounce today that we got. And we got a sell signal, and it's been kind of battling from there. So with the moves that work the best are when you see this is our buy sell pressure indicator. So this is going to move before our liquidities, the liquidity divergence. So here you can see we have a lot of buy pressure coming. We have a divergence, and that's when we had the big pop up. And it really, it worked out really, really well with these trades on it. So hang on one second. I'm just going to move this over so I can see. But is there anybody, do you guys want me to pull up any tickers for you to see what the matrix is telling us? All right, until I don't see any right now, but what I'll do is I'm just gonna keep going through some of the charts, and then if you guys have any tickers that you want me to pull up, I'll be sure to pull it up. So let's take a look at the spiders here, and again, we had right here we saw that we had liquidity that was selling right here. So this pop up, we saw institutions that were selling. We saw saw a liquidity divergence, and from there we saw the spiders go from 654 down to 650. So these are the really nice moves on that. So okay, let me put in some of these charts here. So let's see, we want DBD. Stocks. Okay. Alrighty, so I'm going to pull it up on a longer, well, let's just do short term right now, just because it's here. So you can see right now we have a dip in DBT coming, and we see institutions are buying. So most likely it's going to get some kind of balance. Well, actually, I think it is. These candles are really small here. But so what we want to do is first thing we want to do is find out where is support. And the way we do that is we're going to measure our high to the low. God, there's a lot of things open here. So I'm going to give you where the support is. So let's just say we're going to go from this gap up here. And I just have to measure how much time we have here, and that is 263 bars. So what we want to do is now find out where actual support is. Man, there's a lot of these things open. Hang on one second. All right, so we got 264. And this is going to give us our support zone for DBD. So enter. I'm sorry. All right, I'm sorry, I'm trying to get this, there's a lot of these charts. So this is the actual support zone. If we continue down, where I'd be looking to buy DBD would be 75.22. This is our primary accumulation, down to 74.08. And then this is our GAN lines. So this is our secondary, we call it. So if that gives way, what happens is you're going to start looking down at these levels, and really what you want to find out is what are institutions doing. And so right now, when you had a big institutional spike right here, and you can see right now they're still in a buy, and this has been dropping. So there's support right in this level right here, 77.38. If that doesn't hold, then most likely you're going to come down. You're going to be able to buy it at the 75.16 or the 74. 74 in that area, and if it gets bare ugly, then we'll be looking somewhere in the 72. So that's that one. All right, hang on one second. So many boxes open here. All right, there we go. So let's do this. What do we want? ENVA. All right, so short-term chart. Let's take a look. Are you looking more on the long term, or are you looking for a type of trade? Because that will help me out with which type of chart to put up. So I'm gonna. Oh man, I got to figure out where to put this thing and not block my screen. Okay, so let's go. We'll look at say a 30-minute chart on it, and so if you can see, it ran right into, this is our institutional distribution zone. And notice when we came up here, this is where liquidity started dropping. So this is right here was the sell signal right on the exact top. We came down and popped back up again, and now you see there's buying going on right here. So that's what the institutions right now are actually buying this drop right here. And I would keep an eye right on that 132.74, but you can see there's a lot of room for that to pop up. So I'd be more looking on the long side, but I would be looking at probably scaling in anywhere from the 133.75 down to the 132. But the thing is, these are our targets now. So it ran into our institutional, our primary distribution. So what happens is these are our downside targets. So if this support doesn't hold, what our software is saying is that the next target's going to be 130.77 and then 127.84, and bare ugly we're going down to the 124. So let's do this. I'm going to actually show you where support is and see if it matches up with that. So 1 hour, and what we want to do is measure to find out how. Okay, so this has got a big one. Okay, so let's do this. Measure how many bars we got. That one's not going to work. So I got to switch the time because this only goes up to a certain, let's do 2 hours. All right, so I'll clean this up in a second. So this is a good anchor right here. So you can see it was a pretty good low. So we have 450. So, man, here we go again. Okay, so we want to go to 450. And this is going to give you your support. There we go. So we're right in the support zone right there, and on top of that, we have institutions that it's coming down a little bit. It has a little bit of room, but you can see this is where the primary accumulation zone would be right here. If it goes through it, then we're looking down at the 119. You can see liquidity's been kind of moving down, but we're starting to get some buy signals right here. So it may be a decent spot to start building a position if you're looking at it. And then if it pulls back more, you just look to enter it into our secondary. So let me, what other one do we have? PLSV. PLSV. Alrighty, so let's check this out now. So we're on that's a 2-hour chart. And you can see that as this was heading down here, look what the institutions were doing. They were buying this entire dip. You got buy signals. Basically, you layered in at the, hang on one second. We layered in at, you'd be layering in right at the, first one would have been right at the 42 and then down right at the low right here at 41. So it's had a, you know, it was following the institutional money on it. Now you see it coming down. So most likely you're going to be able to get it at a better price. And what we'll do is I'll show you where the support will be on it. So we're going into a very short-term chart, and now, yeah, so this is the short-term support on it right here. So you have the 43.84 to the 43.24, and then we have 42, and that's going from this anchor to this. So it's giving you a pretty good idea of where you'd be looking to possibly buy. And let's see. So you can see they're gobbling it up right here with the institutions. You saw a lot of buying. And then once it popped up, we did see a little bit of selling, but there was not a lot of price action when it was going down. So it's a little bit of a bullish sign on that part, meaning that, you know, we didn't see price go down hard with when we had this liquidity going down. So it looks pretty good overall with the PSLV, but I'd kind of wait and see if it can get into our because you got a gap right here as well, and that's almost in there. So I'd probably be more likely to look to buy it anywhere between that 43.82 down to the 43.24. I think that would be a pretty good buy right there. Anybody else? Let's see if I missed any. Amity, you want me to pull anything up for you? All right, well, let's go this. Let's see what's going on with the markets right now. Oh, Apple. Okay. Okay. Apple. All right, so this is a short-term chart. So let's do this. Let's see where the short-term support is for it. So what we're going to do is we're going to use this anchor right here. So if you're trading it, let's just say, because this is a very, very short term, 33, we're going to our matrix here. All right. So 33. So where I'd be looking to buy Apple if it pulls back, it's going to be right in this area here. This is going to be your support. You can see right here, though, if you notice, people have been selling, the institutions have been selling this the entire way up. So I think you're going to have a pretty good chance of it coming back down and testing the right around that 254 and then 253.16. And then if it gets all the way down, we're looking at the 252 where was that? 252. So that's your support. Now let's go and see if it continues higher, what the resistance will be. So let's do this. Go from our anchor right here, and we're going to measure it. So we have 85 bars. Switch this up to, sorry about that. 85. Okay. All right, let me hang on one second, straighten this out here. Okay, so this is going to be our resistance right here. It's going to be at the 261, right around 261, up to the 264.89. So if it gets up there, then this is going to be, especially if we have institutions that are going to be selling. I don't know how to fix this, though. I'm going to do this. I'm going to take the suite off real quick. Let me just do this. Sweet. Okay, that'll help us out now. All right, so what we're looking at, we have institutions, it's getting pretty choppy up there. We're getting some sell signals. So if it got up here, if we see Apple get up into the anywhere from that 261 to 264, I think it would actually be a pretty good shorting opportunity. And what you're going to notice, though, it may not go down that far, because if you notice, we could be making this a head and shoulders pattern. So a natural resistance is going to be 260, 270. And if we pulled back, I'd be looking, this is a liquidity sweep right here. So this is support right here. So if we went up and it came down, you can almost see this is the left shoulder, the head. And then if we came down and held this area, that would be the right shoulder. And we'd really be looking for a move, 45, probably heading all the way up to the 275 area, up in this area. So if this forms here, because it's at the bottom of the chart too, so it's a pretty good formation right there. And let me pull it up. Alrighty. Whoop, did I put that in wrong? Oh, a net, I'm sorry. Alrighty. All right, so let's do this. Short term. It looks like we're getting some buy pressure here. You can see we got a little bit coming up. This is a 2-hour chart. So yeah, it's got some room on it. This one's a tough one on it. Put it this way, we're at the secondary right here. So if it doesn't hold, what we want to do is figure out where is the next support. So let's just go from our anchor, and we're gonna go 333. Then we go 3. All right, so here we go. Why didn't that change? Oh, maybe that is it. I'm not sure. Let me try it on a different level here. Okay, so let's go to our anchors again, and we'll figure this out. That might be no, because it's changing on it. Okay, so that's not gonna work. I think it's too many bars for this one. Let me take a look. All right, so we got 583. I don't think this is gonna work because of the number of bars. Yeah, it didn't move. Oh, it did. Okay, so that's our support right there. Let me try to get this off. Okay, so this is the actual support from here, because that's our anchor. So you can see we have, they're starting to buy right here. They've been coming down. This is when and that actually started getting into some trouble right here. You can see when institutions started selling it, that's when it dropped down. Now it kind of looks like they're interested in buying here. I'm seeing more institutional buys than I am sells. These are the secondaries right here. But overall, it's not. I mean, they're definitely interested. And I think if you can get it down at the 123, it's probably going to be a pretty good buy for you. And then if it pops up, right now we're just really consolidating with this. If you notice, we're playing ping pong from anywhere from this 124.73. It's that descending triangle that's forming. Yeah, it's okay. If it breaks out of this, then you're going to see it head back up to the highs, if not higher, which is going to be somewhere in that 151. So you could use this as your breakout line. If you're trying to pick a bottom, I'd be looking at the first line, because we're already through the primary. So I'd be looking, the GAN line is 124.77, and then we have 123.58. So those would be the areas that I'd be looking to possibly buy, would be right in that area over there. I'm just take this down here. Okay. All right. So we have that. So let's. Anybody else want me to pull one up? So I can do this for resistance on it. I'm going to go to a shorter term chart. See what we can pull up. Find out what a trade is for this. All right. So let's see. Yeah, this is a support area. So we're at the bottom of it right now. Let's see what institutions are doing. So they were selling up here. You can see right here that even though we had this going up, we had a divergence, and that's when we saw a net actually start tanking on it. But well, let's see, do we have any? We got some bullish divergences right now, so I would be interested in it right here. I'm looking on the long side, but a lot of it has to do with what the overall markets are doing right now, because it's nothing's really going to run its own course here with the panic that's in the market right now. But overall, just looking at this, you can see that there's a nice divergence with institution liquidity, and we're at that support. But I'd wait for a buy signal to pop up, and then from there you start looking at where support is. So I don't think it's that bad. All right, CVEO. All right, this doesn't look like it gets a whole lot of volume on it. Well, looking at this, I mean, we're getting some buy. You saw a lot of selling right when we had this big pop up from 27 to 28.20. There's a lot of institutional selling. We had a divergence, but it's been holding up. It's just unfortunately each time it's getting up, we're getting these sell signals. You can see right here, which is we had this pop up and it's come down. But I would let me see if it goes up. Let's find out where resistance is first. So if it's going to pop up, I have a feeling it's going to be pretty close to that. Oh, hang on one second. Okay. So let's see. We got here 189 bars. So let's check that out. Oh, that's the liquidity. Bear with me. All right, 189. So resistance, yeah, it's popping. We're in the resistance zone right here. Again, it's kind of crazy where whenever we get into these zones, you'll see liquidity actually start to drop, and it gives you a really, really good heads up as far as what to do. And these are just for like short-term trades. But if you went, you can go and you could use these on, like I said, really any time frame you want. So if you're a swing trader, you may want to go to a 2-hour chart, and you wait for your signals on there. As you can see, this actually is in the support zone there. We had some buying in there, but now you see liquidity dropping. So this is kind of a confusing one because well, not really, because it's rising, and you see liquidity dropping. So to me, that resistance that was there, I think it's going to hold, and from there, I'd probably be kind of waiting to see if it comes down into the 25.62. But right now, the concern that I would have if I owned it was that we have, at least like a swing trade wise, would be we have a divergence as this high was being made with liquidity, and as we got a buy signal right at the exact low on it. You can see where my cursor is. So that was the exact low that this came. So it popped up, but you can see our buy sell pressure indicator. So there's a lot more sales going off at the bid than there are the ask, and that's where price can be deceiving, where you can see it going up, but you see institutions are selling at the bid. So it gives you a pretty good heads up as far as, do you want to continue to try to ride this higher? Because I'd be a little cautious on this one, because it's a good chance that this was just some type of A, B, C, and now we made a B, and we're going to come back down. But I would, I'd keep an eye on the liquidity part. That's where you can get in trouble if you see the institutions that are selling. DocuSign. Let's see. Okay, so it's ran right into our primary distribution. We have institutions were selling it. You can see the sell signal this one was a kind of a wild one, because it had we had a sell and a buy pretty quick. But right here, this is a 2-hour chart. I think it's not, look at liquidity's moving up right now. So I think it has a really good shot of if liquidity continues higher, I think it has a really good shot getting back up to the 55.04, and that's actually going to close this gap as well. So that's pretty much where I'd be looking. If they can take out this high, look for it to come up somewhere into the 55.04. So I'm getting my cue here that the other person is ready to come on. I just wanted to give you just a quick heads up. We're actually running a special with our with the institutional pivot matrix. It's you own the license when you buy it, but we're just doing a $50 trial. So if you guys want to see this liquidity on your charts, you can go to sentiment timing. Hang on one second. .com/50-trial-offer, and I'll put the link right in here too, so you guys have it. So I'm just gonna, I know I have to leave. All right. So that's the link if anybody wants to jump on there. Thanks for listening, and David, thanks for having me on.
We do have a few more minutes left if
Oh,
you
okay.
look at
I thought
any.
I just saw the warning sign there. I thought somebody had to go.
Oh, yeah, I was
Okay.
just saying
All right.
you had
Yeah,
4
yeah, no
minutes
problem.
left.
Just give me
So,
a shout out when you want, when you need it. Does anybody have any other tickers? We got a few more
about
minutes.
Palantir, that's one of my favorites.
Which one?
Palantir, PLTR.
PLTR. That's been on a tear lately. I remember when I was on the phone with you the other day, we were looking at it. All right, so let's do this. You want to find out where resistance or support is?
Either, whatever you want to
Okay,
talk
so
about.
let's do this. We're gonna, because it all depends on the time frame. That's why I was asking. We can go. Let's go a 2 hour. We'll figure out where. So this is our support. I think I pulled this up here. So from our pivot, from our anchors, we have our anchor here and our anchor here. This is a support. So if it comes in at the 144 or down to the 140, that's our primary. You can see we have institutions that are actually buying right now. So we have a divergence coming as price is going down, liquidity is moving up. We're getting into where it's going to be where liquidity is washed out, and it really has only one thing to do and pop up. So I think if you can get it, if you're looking to buy it, new positions, I think it would be a gift down at 145, 144.23 in this area. And especially if liquidity keeps going, and most likely you're going to see it come and close this gap at the 154.90. So it's a good 5-6 point move right there on it. So it looks like it could work out pretty well. And if the market gets ugly, then look to buy it in this zone right here, the 144.36 down to the 140, and then we have the secondary. So PSLV, let me pull that up. PSLV. All right, so you can see it got rejected right in our secondary there. These are our targets on it. It's just based off of the software. We're looking at 2052 and then 1896. But let's see, we got a sell signal on this gap up. You can see that right here. So this is the cool part about the liquidity sweep on it is you can see as this gap down here, this is a live buy signal that came out. It didn't wait until the candle went up. These come out at the same time, and it picked the exact low on it. And then from here, you had it making a higher high. We had a divergence, and the sell signal was on this gap up, and it's come down. So it really does give you a really good idea. And if you just you'll get a couple of them when they're wrong. Like this is buy signal here, obviously went the wrong way, but the sell signal, we're in here. It's giving you like a really, really good entries on these, and whether you're holding it for like a long term or you're going to looking for a swing trade, they give you really, really good entries on these. So, but all right, well I think that's my time right here. I appreciate you guys taking the time to listen, and David, thank you.
All right, thanks, Gary.
All right, take care.
Thanks
buddy.
Thanks for being here. Thanks for joining us.
All right.
All right, so just a reminder for everyone, I am recording each of these sessions individually. I'm also live streaming them to YouTube. So the full event, unedited event will be on YouTube, and then also the individual recordings will be posted as soon as I can get them processed. And you'll be able to find those also on TimingResearch.com. So next up is Norman Hallett. Norman, are you there?
Here he is. There he is.
All right. Thank you for being here. You should be able
Thanks
to.
for having me, Gary. Very interesting, some of his analysis.
Yeah, yes.
He said Palantir was on a, I didn't know if he said it was on a tier or on a tear. It sounded like a tear, but when I saw the chart, it was more like a tier. But I'll have to ask him next time I see him. He's still there. Maybe he can answer me. Let me share the screen, I guess, right?
Yeah.
Here we
You
go.
should be able to share now.
All right. You should see me. I'm
It's
going
loading. Okay. Yeah, now I see all your charts.
to open the chat. Just to let everybody know, I'm a futures guy. So the charts that we'll be looking at are commodity charts, futures charts, mostly what you see up here are the MES, the S&P. Got quick access to, of course, the NASDAQ and the Dow charts, the crude, which has been pretty popular if your platform allows you to trade it. You've got the metals and the euro dollar here, the Japanese yen. When you request, if I don't see any requests, I'll show you some of the things that I'm looking at. But if you do request, just let me know the kind of trader that you are. Whether you're a long-term trader, kind of a buyer and holder, a swing trader, or you're a prop trader. I've been working primarily last really couple of years a lot with prop traders. And so you've got to have a different attitude toward the way you trade, depending on there. I see Mr. Jones or Amity Jones or Miss Jones. Don't know Amity. Never saw that name. I don't know Amity. I know Amityville in Miss. Okay. Oh, MS. MS, are you a miss or is that the code for a star? Oh, Mrs. Sorry. Okay. Do you have a chart that you'd like me to look at? And I also want, while Amity is putting up her request, I want to say that I think that you don't hear this much. In fact, you probably haven't heard it at all unless you've been working with me on any kind of basis. And that's the fact that the mental and emotional issues of trading are really what makes the difference for most traders. In fact, I'm going to say 90% of traders. One of the things that you need to do besides work on your innards is to have your trading plan match who you are. The way you trade should match who you are as an individual. That's kind of easy to do if you have somebody that knows how to do that matching for you and the way your trading plan is written. So let's look at ES, and then I'll go. Then we'll look at here's the ES chart. You're a futures intraday trader, which means you go day to day and not. Do you miss? Did I say Amity? Yeah. Are you? Do you hold overnight? I guess that's the most important thing, because some people confuse intraday and interday. Intraday would be you kind of get out at the end of every day. Intraday tells me that you do hold overnight. I'm going to kind of assume that. Is there a day or is there a time frame? Never thought I'd work so hard in trading psychology. Mostly day trade. Okay, so you're intraday trader mostly. And can you tell me the candle? You're probably using candle charts. What 5 minute, 2 minute? Are you crazy enough to be using 1 minute? What are you using as of the 5 minute? Okay, you see that's what I use. It's right up there, right here. So let's take a look at today's S&P, and I'll tell you, give you an idea of how I like to look at this. Of course, we're in a downtrend, and the first thing that I do is I take a look at the day chart. It gives me what I call the undertow. Now, this is a chart that don't mind these lines; they're for other reasons. But as you can see, we've just broken some a considerable area. If we break any more here, you really could see not a monumental, but an even more exciting break than we've seen. It's a nice consistent break. I want to show you a couple of things that I look at. This is the daily chart. Now I'm only looking at this for the undertow, but I do want to point out general principles. It is interesting to note, I think, for most people, that the longer term chart that you look at, the more accurate any trading plan will be. And that's because with any longer time frame that you're looking at, the wiggles and the choppiness tend to be absorbed in the longer term chart. So this right here is the 8-bar exponential moving average. I like to use it. It's called we used to call it the golden mean, but it is we used to use the standard, but I use the EMA because as a day trader, you want the more recent influence to be there for you. So the exponential moving average is much more indicative of it weights the 8 and an 8-day EMA. It weights the more recent days, gives it more weight in the average. The standard EMA gives all 8 candles the same weight. So if you're concerned with what's happening right now, the EMA is probably what you want to do. The longer chart you use, the more you may want to use just the standard. But here's the EMA. This is the 34, and some of the people who I train use the 50. Some use the 20. I use it as a guide, as a backstop. I don't like to take trades. Hey, Mark. I don't like to take trades that I don't like to take long trades unless this longer term average is at my back. So when your candles are above, in this case, the 34, I'm looking for long trades. When it comes below, I'm looking for shorter trades. So now I would be looking for short trades. Not that I never take in the shorter term, I never take short trades when the market is going higher or when we're above, in this case, the 34 or the 50, whatever you're using as your backstop. I do, but I take it with less enthusiasm, less power in my trades. I may take 2 or 3 positions rather than 5 or 6 micros, say, if you're trading as a prop trader in smaller accounts. In any event, my point is that I look at the 8 as a guide for getting into trades and getting out of trades, but I don't, and I give myself the edge by only taking long trades when we're above this area. So now I'm only taking that. So let's get into the today's show. You can see that even in the 8, we don't see any closes above the 8. And in the loaded gun simple trading plan, one of the things that we like to do, and there are several variations, but the variations depending on who you are as an individual and that match that I talked about earlier about who you are. But in general, I'm looking for a couple of closes above the 8 in order to exit. Otherwise, I'm staying in. And when I say close, I mean consecutive closes above the 8 to stay in. So I'm looking to initiate short-term trades. But again, I'm trading the 5, and we're going to get to that, Amity. But I want to. But what I'm saying here is, I look at the daily to give me the undertow. The undertow allows me also to vary the power that I'm using on my trades, the size of the position I'm going to take. So in this particular case, when I see a short trade, because the undertow here is long, the longer daily chart is on the short side. When I take a short trade, I may be taking 4 or 5 micro positions instead of 2 or 3 if I see a long trade in the shorter term chart. So I use this as an undertow in order to help my position sizing. Okay, I think I've said enough about that. So let's get to the 5, and we'll take a look here. So until further notice, I'm favoring the short side. I'm moving this over here. So here's your 5-minute, and we're obviously breaking down today. And we break down. One of the things that I noticed, again, here's the 34. You may want to use the 50 or the 20, and again, we can discuss it if we're ever together, or you can find me. What I don't want, what I do want is I want to take trades. I want to take short trades because we're traveling now under my 34, in this case, under the 34. I want to take short trades when both moving averages are close together. Here we have a situation, a previous situation where you're looking for short trades. Here's kind of a false breakout against the guardrail, which I don't like. It's a trade that I wouldn't initiate. Actually, this is one of our signals, but something that wouldn't take because of that hill. But here's something that I would take. Here's one of our loaded gun triggers, but it comes at a point where both moving averages are together. And because when you have moving averages together, there's a calm in the market waiting for a new interim short-term direction to be defined. Well, we've defined it here. You've got a nice long candle that's taken out all the body lows and most of the other lows except for this spike. Now, most traders will be concerned with the size of this candle, and there is some concern if you're somebody who insists on putting your stop, in places that's going to increase your risk, and rather than that, reduce your size of your reduce the size of your positioning, and so that you can fit your risk. Because the truth is that the longer the candle is, the more power there is behind the move, the more likely there is to happen for you. So this is happening the way we want it. I like candles above the 8 and then the breakthrough candle below. This is what I look for. Opposite sides in my candle, and then boom, you have a short signal here. And I always wait for the close. So if one would have you would have been in for all of this, waiting for 2 closes above the 8, of which we would be here. You'd be out here and you'd have a nice big gain. Okay, so that's a general principle I'm giving you based on the current that I'm giving you now. As opposed to, I mentioned that you want the 2 moving averages to be together for your best situation. These are what I call sweet spots. And if you're in a losing trend, or you're somebody who has an issue mentally and emotionally with losing because you're used to it, it seems to be a habit, you want to take trades that are the sweet spots for you, the ones that give you the highest probability, of which I'm describing here as the coming together of the 2 moving averages that you're using. And then now, once we start to spread away from the moving average, if I had that same signal here, I wouldn't take it. We're too far. Moving averages tend to come together, right? So the further you are, like right now, where we are right now in this daily chart, this is one that I would have taken. It's actually one of our signals. I like engulfing patterns. Again, see how we're riding the 8, doing nicely there. I would have liked it up here, but this is something where I would take a reduced position. If today I decided I was going to take from 2 to 4 or 2 to 6 micro contracts in a $50,000 trading account with say Apex, a prop firm, this would be a signal that I would take. I may only take 2 or 3 contracts, and the reason is because I like to take positions that are closer here. So I would have been in for this. In fact, I would have taken my first scalp. I always take, if you're a prop trader, you want to take a scalp. In fact, if any trader, the lowest hanging fruit is scalp. But if you're like me, again, that personality match, you want to be in for the big trade. Listen, highest probability are scalpers. The problem is that when you take a loss, sometimes it can be a reasonably sizable loss if all your positions get stopped out quickly. So it takes you time to recover. It's a different way of trading, and it could be suitable for you. I like a combination of both, where you take your scalp, which I would have taken before I reached the bottom here, and then would have been almost an immediate take of a scalp. And then then I would continue to look for, say, in this case, and it's not in all cases, but 2 closes above the 8. I'd still be in this trade. But the fact that we're moving now away from the moving average, this market, I would be looking to move sideways. There's a couple of things going on here, and we're talking about, I can't really help you to tell you to take a trade right now because I don't think you're trading while I'm talking. But I will say that when I see something like this, when I see a long downtrend, I see a response to that downtrend, absorption of that energy, and then a resurgence. Here's a place to look for the 1, 2, 3 type of an entrance. If I was not in this, I would be looking for I would be hoping the market would rally above this point, and then I would look for a confirmation to break down again with the current trend. So this is what I would be looking for here. If I'm off, I only have about 10 minutes, so 15 minutes left. And if this hasn't happened and you're ready to trade after I leave, Amity, then this is what I would be looking for. At least more of I'd like these moving averages to come together before I go short, and it certainly would do that if the market came up and then came down in that 1, 2, 3. By coming up, you'd see these two moving averages come together. You may even get a nice sweet spot. I don't know what triggers you use or whatever, but that would be my analysis here on the short term. I would be looking for continued movement in the south direction because of the undertow of the daily chart, and then I would be I'll be looking to sell when I could, and you can see that for me. There were no opportunities here. Well, here's 7 o'clock. I get up at 7 to trade. There were real. This was see this here. Look, here's an engulfing pattern in a squeeze. I love the engulfing pattern crossing the 8. I would have been in on this trade, and you would have had and I would have gotten out the majority of my positions here because generally bottoms hold and tops hold. You got to look for your resistance and support. But I would have left one on. I would have taken 3 or 4 contracts here. Would have seen this market come down. Would have taken out 2 or 3 here. If I had one left, I would have been in and be congratulating myself as the market went up. And then when this thing closed, and I saw this, I guess they call it a hanging man. This is a signal that we're probably going higher, and we're now we got rid of all the let's call them weenies who got sucked in here on this break, and then now I'm out. Okay, I'm out of my final position. Okay, so there are certain ways you have to have rules to get it out. You have to be able to recognize certain patterns and so on. Here's this is another signal in a sweet spot. Here's a big engulfing pattern where you have the yellow over the white, and don't let this scare you with a big candle. You've got enough room here. If you went long, you would be honoring this top here. This is really trading 101. You don't want to ignore this kind of action here. You don't want to ignore interim tops. This is a resistance level, as this may actually be, but this is a defined resistance level, and you don't want to screw with it. So when you want to get in here, because the power is here in where the moving averages came together. Beautiful. And you had I would be, and what do I mean get out? I would be you don't want to ask for everything. So I'd be coming in right around here, and I would have been out right in this area. Don't ask for the whole move to the top of the resistance of this resistance. Give yourself another edge by not asking for everything. So you would have gotten out here, and maybe you would have left a couple on, 1 or 2 on. Maybe that I would have if I got into 4 positions. And here maybe I only get in 2 or 3 because this is a big risk, and I'm only willing to take, say, $250 risk on a particular trade in a $50,000 prop account. So I may only be able to take 1 or 2 positions. Now, if I'm limited to 1, because my stop initially would be somewhere in here, if that $250 would be breached with 2 positions, I would take 1 and I would treat it as a scalp. So I'd have 1 contract, scalp it here, and be out of the trade. If I was able to take 2 contracts and with that $250 risk, I'd be out here and I'd be holding. Well, the fact that we go sideways here, I also have a particular rule about not waiting too long for something to happen. Now, oftentimes you'll see sideways and then break out with the recent trend. It didn't happen here. In fact, if I had held and we came and broke this 8 again, I'd take my profit right here on the second one and wait for something to happen. So there's a lot of good things that you can do if you have the right rules and you understand your own matching. I hope that helps you, Amity. I hope that really helps your trading. I was a little verbose, but I'd rather get into content you know, reality of what happens in your head when you're doing it. And if you're, you know, if you want to go to the disciplinetrader.com and find the contact area, I can give you some more pointers if you ask for it and tell you more about what we're doing. I'm going to give you a link at the end of this. That's great. Thank you. Okay, Amity, thank you for your appreciation. I appreciate you. Let's go to YM real quick. I think I have it in the same, here's the YM. Again, similar, similar downtrend here. Of course, we're seeing more extreme reactions really recently in the, you know, there used to be a time where if you missed a short trade in the S&P, you could go to the NASDAQ or the Dow and look for a signal, but they do not act the same way as of recent because of the heavy tech in the NASDAQ, the oil, the energy stocks, in both. In any event, you understand what I'm saying. Here's an interesting. I was talking before. Here's one of our loaded gun signals. You can see what you want to short trade. Why? Because the short-term moving average, whatever you're using, is below the long-term. And look, you've got what you want. And look, isn't this interesting? 2 closes above consecutive. 1 close above. Nope, 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 nope. You would have been down. You would have been out right here, which is near the bottom. So you want to have rules that really work. And I'm saying 2 closes above or below. It's not exclusive in certain areas and in many areas, but you don't want to marry that either. And until we can work together and I can understand the way your brain thinks and way you work so that you don't get caught in whipsaws. There's another situation where here's an engulfing pattern, beautiful right here. So this particular move here, I would have missed, but I don't get them all, you know. But again, I'm not in any of this on the long side because I'm too far from the moving average. When this starts to accumulate up here, you know, when you're this far from a moving average, God, you really have to look for the breakdown of which you saw here. Now I'm looking for trades on the short side. But where are we here? Since I only have about 8 minutes left, where are we here? Yeah, you know, you've held here. So, you know, there's a nice probability. You've held a couple of times, kind of a fake here, well, not a fake, but an initial hold in that area, a strong hold, a confirmation of the hold, another confirmation of the hold. You know, if you were a betting man and you're not a betting man here from the standpoint of just throwing money down for no reason, I think you would look for something that may turn upward. Again, why? You've got your edges. You got a triple type bottom here in the short term. You've got a lot of distance between moving averages. I'm sorry, the dog. Somebody's coming up. Probably must have cut one of my trees down that just passed away. In any event, so you want to be patient here. You want to be patient, and you want a long trade may or may not be reasonable here unless you get a signal. When you do take a long, if you were to get one of your signals, I don't know what signal you use, onto the long side, you don't want to challenge this. In other words, you want to look to take the majority of your profit. I don't know how many contracts you take between here and the and your longer term moving average, whatever you're using. I'm using the 34 because it's a Fibonacci number here. You can use the 50, but when you use the 50, know that you're giving it a little more space, so that you got to change some of the parameters. I can't go into those right now. If you're using a shorter term moving average like the 20, you have to be a little bit quicker on your feet. Okay, so again, that would be, you know, certainly right here. Let's look at the daily, which I would have looked at before I started all of this. And of course, you know, you're trading on the short side. Here's one of our loaded gun signals right here. Look at that, right at the cross. Again, the person who runs our trading room, and if you want information on that, just go to our contact, go to thedisciplinetrader.com and you find the contact area and write me there, and I'll send you information on the loaded gun simple trading plan. But here, I mean, here it is. We're also our trading room that you can enter. and be part of. But the guy who runs the trading room, Danny DiMaria, who used to be a fabulous floor trader. In fact, the floor traders, he loves these crosses. He loves the crosses. I'm not a big cross guy. I'm more of a squeeze guy like this and an engulfing pattern like this. Beautiful. Look at that. And all the way up. Nice. Again, look, we're not breaching this 8. Isn't that nice? I mean, you got to be sure. I mean, if the daily chart, again, the daily chart is the most accurate one. If the daily chart is telling you this, then you've got a strong reason to look for short trades. Okay, when it's this strong. Of course, we're coming to a situation here where we may get some reversal action even here. So there's maybe another edge to look at what we saw in the shorter term chart, the 5-minute, to go ahead and look for that long trade when you get it. It hasn't happened yet. Okay, I think my time is almost up. So I hope Jorg, that I have helped you out. Let's see any comments. Is the white an EMA? It's an EMA I'm using. 34 EMA is what I use, Jorg. So again, it's a Fibonacci. There are people who use my system, use the 50. They like the 50, and I don't mind that. It's a good one because a lot of people use it. And so you can kind of see where you're taking money from the amateur trader as a trader. Let me just show you real fast what I'd like you to visit this site. And David will be putting it in the chat here. This is the disciplinetrader.com/prop. I deal primarily now with prop traders because I mean, I can deal with anybody. I probably, of the 10 people next 10 people, I'll have probably 6 prop traders and 4 traders of different types, but all commodities. Although I do have one stock trader that I train, so don't let that scare you. This is $197 approach. This is something that it's how to build a substantial long-term income in prop trading. If you're a prop trader considering these are 5 areas that you want to consider looking at differently when you're a prop trader as opposed to a different kind of trader. Look at these testimonials, you'll see, and for $197, I think that it's something. If you like the way I talk, if you like the way I logic, take a shot at this and get to know me a little bit better, so that you can really learn commodities the right way. Again, the most important thing is that you match who you are as an individual with the way you trade. The reason you may be going from trading plan to trading plan is that you're a mismatch. I mean, a trading plan that asks you to be patient. If you're an impatient person, like I tend to be, I need a trading plan, for instance, that has triggers that I don't want to sit around for 2 hours waiting for a trigger. There's a lot of people, like my accountant, who's I've trained and is a very successful trader. He's got the patience of a saint. So he's got to look at things differently. When you match who you are with your trading plan, not only does it ease the tension and allow you to follow your trading plan without jumping off, but you can actually have fun. I know that may sound crazy to some people. The profit, of course, will follow. Anyway, I appreciate the time that we've spent. We've got about 2 minutes. Let me just take one quick look at the crude market, if I've got about 60 seconds, because I'm sure there are some people looking at the crude. The QM, incidentally, is the half contract of crude, which you may want to take a look at. Here's the daily chart. This thing, I would not, my friend and our friend David, his name is Steve Nissen. When you see a tail like this, he told me one time in one of the, he attended one of the symposiums that I put together years ago. He said that you'll usually see, he says 70% of the time, you'll see a retracement to at least half of this tail. We haven't seen it yet. So so just kind of one of the things I remember that I look at, and a guy like Steve, you kind of got to listen to him when you're talking about candle charts. Anyway, here's a explosive movement with no breaks below the short-term moving average. Now you're back above it. We do have some distance, so wouldn't go nuts. Again, this is the daily chart, so I'd still be looking again at the long side of crude. And from a short-term perspective, this is telling us the same thing. And we've broken this high. We've come back. So here's a possible 1, 2, 3 pattern from Futures Trading 101. Okay, David, that is about it. And I appreciate the opportunity.
All right. Thanks, Norman.
Okie dokie.
Thank you for being here. Put your link in there again. All right. Next up is Michael Filigaro. Michael, are you there?
I am.
Hey, don't go away, everybody. It's Michael. This guy knows what he's doing with the options. Oh, good to see you, Michael.
Good to see you, Norman. I listened to the end of it. I got to agree with you on the crude.
I was hoping so.
Oh, I do.
All right, take care, my friend.
You too.
All right. Thanks, Norman. And Michael, you
I'm ready.
double checking my setup. Okay, looks good. All right, I'm going to start my recording again, and then you can start your yeah, if I can talk today. Analysis. So I'm recording again now.
Okay. And good morning, good afternoon, everybody. My name is Michael Filigaro. I am with logicalsignals.com. That is my little company. That's my website. And one of my major analytical tools is that I use Elliott Wave and Fibonacci. I am an ex-market maker and as an options market maker across several exchanges. I started here in San Francisco on the Pacific Exchange. I've traded in London. I've traded in Amsterdam. I've traded on the DTB in Germany. And after living for 10 years in Amsterdam, and then came back. And since about 2013, I have become a day trader. And so I trade my nemesis here, which is the NASDAQ, and I trade the NQ, which is the future. So, but I do daily analysis. I do a morning report, and I do an afternoon update on the S&P 500 and the NASDAQ 100, and then I do weekly updates on gold, silver, platinum, the NASDAQ, the S&P, and the Dow. So I am here and ready to take requests, I guess. And while you guys are thinking about what maybe you want to take a look at, I'll go over to the big boy. Talk a little bit about, because Norman had mentioned that I do options. I have done options. But what becomes very important if you are a futures trader or you're working a prop firm account, it's very interesting. It is a lot of people doing that now. What I've come to learn because I have options experience is that options trading has more than quadrupled since the days that I stood on a trading floor to make a bid and an offer for the investing public. So with all of that in mind, there are so many options being traded. And so do you want DocuSign? Oh, and Halliburton. Okay, got it. So here's something that I learned, and I just love it because it's true. That there's a saying, so go the options, so goes the market. And really, that's true. Options trading does have much. We used to believe that it was the underlying that had the control over the options pricing. It's like, no, it's the options that have the control over the underlying and the futures. Okay, we're going to start with DocuSign. And wow, okay. Let me go out to a weekly so I can just take one little bit longer. Yeah. So 1, 2, that can't be. So it's an ABC, B, 1, 2, 1, 2, 3, 4, 5, 3, 4. I think it's got one more leg down to do. And let me just see if I got this right. B, yeah. No, that's a 3. So from here, I can go like this and say there is a 1, and you can go over to there. And so we're just kind of looking for it to complete this leg. It looks like it needs 1, 2. That's a 3. There's the 4. So we connect via wave 1, which is this one right here, and then we run it over to there for the extensions for wave 5. So these are the levels. And somehow I got that level in there for some reason from way before 4076, which it's now surpassed, gone back up. So it bounced off of that, putting in another little floor. So I would think that it needs to get down below 4016. And your first one is 3983, then 3709. But for wave, if it is a fifth wave, the most common for it is that wave 5 would equal wave 1. And that puts it down at 2825. Hate to say that, but then your next most common is 618, which is 37, which might seem a little bit more realistic, considering that it needs to get below 40. And it could be just on a push and a shove. The overall market, I also think, has got to do the same thing, to be honest with you, that it needs to also come down and put in additional lows. Okay, so Halliburton. Now, we would think Halliburton might be doing well because of war. Ah, I was right. It is. Okay, so this, because of what they do, is giving it this bounce. And so we see here, this is one big ABC down. So it should be either it's doing 3 up. Let me go one more. Let me keep going out, see if I can get. I'm just trying to get my bearings on this. That is if there was a triangle going up. That did not happen. So that goes off. So somebody else one time when I was doing this, they came up with and asked that same stock. So A, B, C, D, E, and it failed. So this is very telling. You see how this it should have gone up and zipped above there before turning lower, but this move failed to take out that high. And then this is the result. So upon a failure, and to finish this move, which would have been a finishing move to begin with, it just brought this underlying push harder. Of course, that's years ago. And then from that, again, let me go one more. I need just a little bit more data. Oh, this was 2020, yeah. So I'm going to say that's a 1-2. Well, there's a very solid chance, at least on my monthly chart, that we're going to go up and exceed 43, 44 actually. And you know what that tells me? That this war is not going to get over anytime soon. Because I'm not sure, but if I remember correctly, I'm thinking that part of what they do is they do work for the military, or they do something that in terms of ammunition or something like that. Can't necessarily remember, but then again, I'm getting old. So, but on this is kind of not very bullish, but then suddenly it breaks. So I'm going to say this is wave 1 up, and it was a triangle. It was a pattern diagonal up, and that's wave 2. And this is 1, 2, 3, 4, 5 of 3. And then this is a small 4, and we're in that 5th wave. And once again, you're going to use the same basis where we're looking at wave 1, and we're going to go over to wave 4. If these are correct, well, that tells you, boy, we're close. So this one oh, yeah, did I do that right? Hold on, let me redo that. Remove that, go from here to here to there. Yeah, I think it was right. Yeah, it is. So your first level is the 100%, and that's where wave 5 would be equal to wave 1, and that's at 40.48. And then on a push, you can get to 44.78. And I think that takes us above that, which is a good thing. So this might have been like the A and a B, and now we're doing a C wave up, and it should be 5. So yeah, 40.48 to 40.45, let's say. So I think you got a good shot at going. Of course, this and and on a weekly can stay overbought for a while. And they usually can stay overbought a lot longer than most people believe it can. Okay, so HCI. All right, so HCI Group. Not sure what they do, but they are doing what the market is doing. Let me just go here. Okay, so they haven't been around 2008, 2009 is when they started trading. So they're still in this original 3, 4, 5, and down in a 4. 1, 2, 1, 2, 3, 4, 5, 3. This is a small 4. I would say they got one more high. Let me bring this down a little bit. A little bit more. Yeah, see, we go there. 1, 2, 1, 2, 1, 2, 3, 4, 5, a 3. I think this is going to be a 4, but maybe not. 1, 2, 3, 4. That overlaps. That could be A, that could be B, and we got a little bit larger C wave. So you should have some support here, about the 136.40 to 136 level. If it breaks there, this could be a completed move, and we're going to come down larger. But then you have additional support with the 200 period moving average at 120. Again, if it's just correcting because the overall markets are correcting, in terms of like the S&P and the NASDAQ and the Dow, I think they've all have reached major tops, major highs, and that we're starting into a much longer corrective period. And on an Elliott basis, in the S&P, it's in cycle degree fourth wave. In the NASDAQ, it is a primary degree fourth wave. And in the Dow, it is a cycle degree fourth wave. And just using a regular Elliott, what is suggested or what the guideline is that a fourth wave of motion will find its terminus or its endpoint within the fourth wave of one lesser degree. And in the case of the S&P, the lesser degree is the primary fourth wave, which is the 2009 lows. And so that's actually where over time now, because remember, this is a cycle degree, and so the whole correction can take between 9 and 12 years. So if we think about the correction that for that primary fourth wave started in 2000, finished in 2009, so it took 9 years. And it was an ABC, so it was A up, B down, C up, A down, B back up, and then the C wave down. And the C wave was the great financial collapse of 2008, 2009. So I think there will be large triggers for this one as well. So again, if this, not knowing what the company does, but if it's just following what, let's say, the S&P does, or any of the other, I think it's going to have a larger correction. But prior to it, it may have one more high. But I don't particularly like this because this looks like an A, this looks like a B, and we'd be looking for a little bit harder down. And again, your support comes in at 136, and your next support comes in at, I wouldn't count that one, I count this one, at 83. Woo, that could be a drop. So that's what I would say there. Okay, so on April, okay. I'd be careful with that one because it's going to lose its premium real quick. I'm just referring to that Halliburton call. But you'd be good if it continues to go up because I think you're good until April, to be honest with you. All right, so SMCI. Let's talk about that one. Yeah, like everything else, this is still doing a correction. You definitely want to look for it to come below 17. I hate to say it that I got that on support level down there. Not sure why. See, that somehow is connected to something that doesn't exist. Let me take that off. All right, so Oh, okay. So I got one, two, one, two. This is just funky because it hasn't been in existence all that long. So really since like 2008, 2007, 2008. And then it did this fantastic run. And I think they split or did a reverse split. And this is an A, this is a B, and then it's 1, 2, 1, 2, 3, 4, 5, 3, maybe, or one of three. So it's coming down in a corrective part, but it seems to be in the second down leg. So that's the first down leg. There's the intermittent rally, and then you know 1, 2, and then 1, 2, 1, 2, and I'm coming down harder. Now, because of the pricing, it's very hard to determine. It's like if this is going to drop significantly below 14, but it certainly can. And this is all post split, so uh, sometimes the prices don't make sense, but they'll go there. They will go. So I think initial support is down at 17.25, but I think it's got enough push to go below that. And you can run something like this. And that's to do the C waves. You got 1360 and look where this one sits. Oh my God. It's like it doesn't function as well because we'd be looking for this is A, this is B, and so we're looking for C to equal A, and that's down at the negative number. So you kind of have to work into these levels here. But I think it's 50% is 1316. Yeah, it's a little difficult to kind of come up with it, but I don't think it's done correcting. So I think definitely below 1725, and now you got this 1361 underneath it. And below that, not a lot, not a lot. So normally what I would do is I always kind of go to those previous lows to find, where the market may find its support. So that's a tough one because this one, supermicrocomputer, kind of follows everybody else in terms of oil well. Thank you on Halliburton. Thank you very much. I knew they did something. Oil. That makes sense. I would say at least 1360, if not a little bit more. But you got that good support coming in from the monthly 200 period moving average. So that would be interesting. Okay, so I thought there was other ones. So anything else, please go ahead and put that into the chat, and then we can go look at those as well. Make sure I covered everybody. SMCI, yep. HCI, document Halliburton, yep. Halliburton and those April calls, that might work. That might work really well. Because I do believe if you were listening to what Norman had talked about when he showed us crude on the one that AT&T. Thank you. I didn't know what you were actually saying there. So you actually want AT&T. No problem. We'll go over there. But what Norman was saying about crude makes total sense. And I think that if we're not going to have any resolution over there, we're going to see crude go back a lot and could go above one. How high did it get? 129, something like that. 122. That was silver. Okay, so now we're on AT&T. Boy, they've been on a tear. Look at that. Yeah, that is interesting. ABC. Oh, that's actually 5. And then it goes sideways, just like the market. But look at this sideways move. Wow. This is the great financial collapse. And then, boy, the AT&T has not been able to, in fact, it went down and put in an additional low below that low. Okay. But I like this guy. 1, 2, and there's 3. Here's 4, and we're coming back. And let me just open this up. And again, this is a monthly chart, so this is not going to happen real quick. but it's the same deal. We're looking for that fifth wave. And let me bring this down just a little bit. Yeah, there you go. So we can take a look inside. It's kind of clear. It's already surpassed the 100%. So normally 5 would equal 1. And so it's gotten past that, came back down and tested, and now it's gone back above. So anything above this high could put that high in, and then we go through a little bit larger of a correction, which could again bring it back down to 22. Notice how beautiful. It's like if it can come back and get itself down there, that would be your first big line of support for a downside move. If it got to 30, I'd be looking for it to come back to 23. And if it can hold it, then it's got another 5 to do. Another 5 up, which would be pretty wild. Because I don't know how it's going to act to, within a general corrective phase in the broader market, because it is a part of the broader market. So again, but this move is nice. And this is very clean. Oh, that was on earnings. There you go. So they actually liked those earnings, I guess. And now this is their first quarter, right? Or yeah. On April 22nd. Okay. You're going to get a reaction no matter what, right? So hopefully they're going to come out and have another solid quarter. But 30, 60 is what I got top side. On a push, you got 35, your next level. So, and then there's even more above that, but that's really giving it something crazy push. I think 30, considering how long it took the stock to get up to where it is, we're talking years. That was the major low in the markets right there, October of 2022 over here. There it is. And it went down and made a new low below that. Interesting. Interesting. So it's making new highs against the grain, and it made a new low against the grain. So maybe a late bloomer there. So maybe we will get there or there. Depends on, I think, a lot of things. And I don't really follow their earnings to really know what they do or what they don't do. So, but while we're waiting, I can go over. I just want to show you the SPX, which, because a lot of people are thinking like, what is this market doing? And this is my longer term chart. And so this is October of 2022. And that is where this intermediate fifth wave started. So I believe all the way up to, I just don't have enough room to put it all in there, is the cycle third wave. And just to kind of show you what I'm talking about is that, let me get this open for us and go right all the way in. See, this is my long-term chart, and it really goes back, and we can see that these are grand super cycles. They're very, very long. So the cycle third started in 1949. So it's been very long in the making, and that's what I think we've completed. And here's the previous fourth wave. So there is the A, there's the B, there's the C, and the C was the great financial collapse. So the way that Elliott put together the guideline was that it should find its endpoint towards that low, which was in the cash market. Let me get over to it. Come on. There it is. I always round up, 667. So it was, oh my God, how's it going to get there? We're trading at 6,500. It's like, yes, we are. But it is a long correction, and it's a long corrective period. And nobody thought that this would happen. Right? We have to remember during this period right here, the Dow went up right there and made a new all-time high and then crashed. So much. And everything that's kind of happening here, I have to tell you, when you go and if you haven't I would suggest there's a great book. It is Andrew Sorkin wrote it. Andrew Ross Sorkin wrote it. It's called 1929. And it's really good. But what I found it so good about is that it really goes over um, what what the conversations were, what traders were thinking, how certain traders made, believe it or not, millions of dollars in the crash. And that was the initial crash. What really was, it was the C wave. So the other point that I make is that this was the C wave within this fourth wave that did all the damage, all the damage. So here we are up here, and we're doing a cycle degree. And so we're going to have an A wave down, and then we're going to have a B wave back up. So I talk about very often, it's like what I look for is support at the previous fourth waves. Well, this one was very high up, and we've already gone past it. So the next one is that, which was April the 7th. Actually, no, April the 7th of 2025. That low is where I think we find and we take a pause. So I think we can drop very quickly down to that level. Now, bringing this down to at least, let me just go to my daily chart. What we're looking at here was the end where they have the cycle third. And so we're in the absolute very first wave down, and it's forming a diagonal, which means it's kind of going to go wedging a little bit here. And so everything is three waves. So this is the January 28th high. Then we have three down, we have three up, we have three down, we have three up, we have three down. And now we just finished three up and we're heading back down. So bringing it down to the 4-hour chart, look at the depth. So everything's like, oh, it's just, we're going to go up, we're going to go up. It's like, why? So every time they see something like that, when we spike because of something that gets told, thank you, David, everybody jumps back in. Oh yeah, we're going to go up now. We're going to go up. We're going to go to new highs. It's like, why? What's going to produce that? And I think people get so ingrained. It's like, well, we've done nothing go up. We're going to get rate cuts this year. It's like, really? That's a possibility. No one's ruling them out, but they haven't occurred yet. So to be buying on the hope, it could be dangerous because I think there's much, much more to do. So in other words, I think this B wave could come down to there, which would suggest we have one more upswing, but I think we could actually say this fourth wave is here. And that what this is 1, 2, and we're coming down in the third, and we're going to end up here, or possibly even a little bit lower to finish the first leg down, and that would be a minute wave 1. Then we get a wave 2. That'll be a decent rally. By the way, it'll be a decent rally. It'll be an ABC, and it can come all the way back up. And the fibs, just to give you an idea of what it could look like. But I'm just using it to say if it's going to come down to this level. Here's your levels coming back up. 67.70, 68.72. And that's after we get down to 63, just under 6,400. That's a pretty decent rally back up. That's 300 to 400 points. So it's going to be nice and useful. So again, I think we're in a much larger correction that eventually is going to end up much lower. And this is just wave 1. So again, when we're counting it from the top, we're in an intermediate wave A, right? So we're in primary wave 4. And inside of that, the first leg down is going to be intermediate wave A. Within that, intermediate wave A could be 5 waves of minor degree, or it can be an ABC in and of itself. I think it's going to be 5 waves of minor degree. So within that first wave of minor degree, we're in the first wave of the minute degree, and that's what I think we're getting ready to finish down here. So then we get a minute wave 2, then we get the largest section of it, right, which is going to come in a third wave, and it's going to be kind of deadly. And I'm going to kind of finish up there. Other things that are kind of cool, guys, is gold, silver. Boy, they're doing some wonderful stuff. And I think they're getting ready to put in a low, and they're going to start to blast again to the upside. So it'll be very interesting. I think we're going to still have an interesting market. So thank you, David. I am going to give it back to you. And I'm going to
All
stop
right.
my share. And guys, we got Wiz Buckley coming up next, and he's pretty cool. He's got some good stuff to share.
Yep.
Thank you.
All right. Thanks, Michael. And Matt, are you there?
Yeah, man, I got you loud and clear. How about me?
Yeah, sounds good. You should be able to share your screen now. Get set up. Okay, I see it loading. Okay, I see your disclosure screen. So, all right.
Okay.
I'm going to start my recording and then you can start your analysis. So I'm recording again now.
All right, folks. Good afternoon, good evening, good morning. Depends on where you are on this big blue marble. Welcome aboard. My name is Matthew Buckley. My call sign is Wiz, former Navy F-18 Hornet fighter pilot. Went to Wall Street, did a bunch of other stuff. And I'm here to talk about what's going on in the markets and how you could potentially profit as others panic. This really isn't, I mean, this isn't violent, right? This is an orderly sell-off in the S&P 500, right? And as I'm going to show you, Top Gun Options members have been printing money on the way down. I'm going to show you. Matter of fact, I'm going to show you what we did this morning. 70% in a couple minutes of trading. This is a gift. If you're looking at this chart and you're like, man, I'm getting hammered, that's your fault. That's nobody else's fault but yours. You're the tick. You are the trader in command of your portfolio, nobody else. If you don't know how to make money as markets go down, that's what I'm here to teach you to be able to do. Let's just put things into perspective real quick. So first of all, let's start with a couple questions. Does anybody think the Operation Epic Fury is going to go on forever, right? Now, and I mean that. Like, does anybody think this isn't going to end? I mean, it's just that's physically impossible. It is going to end, and it's going to end soon. Let me just bring up a couple charts here from the past because I love when people panic. I love when there's blood, not physical blood in the streets, but I love when people panic because I get to walk in as people panic and print money. Let me pull this up, this chart, and where did all my control panel things go? Right, there we go. Okay, take a look at this. Let me just show you since I started trading. Now, obviously, I'm gonna age myself here. Look at that. I started investing trading at 1991, right before Al Gore invented the internet, down at Naval Air Station Key West in Florida. Does anybody see a trend? Right? I'm just a political science major from South Jersey, but the S&P 500, ladies and gentlemen, moves up and to the right. Now, I drew a straight line, but is it always a straight line? No. I was an instructor pilot in a Marine fighter attack squadron in Miramar during the dot-com boom. I was in the Chicago Board of Trade, the Chicago Board Options Exchange, for the what? The GFC. Everybody remember that? The global financial crisis. And then obviously there's the COVID scamdemic and some other stuff. But does anybody see a trend? I took this screenshot last year during what some people in this country were calling it, oh, the Trump tariff meltdown. We're all going to die. You see that red circle up at the top? That was the quote meltdown of the S&P 500 last year. Every one of these dips is a massive buying opportunity, period. Let me just show you, where's that chart? From the beginning, let's just look at the beginning of the century, like I just said. There's the dot-com bubble pop. There is the global financial crisis. There's the scandemic. There's the Joe Biden bear market. Does everybody remember that? 25% decline in the S&P 500 in 2022. And here we are Well, this is an old screenshot. This is around the tariff stuff too. What I'm getting at, folks, is this is a massive buying opportunity. Now, here at Top Gun Options, we've been printing money trading these swings in the S&P 500. Let me just show you an example from this morning. This is our member area right here. You see this morning, 4 hours ago? New S&P 500 Z0 DTE. What does that mean? 0 days to expiration. I call this a drinking money call. Now, thanks to psychedelics, ibogaine, 5-MeO, DMT, and God, I don't drink anymore, but I still call it a drinking money call, right? So I bought a call. Let's go. Let me pull up the chart of the S&P 500 here. Right here. Let's go look at the S&P 500 chart. What have we been doing for the past 3 weeks or so? We usually, and here's today, we gap down. I think yesterday we actually gapped up. Yeah, look at this. We gapped up and then faded hard. What did we do today? We gapped down, recovered, and then faded hard. Every one of these massive swings, ladies and gentlemen, is free money. So I want you to look right here. This morning when we gapped down, I sat here drinking my coffee, and when I saw that green handle and then a massive green handle, I knew what we were going to do. We've been doing it for 3 to 4 weeks. So I bought a call on the S&P 500, the 65.75 call. What happened? I got up from my desk, went out into the kitchen, refreshed my coffee. I came back and I closed that call for a 70% profit, $600 in 13 minutes. How many of you would like to make, forget the dollar amount, 70% in a minute, in 13 minutes? AP out 80% in 6 minutes while at work. Thanks, Wiz. Dwayne, 88% profit in 6 minutes, and I'm out. $787. I'm liking these sniper shots. Thanks, Wiz. That's what I call these at Top Gun Options. Quick sniper shots. Dan, 40% in 4 minutes. Brent, drinking money account funded. Thanks, Wiz. Did the 65, 70 calls, blah, blah, blah. 111% for just over $2,000. Now, ladies and gentlemen, this is not hard. This is not rocket surgery. I just sat here and watched when the president was giving his little thing. It didn't sound too good. I bought a disaster put. And I got out for about 120% profit, or $2,500 a little while ago as I was getting ready to jump onto this brief. Folks, this is not hard trading a market like this and these big swings. But let's step back from the tactical, minute by minute trading and stuff like that. How many of you, and I'll just go back to this chart real quick. Look at this. Up and to the right. Does anybody want to bet against America? Now, to be honest with you, folks, there are a lot of threats out there. We have a portfolio here at Top Gun Options called Solo AI. Where was that post from Elon Musk? AI is going to destroy tens, if not hundreds of millions of jobs. Period. I've shared these videos with my members recently. About a year ago, I remember seeing a video of like an Optimus robot trying to fold a sheet or a shirt, and people laughed at it. What did I say? I'm like, you're not going to be laughing too long. Look, did you see the Optimus robot at the White House yesterday? Look at these robots in Japan doing laundry, folding towels. Ladies and gentlemen, it is absolutely, and this was a report from Goldman Sachs last week. How will AI affect the U.S. labor market? So why am I rambling about this? Because there are some threats in the immediate future to all of us. Accenture, FedEx, Amazon, UPS, Oracle. There has been over 300,000 white collar jobs lost year to date, man. It's March. Year to date, we have seen hundreds of thousands of jobs wiped out from AI. And you can sit there and go, well, Wiz, some of these CEOs are just using the excuse of AI to trim the fat. Doesn't matter. Those jobs are gone. And it is AI for the most part. So I'm talking about this right now because I want to look at a long-term bullish trade on the S&P 500. That could potentially make 6 figures for a small investment today. But I don't do anything. I don't go flying in a fighter jet. I don't go trading without looking at all the potential threats before I strap on the jet or fire a trade. There are legitimate threats to this market, to this country, to humanity in the next 5 years. Period. I have saved I calculated it the other day. I've saved over $50,000 in legal fees year to date. I used to be friends with, a couple of my attorneys. They're like, dude, what happened? I'm like, I can do everything you can do except walk into a court and file something. In Florida, you need to be a member of the bar. But folks, the contract reviews, the terms, I have saved so much money. Attorneys are gone. Surgeons will be gone. If not, folks, it's insane. Now, some of you might be sitting there going, well, Wiz, every new technology has created disruptions and done all. Man, this ain't somebody inventing the Model T and, the horse and buggy whip makers going, it'll never work. This is the end of humanity, ladies and gentlemen. And I'm not kidding. AI used in the Pentagon and targeting and stuff like that. So before I show you the trade, I'm going to tell you, I got a lot of concerns for the next 3 to 5 years. Look, 3 years ago, ladies and gentlemen, 3 years ago, AI, Chat GPT, whatever it was, 4 or something like that. Do you remember the open letter? Let me go find this real quick. This is a must read. Do you remember this happening? Here it is. Look at the date. Wow, exactly a couple days ago. 3 years ago, a couple days ago, there was an open letter. All the booger eaters, all the smart guys in the world said what? Stop. Everybody stop. Let's just take a pause. This is ChatGPT 4. They said, please, let's just all stop for 6 months so we can take a breath and look into this. We call on all AI labs we're going to remember the last human will be reading this article going, man, we should have listened to ourselves. So folks, I'm telling you, I am very, very concerned about the next 5 years. However, all right, now that I've scared the hell out of you and briefed you on the threats to the trade I'm going to show you, the market is not the economy. As a matter of fact, the worse the economy gets, you ready for this? The better the stock market can do, right? Look on your screen for perfect examples, like the global financial crisis or the dot-com bubble. What happened? The Federal or COVID, the Federal Reserve, the US government, came in and propped up capitalism. I'm a believer that if the government has to jump in to save this, it's not capitalism. But in reality, all these companies, AI, NVIDIA, Palantir, we have a whole AI portfolio that we trade, can be printing money as tens, hundreds, millions of jobs are lost. Does everybody understand this? Okay. All right. So here's what I want to do now. And obviously I run Top Gun Options, so I'm an options trader. If you believe, and this is a Warren Buffett-like trade, this is what Warren Buffett does. He believes in America. He believes, wrongly and rightly, that if anything super bad happens, Uncle Sam will bail everybody out, which shouldn't happen. But here's what I'm going to do. I just jumped in my time machine and I flew all the way out to December of 2031. Ladies and gentlemen, essentially 5 years into the future. And I'm going to get bullish. Not going to be a straight line. I already told you. Hell, this year, between us ladies, I think we're in a recession right now. The jobs market sucks. Inflation's sticky. Oil hovering around 100 a barrel. Are you kidding me? When do you know you're in a recession? Usually 6 to 8 months after you're in one. You ever notice that? The government doesn't wake up and say, breaking news, as of 8 a.m. this morning, we're in a recession. All that data are rearward facing, isn't it? So they don't wake up. They go, well, actually, we've been in a recession since, the fall of whatever. Right? So I think this year might actually suck because of Operation Epic Fury, a really weak jobs market, and inflation. But 5 years into the future, I gotta believe we're okay. The market eventually is going to move up and to the right. Just, to quote Gordon Gekko in the movie Wall Street, money never sleeps, pal. We will figure it out. Now, if you agree with that, check out what I'm going to do. I'm going to click all strikes, right? If you're not familiar with options, here's your quick brief. These are calls on the left, and these are puts. Buying a call, you're bullish. Selling a put, you're bullish. Buying a put, you're bearish. Selling a call, you're bearish. Okay, so there's your options brief. But look, and I just put this trade on the other day, man. So that's my live money here. We could go 5 years. Look at this, 2,100 days into the future. And as high as we can go, we could buy, let's start at the 14,000 strike. We could buy one December of 3031. Why am I saying 3031? 2031, $14,000 call. We're at what, 6,500? You're essentially saying the S&P 500 is going to slightly more than double in the next 5 years. I actually believe that. I truly believe that. But many of you probably don't have $5,400 lying around. Well, if you do, this is what I would do right now. I would buy this $14,000 call. But look at what we can do in the options world. Why don't we sell the highest strike call against that we can, the 16,000? This is a bull call spread. Look at what I just did. I cut, I saved this a couple grand. It's only $2,900 for this bull call spread. And I just covered this trade yesterday in what we call our accelerated retirement brief. Why? Because let's go look at the metrics real quick. You would risk 20, let's just round up. How many of you would risk 3 grand today to potentially make $200,000 5 years into the future? This is what I call a set it and forget it trade. Right? We did one of these. I already closed mine back here during the tariff freak out, and we had the Liberation Day tariffs and the market imploded. We did a bullish on America trade in April of last year. I closed mine for a 400% profit as Operation Epic Fury started. It was a $30,000 profit. And that was in just under a year. This is my new bullish on America trade that I'm placing, and I just placed it yesterday in our accelerated retirement account. The best time to put on a bullish on America trade are here, right? While everybody else is panicking, put on a bullish on America trade. I would do this right now. Now, if you have a little bit more, if you have a retirement account, right, I would allocate, if I have $100,000, retirement account, you could do more than one contract, couldn't you? Let's see what 3 contracts would do. 3 contracts would cost me about $8,800. However, $500,000, almost $600,000. Ladies and gentlemen, I've been doing these bullish on America trades for the past, again, aging myself, 30 plus years. This is what Warren Buffett does. This is what hedge funds do. They know. Now, all bets are off, folks. We get another scandemic. We get a nuclear war. Obviously, you're not going to care about the S&P 500 going to zero at that time. We'll all be dead. But ladies and gentlemen, if you believe, like I believe, in America and in markets recovering, then you place these bullish on America trades during a pullback. Now, let's be clear. I don't, my call sign's Wiz, not Nostradamus. I don't know if this is over with, man. I mean, the president's press conference right now, they gave me a big, beautiful gift. They let 8 tankers go through. This is going to end, period. The guy who wasn't letting ships through the Strait of Hormuz just got clipped by Israel. I mean, this is in probably, I think a couple days ago when the president said, I'm not going to blow up your power plants, for 5 days if we can negotiate. That was halftime. Right now, we're in the third quarter of this thing, in my opinion. It ain't over. but it ain't at the beginning, right? This is the first quarter. This, the Iranian Air Force was destroyed in the first couple days. The Navy's a bunch of submarines right now. Obviously, we're in the third quarter-ish. So you can kind of sit on your hands a little bit and wait, or, and I have it on pretty good authority, the president wants a deal before next Friday, Good Friday. The market's closed next Friday. He wants kind of a big, beautiful Easter peace type of thing. If we get something like that, you're going to wish you had placed this, because we're going to get a rip your face off rally. I guarantee you it's going to happen. Again, energy issues, that this is not, look at this headline. The oil supply crunch is spreading from the Gulf to the rest of the world. This is going to, remember, these are lagging indicators. Even if he says, I got a deal, beautiful deal, nobody does deals better than me, believe me, we'll get a market rip, but all this stuff is going to be a month or two of dust settling. But again, what did I tell you about 10 minutes ago? The market is not the economy. The market can turn and rip even if the economy keeps sucking. Does everybody understand this, right? Give me a vertical head nod. What if you had even more money? Well, Wiz, I would take 25 grand of my retirement account and put it into a trade like this. Let's risk 25 grand in this trade. And again, I'm just doing this for demonstration purposes. That would be 9 contracts. And folks, what's the max potential loss? What you spend. If you spend this money in this options position, that's all you can lose. God forbid the S&P goes to zero in the next 5 years. You won't know it because we're all dead. But if, let's just say you did have 25 grand, I'm going to take 25 grand of my retirement account and do this options trade. You ready for this? How much can you lose? 26 grand. How much could you potentially make? $1.8 million. I sound like Dr. Evil. 1.8 million. Look at your screen. And this is why I love being an options trader, because some of you in this room might be, dude, I can't even spell the word options. I have no idea what the hell that means. Look, are you following me at all? Right? If you just did this call, Wiz, I'm just going to buy that $14,000 call, right? $5,400. What's your potential profit? Well, it's unlimited. I don't know how much the S&P could go up into the future, right? So you could just buy a call. Hell, you could go up to the 16 grand and just buy that call for $2,500 and put it in your filing cabinet and not look at it again. But this is more realistic. When I've done my chart, trust me when I say I like the 14,000 call and I'm selling the 16 against it. Okay. And we do have people here at Top Gun Options who trade larger accounts. One of the guys wrote me, he likes round numbers. He did 10 in this trade. He did 10 and 10. And that's about 29 grand. But look, he's like, Wiz, this is my part of my retirement fund right now. And my kids, I'll will this to them, potentially make 2 million. How many of you today would spend 29 grand to potentially make 2 million 5 years into the future? And real quick, folks, you don't have to wait for expiration, right? Like I just told you, last year I put on the bullish on America trade during Trump's tariff thing, and I got out for a couple 100%, 30 grand. You don't have to hold it for the 5 years. Let's say in the next 3 years, we get and you can do this on your brokerage chart. You can go out into the future and say, okay, well, let's say it does this by this time. Oh, geez, I get out, right? So you don't have to hold this trade. And as I just explained to you, I kind of leapfrog these things every once in a while. The last bullish on America trade I did last year was like a D's 28, right? And then obviously these new expirations came out. So I closed that one and opened a new one. Isn't that awesome? So ladies and gentlemen, this is the power of trading options and years into the future. Now, for my TGO members, we did a bullish double vertical a month out in April. What time is it? I got 6 minutes. I was going to show you a bullish double vertical trade we did on the S&P 500 just out 30 days into the future. Why? Because I think this thing's going to be over with. If this ain't over with in 30 days, the market's going down and we'll be in a bear market. Trump ain't like that. You guys know him as well as I do. He doesn't like looking at the S&P. He watches the stock market, folks. So, You know, I see all the alleged smart money out there using the term Trump put. I believe there is a Trump put in this market. Why do I believe that? Because he did it last year, right here. I remember when the bond market broke at north of 5, right? When we hit the magical 5, I think Scott Bessent, the Treasury Secretary, ran into the Oval Office and said, Uncle. Trump grabbed his phone and said, we got deals with everybody. Nobody does deals better than me, believe me. And then we never looked back. I don't think we have any deals. But was it Vietnam or did anybody see a signing ceremony? I remember Trump the first term, I think it was a vice premier, like the vice premier of China came over to sign the phase 1 trade deal. And the president stood up there for an hour with these 3 guys on stage, like looking like, what are we doing? As the Trump pat himself on the back for like an hour during the phase 1 signing ceremony. I haven't seen any of that. And I don't want to get too partisan, but what I'm getting at is he can do things like this. You might not like it. I really don't care if you like it or not. You can trade off of it, right? That's why I sit here and I'm like, oh, wait a minute. They're going to cover the president live in the Oval Office or in a cabinet meeting just now. I make money off of this. This ain't hard, right? So I trade the front months doing what I did this morning, like I just showed you in our member area, and I trade years into the future. I literally put this bullish on America trade on years into the future, and I'll look at it in about 1 to 2 years from now. Does anybody have any questions on that? And if you want to learn how to do that, Monday morning, we do a quarterly full throttle training where I open up the doors to show you how I do. So obviously David's got a great program and he brings in some 500-pound heads. I love Mike. Mike was on before me. He's a good dude. And Price, I've known Price for a couple decades. He's a 500-pound head. So make sure you hang out for Price coming up and check out Mike's stuff. But Monday morning, starting at 10 a.m., I just do, well, look at the headline, buy the war dip with both hands. I am buying this dip right now with both hands. This ain't going to last forever. The president, first of all, Republicans are going to get destroyed in the midterms, but he can't have $100 oil. He can't have $100 oil for another week or two, let alone out to November. So this is a buying opportunity. And I'm going to remind you, this is orderly. That might not look like orderly. It might not be orderly in your portfolio. It is. I mean, look at this compared to this. We're all going to die. No, we're not. Yes, we are. Ooh, this wasn't orderly. I mean, we still had fun trading that, but this is okay. And let me leave you with something to remember. If you're getting margin calls or you're getting hammered right now, learn from it. I tell TGO members you should always have 25 to 50% of your funds in cash money. Why? When this happens, you walk in as people are running out of the theater on fire and you get everything at a discount. So if it's a little painful for you right now, learn. It's not going to be painful forever. Learn how to trade options. Learn how to do bullish bull call spreads 5 years out into the future. I'm telling you, man, if you had, what was the original trade? $2,500, $2,500 or whatever it was today to potentially make $100,000. I do that 6 days a week and twice on Sunday. So good stuff. And you know, it's this happened to, you know, and this is our member area. I want to show you real quick. This is, I post my trades live in here. I posted the drinking money call this morning and got my coffee filled. And you can see this is what our member area looks like. We have about 712 members currently here at Top Gun Options. JP Morgan coming up on earnings. Got a nice bear call spread there on the S&P 500 that I shot yesterday. There's another quick sniper. This was yesterday's bear call spread. Out 30%, $800 in 6 minutes. I mean, we're having a blast doing this. It's a great way to start the day. You got it. Amen. All right, folks. Any other questions, concerns, smart remarks? By the ways, like I said, you can join me next week for Full Throttle. It's 3 days of live trading and training. It's free to join. I know David helps me promote these things. We have a great strategic partnership with them, and I love Anka. She is a great American as well. So David, hey, brother, thanks for having me, man. I appreciate it. Buy this dip with both hands. You're going to be sorry you didn't in about a month.
All right. Thanks, Matt.
You bet, man. I'll see you next time. Thanks for having me.
Yeah. All right, everyone check out Matt's link there. And all right, so just a reminder for everyone, I am recording each of these sessions individually. So if you miss anything, you will be able to catch up with the archives on TimingResearch.com. Also, if you search for Timing Research on YouTube, Substack, or your favorite podcast app, you can get the archives there as well. And I'm also live streaming to YouTube today. So if you have to leave the Zoom room for any reason but still have access to YouTube, you can watch live there as well. And so next up is Price Healy. Price, are you there? I see your charts. Looks good. You're muted still.
Unmute. There we go. How's that?
Okay. Yeah, sounds good.
Perfect. Thanks for having me.
Yeah, thanks for being here again. So I'm just, are you ready to start?
Ready when you are.
Okay, I'm just double checking my setup here. It looks good. Okay. All right, I'm just going to start my recording again, and then you can start your analysis. So I'm recording again now.
Beautiful. Thank you, David and Anka, for having me. It's always a pleasure to be with you on these Analyze Your Trade events. And we're talking about the current market environment. You know, I've got some simple charts up, but basically ones that are my basically daily go-tos on indicators and setups here. And so we're looking at the S&P. We're going to start there. Pop in any questions you want via that chat. I'll seek to get to other people's stocks that you might want to look at and symbols here on my system here in just a little bit. But look at the SPY here. Look at what we're having. We've had the breakage of the 200-day. You can see that basically we bounced up. We tested it almost right into it yesterday on that rally bounce. And then today we immediately gapped down after having gapped up the prior bar. That actually makes yesterday's action with the low at 654 and change. And you see today's gap down. Essentially, we bounced one time to kind of test that 654 level, but it almost looks like an island unto itself. It's not quite an official island, but usually when you get a gap up followed by a gap down and this bar is left as an island, it's usually a bearish short-term pattern. That pretty much fits with just about everything else that's on this chart right now. I mean, I don't want to be too dire. And yes, as Matt said in the prior presentation, Trump has eventually bailed out the market in the past, the taco trade and what have you, to come in and provide a backstop perhaps at some point. But if you're going to compare this environment right now to where we were last March and April, you can see that it's closer to this fresh breakage that we had in mid-March, the one bounce that happened in late March. Oh, by the way, there's exactly a year ago, March 26th, we were testing the 200-day. As we reversed back off of it, that next, about 7 or 8 trading days? Of course, the Liberation Day announcement happened after the close there on April 2nd last year. So we were already starting to head down right before they got the little bounce of hope of what he was going to talk about. And then when he pulled up his tariff board and talked about tariffing out the wazoo, the markets got creamed for 3 days, right? Then he came in with his great buying opportunity, 10% rally day, et cetera. And eventually we based out and bottomed out. Now, most of the indicators here would say either if you wait for the 200-day, of course, you're not going to catch the bottom. It's going to take a little bit of time, but that's okay. That's one way to do it. Another way is look at the DMI lines, which are the red and blue lines. Blue is net positive directional movement, net new highs. Red is net new lows. You can see, of course, we had been in that negative directional movement since the late February action last year. So we go to current status, and you see we've been talking for basically about 2 months now about how the DMI lines flipped. And I said, as soon as we get a close underneath this low, that was all the way back on January 20th, that low was 684.77. So that 685 level got tested. I'm sorry, take that back, 676.5, got tested into that mid 670s level back here. It didn't close under it there, but you see it finally gave it up just a couple of weeks ago. We basically started closing under that 675 level officially on March the 6th, right? So this is just 20 days ago in calendar days, just you can see just about 3 weeks ago. Coincides with what's going on with the bombs dropping in Iran and the Middle Eastern conflict, and of course but you know what happened with oil prices, right? So we're going to look at USO oil prices here in a second. Of course, it's classically bullish, right? We're going to get into that in just a little bit. But I want to just say, be careful here on a day-to-day basis. Do not buy with both hands just yet, right? We're waiting for signs that it's safer to go in the water. When you have this green ADX line trending up like it is, you have the CCI having broken down under the minus 100 threshold and trending lower. In fact, it got all the way down below minus 300. That's a pretty rare reading. And we're at the risk of undercutting it here. That low, if that gets undercut, the recent low from last week, that was 645 roughly. You see today's low so far, 646 and change. We undercut 645, and you've lost all this support here, and you're basically starting to mark last key lows here, like 640, then 630. Then that spike low down all the way to 619, about 620, right? So you're starting to put downside targets in place of where could we go next? And you don't want to catch a falling knife. In fact, you can make a lot of money buying put options. We're going to show you a put option. We made a double in a day, just under a day on Tesla in one afternoon, out the next. Late last week, and we'll show you that here in just a little bit. But the point is that, okay, if you look at all the major indexes, they pretty much show the similar kind of a pattern, right? The Nasdaq QQQs broken. Oh, by the way, these bands up here, these are 80 bar Bollinger Bands with 2 deviations. So I use that a lot for really seeing where the acceleration phases are. And we are accelerating down. The Qs have undercut last week's low. This is bad, okay, in a short-term basis. And it's actually good if you're a put buyer, right? So you have to kind of say, which way are you looking at opportunity? Obviously, we tend to be patriotic, and say we want the markets to go up over time. But guess what? If the markets are going down, if you're worried about your other portfolio positions and some of your longer term holdings, you can make money and put options as in the short term to help offset and hedge some of that as you get these bearish signals, right? The Russell, not quite as broken. You see it's holding its bands, holding its 200-day. That blue line is the 200-day, of course. And then the Dow, you see, has broken. Yesterday did retest into the 200-day from underneath, fail, close underneath, and now we're moving back down. Not as bad. The Nasdaq, the Qs are the worst looking of the four, right? And the amazing thing before we look at oil, you look at bonds and you say bonds are not doing well, right? But a month ago, everybody thought we were going to cut 1 or 2 times by the Fed this year. Now we're looking at almost a 50% chance that the Fed raises once this year instead because of the oil price shock, right? But the most shocking move of all recently is gold, right? Gold, I've been talking about it in prior months very bullishly, but I said things changed. That spike that happened there, that last trading day of January, we of course bounced back. That was back here. You see, we finally got our DMI lines converging off this spike low here in late February, and again converging one more time off of this low. That low needed to hold. That was the March 3rd low. That was 459 basically, and you see that we undercut 459 on the gap down right there at 444 and 3/4 on the close. I go on closes here, folks, compared to my extreme inflection points are set off of a key high or a key low. So when we close past a level, that tells you that the institutions are not buying that dip anymore. And in fact, from that level, we got quickly down to about 400, 399 at the low there a couple of days ago. While we bounced hard yesterday, there's your gap down. There is your bearish island reversal saying that this bar yesterday at the low is 412. We gapped down today to 408, only bounced to 411. That space in between on those 2 gaps up and then back down makes that bar yesterday hanging out as an island until we get back over 420. That's if you're bearish, you're saying if it holds 420.66 on a key set of closes, this is a bearish trend in motion. The ADX is trending. CCI hasn't had quite a confirmation yet. If it closes under 400, that would be bad as well. I'm not that bearish on gold, but I'm saying the short term is perhaps setting up for a test eventually back towards the 200-day support, which is more like 376. Okay, so 400 is a first support, no doubt. If you undercut 400, you could catch a move down towards 380-ish if we close under 400. So that's all it said. Now, oil has been the big story to the upside, right? There's why I use the 80 bar bonds, right? We got to close outside of it and then a confirmation follow through back here January the 28th. USO is the vehicle that tracks oil prices among the major ETFs. And you can see that it closed on that confirmation day outside the bands here at 76 2/3, 76.62, We gapped up to 80. Then we did have a gap down a couple days later, but that was a key test. I like to see these tests back inside of that upper 80 bar Bollinger. This is with 2 deviations. I know most of you may look at a 20 bar Bollinger. I'm looking at the 80 bar for some extra stability. To see that generally speaking, it'll touch it, but stop there. But when it gets outside there, it tells you there's an unusual trend in motion. We kind of tested back into 75. We didn't close under 75 here. We hung right in there and then started to pop back up. One more test back under, doesn't close under that $79 low, even though it trades under it the next morning. It doesn't close under it. That's why you wait for closes. We pop up. Look what we just had, the spike down here as people were hopeful. Maybe there will be a piece that Trump keeps saying Iran wants to negotiate. Iran saying no publicly, that they're not willing to negotiate. So of course, you have two very different views here, but oil saying 106.5. If we hold that on a closing basis, it's still an uptrend. We tested 109 yesterday. Now today popped back up to a high of 119 almost. The point is that this is still a bullish trend in motion. When CCI is above plus 100 here, that also happened as we got our band breakout. We got a test into it here, into that plus 100 level. We call that a retest. You get bends in the green 80X line. That's also called a retest. That bend was right there as well. So it's all matching up. That helps you set your key stops to say a close under 106.45 gets you out of the bull trend. But in the meantime, it's been a potent one to ride to the upside. So you start to think about major stocks, right? You think about your NVIDIAs, you think about your NVIDIA's been stuck in the mud, right? It's been going nowhere. That's not necessarily that bad of a chart comparatively, but you can see there's a lot of line being drawn in the sand here near 170. You can see that it's looking better than the QQQs. Remember, NVIDIA makes up something like 9+% of the Qs, NASDAQ 100. So it's actually outperforming because the Qs undercut this low from last Friday. NVIDIA hasn't yet. It's on the bubble of doing it around 172, but it's saying NVIDIA's acted a little bit better. Whereas look at some other ones and the big names that make it up. Microsoft is just in a free fall, right? Microsoft, this is why you always got to use a 200-day moving average as your guide here, right? NVIDIA just barely broke it, so that's now kind of on the danger zone if it undercuts that 170 zone. But you see Microsoft start to undercut it. One day doesn't make a new trend back up. It closes right back below it. Tests right back into it here. You see back in late January, right before earnings, and then gaps down on the earnings, and then steady as she goes to the downside since, right? You look at that red DMI line above the blue DMI line every step of the way, except for that one. We call this a DMI kiss. When it tests back a possible cross of the DMI line that high is something I'll watch real closely and say, okay, guess what? That 483 zone is a key high. It tested above it intraday, but closed under 482. So you always watch what happens on those closes. And so you see Microsoft is in rough shape, right? Of course, you had the news on Meta and the whole getting pummeled today on this news of Meta and YouTube having an impact on these on these online kids impacted by these online, basically social addiction, right? And so you see that is a massive undercut, right? A massive breakdown. Everything's been pointing to the things were already breaking down if we undercut that low, which happened. So we undercut the bands here, and you say, don't buy the falling knives, right? That's too dangerous. In fact, that's where you can make a lot of money on bear positions. Apple is hanging in there. Apple's hanging tough. So it's acting a lot better than the rest of the Magnificent Seven names. And we know about Oracle and its data centers and how much pressure they've been under. Obviously, it's broken its 200-day for quite a while, since late last year, basically. So, but the other one that I was going to mention that we'd love to trade is Tesla. And Tesla, you see, has broken its 200-day, got close to a test of it here yesterday. It hasn't accelerated underneath the Bollinger Band there for more than one bar, but we actually profited from this last Thursday into Friday with a quick double right into this based on our simple moving average system. In fact, let me just tell you about that just real quick, because we're going to do a super special for you, and then I'll come back in and analyze your charts as well. Let me just show you. I'm going to show you that Tesla chart in a minute, but I want to thank you for coming in here and share with you something that we'll do for you here. Basically, what we're offering here is the ability to get a big free content here. If you're one of the first 100 traders from today's event, to take advantage of this, we'll keep it out there for the first 100, then we'll shut it off. But it's basically free access to coaching training that I've done across a lot of indicators that I've used over my 37 years of trading experience in stocks and options. So everything from like the CCI I was talking about here, the DMI and ADX lines talking about here, the bands, I talk about acceleration bands, an indicator I developed that was kind of piggybacking on what John Bollinger did with Bollinger Bands. And then, of course, things like Larry Williams' percent range, percent R, the big trends way, what we call big trends bands, moving averages, MACD, you name it, a little bit of everything in there. You learn basically 10 different sessions of video coaching and training. So it's something where I basically did this for a number of my coaching students at a much higher price point, and basically I'm giving it away to say, look, I want you to learn. I want you to understand what I'm talking about. I don't want to be speaking a foreign language. Usually these would be billed out to coaching students at $197 a piece, so 10 of them would be under $2,000, just under $2,000, $1,970. You're getting it today for free with my thanks to David and Anka and the team there to say we appreciate you having us. So that's a link that you can use, TimingResearch.com/big trends. If you're one of the first 100 to lock that in and start benefiting from this training, watch it. You'll get an ability to reach out to us if you've got questions on it. We are all about it. Now, talk about something really simple, the simplest of simple, the simple moving average. You can basically plot the last however many bars closes and come up with a trend line that's called the simple moving average. We use that on Tesla in our Tesla options trader system, for example, to say that's that light blue line. Okay. When you're looking back over about the last month's worth of trades in Tesla, this is a daily chart, daily candles. Of course, red candles, we close below where we open. This chart the whole way over the last month said you should never be buying calls, basically. And sure, it tried to peek its head above there a couple times, but you can see no follow through, right back below. So the only thing we can consider while it was going through that last month's worth of action is consider a put trade. Doesn't mean we're going to trade a put every day. We're going to pick our spots. We've got some rules that say we like to see a gap. Tesla had gapped last Thursday morning and into Thursday's close. You see it kept going down. So not only was it undercutting some recent lows, but it was saying, look, after that gap down, guess what institutions are doing? They're not buying up the dip and saying, what a great buying opportunity. Thanks for the gift. They're saying, we got to sell. We've got too much Tesla. We need to keep selling. And it keeps going down from the gap lower. So it closes lower. So at that point, in the last half hour, we'll send out to our Tesla options trader subscribers an alert to say, we want to buy puts on Tesla just for the next 24 hours, the next trading day. Right, we get in late one day, even if we're out the next morning at the open, there's no day trades in this system. So you can even do this with a small trading account and never have a day trade. No worries there. But you see, we were recommending the 375 strike puts that were going to expire the following Friday, about 6 trading days later, on now what's now tomorrow, the 27th. We were already out of them last Friday on the 20th because you saw it open a little bit lower, but it just kept going down, down, down. Our rule is whenever we can double an option in this system, we take the double and run because it's a 24 hours or less hold for 100% gain. If you invested $625 on a contract, you cash it out at $1,250, you make $625. Of course, if you're putting in $2,000 worth, you could get 3 contracts in for like $1,875. That turns into 3 times $1,250, which is $3,750, and you make a profit of $1,875 minus a commission of what? $3 in, $3 out at most, $6 round trip commission. Never a better time to be an options trader than now in my 37 years of options experience. So you can see it popped down. You can see after we got in about 380, we bought a slightly out of the money put, right? This is not for widows and orphans. This is definitely on the higher end growth and risk reward side of things. But the beauty of it is that we're not going to hang around too long. If it loses 50%, we get out, or by the end of the next day, if it's not gotten its double target or its stop loss, we just cash it out at the end of the next trade day at a time stop. See, it was all the way down to about 368. And of course, our options were going in the money, but of course, they still had another week of time left as well. So we caught about in the neighborhood of about a 12-point move there in Tesla in 24 hours, which was good for getting about half of that, 6.25 points of that booked by Friday afternoon. So that's how we did it. But the point is, that's just one piece, the simple moving average piece of that whole 10 session technical analysis. So tons of value, about 10 hours worth of content there as well. Yours today free for being in on today's event and going to that link and just going ahead and locking it in before this gets taken back down, TimingResearch.com/big trends. Now let's go back over to the charts. Okay, I want to make sure I haven't missed some requests here as well. So I'm going to look in the chat window here and see what people are asking about. We'll pop up some of your stocks you want to take a peek at here as well. So like Rob mentions RCAT, so the beauty of course, any kind of a technical setup is that you don't have to really even follow a name that closely to really see what's going on. This one looks like it hasn't really had super strong trends characteristics. At the same time, it is in a net positive trend there, Rob. You can see our DMI lines have kind of consolidated a couple of times where we get the red attempting to cross, and we're kind of coming close to that here. Maybe one more day down with this market weakness will be a key test point. When we get those test points on the red line trying to cross the blue line, that's where we're saying, okay, this is a crunch time area for the bulls. But you have to assume that the bulls have the ball when the blue line's been heading up, the red line's been coming down, stock's going higher, and then the test point marks a pretty good reentry, or at least to reset your stop. And if that violates that low, you got to get out. So the last one that happened was right there on the February 27th low, which was at 1124. I'll often buy into the teeth of those. I call them DMI kisses because you're getting a lot of people would say, oh, they're crossing, the trend's changing. And a lot of times those 1 day test points where you get a slight cross is actually a key kind of a fake out where the bears are betting it's breaking down, but the bulls are just getting a test but not really being broken yet. If it closes under that 1124, then you're out. You could basically, when you're inside the bands, you could trade it back to the bands. That's about where my target would usually be, about just under 17. Sure, it went to almost 19. You can't be greedy. You have to just have a game plan to say, how am I going to take profits? How am I going to then wait until the next test point to hedge that, right? So the beauty of this is that you can just really focus yourself on how this works and just say, it's where do you get a good low risk entry? That's your first kind of goal here. So like another one that just came in that Patrick asked about, CSTM, okay, Constellium. Okay, this was an example of a classic, beautiful band breakout, very strong upside trend that happened as we cleared through there in early December there, Patrick. You can see had our ADX trending. We had our CCI above plus 100 and confirmed. We had basically everything going its way. And so the only time I get worried is either we lose those DMI lines, which you see we had a DMI test right here when we were up to about 24.43 was that low back on March 11th. And also you can see our CCI was retesting just a little bit earlier and right at about that same level, 24 and a third. Now, the sad part about it is, of course, sometimes this happens, you get a gap through your level, right? It never breaks until it has the gap down. It does come back up. I don't panic intraday when it breaks. I wait for the close. The close was below there. You get out at the close, 23.72. Sure, it bounced back a little bit, but look what happens. Yesterday's bounce is almost a kiss the other direction, meaning that yesterday's high looks like resistance, and you've got another island reversal with the pop down. It's still acting better than the market, but you now are under pressure. The directional movement lines say that the bears are taking the ball here in the short term, even though, it rallied up. Isn't this a strong stock? Well, the bears have the ball now until we get the DMI lines headed back in the right direction. The CCI lines are back into no man's land, mildly positive, but basically saying, if you're a long-term investor, sure, maybe you're willing to ride it out and kind of put a line in the sand down here, 22 or so. That's in line with about the 80 bar moving average. 200 days all the way down at 18, right? So you're trying to preserve giving back too much profit when you look at this type of a name here. So what about Cipher here at CIFR, Cipher Digital, right? So again, look at where your sweet spot is. Your sweet spot for a true big trend, that's the name of my company, bigtrends.com. I find that you want to be on the big trends, not just for making big money, but also the speed in which you can make it, right? So when you're outside these bands, sure, you're going to get retests. You see our ADX bent down, but it didn't break right back into the band here. Had another one of a couple of those little test points back into the band here. CCI line still holding, DMI line still holding. They finally gave it up here a little bit late in this case, right? This is why there's nothing wrong with taking some partial profits. Of course, if you're an options trader, part of what you can also do is that you can always take your profit in an existing position and roll up some of those profits into a higher strike price, right? If you were buying calls on Cypher back when it was at 9, 10, 11, 12, and then it's up here into the 20 level, now you're saying, okay, now I can be trading the 20 calls or the 18 calls, or if you like to trade out of the money, 25 calls. Point is, you're going to eventually lose on some of those that you roll up. But if you don't roll all of your position up, but just your profits up, that's a way you can basically have a risk-free trade and keep participating. Where is Cypher now? No man's land, right? It's not necessarily a bad thing because it's above its 200-day moving average. You talk about like in the whole like digital mining world here of cryptos and whatnot. But you can see it's basically crypto has been underperforming lately, just about anything related to crypto. The DMI lines went net negative here. We've had several key test points right at those highs, and each one of those has pretty well held. Yesterday's test is the next key high at 1667. You get through there, the bulls could start going again, but right now it doesn't look like it's going to anytime soon. So you just kind of move on and look for greener pastures. What about Western Digital? This is one that we hold in our long-term stock doublers portfolio. We bought it back here around August on the early breakout here. We weren't early on it. You can see that it had been rallying for a while. But the point is that our stock doubler system looks for a really unusual strength, and so we still hold that stock in our stock doublers portfolio. But you can see the last test was down here on the spike down to 244. It bumped around for a couple days near that, and then it started to bounce back. We're getting close to it here, Kathy. The DMI line, see how they're converging? The positive line is 19 and a half, the negative line is 17 and a quarter. So we're maybe another day away. You can see it's kind of also retesting that last little high that was resistance around 280. Today's low just down to 275 actually. So I'm saying we're close to that kind of a test point that'll really be key. My problem is, of course, you've got to always think about the sector that you're in. If you're in technology, whatever you're going to define your sector as, of course, it's probably more cloud-based, right? Like XLK breaking down, right? You can see that's the technology sector as a whole. And then, of course, you've got a variety of those others. So just a few more minutes, David reminds me here. But basically, you look at this and say, that sector could pull all the tech names down with it while the rotation's happening outside of away from tech right now, right? I mean, so tech with AI has been such a big driver of gains, but you see now we're going through the rotation. So this is where you rotate through other charts, right? And a sector like, say, XLI, the industrials, that's not the same as the Dow Industrials. Remember, the Dow Industrials have tech. They've got NVIDIA, they've got Microsoft, they've got Apple, right? So basically, it's not true industrials. XLI is, and so you're starting to say, okay, well, it's broken on the DMI lines. It's not really where we want it. What about healthcare? XLV. You start to think recession-proof sectors. Boy, it's not acting well right now. Right. So you can see that a lot of the sectors, what about financials? Right. With this change in the Fed's direction, you can see this has already been forecast since mid-January when the DMI lines broke and followed through to the downside, officially bearish at that bar's close at 54.23. Now we're at 49. Right. So it's already down 10%. And basically that was well before last week's sort of Fed about face. And so you can just see that it's like, well, where are you going for safety then? Utilities? I mean, it's okay, but certainly not something that we're jumping up and down about. So what about consumer staples, right? Recession proof, back to the 200-day DMI lines are broken. So guess what? Cash is a legitimate position when you're not finding good charts. A lot of people are trained to think, well, you got to be invested all the time in the markets. You really don't when you start to see that basically there's no safe haven. So the one sector we haven't talked about is energy. There it is. There's your sector that's dominating the money flows, right? Dominating on every indicator we've talked about here. The breakout outside the bands happened right near the start of the year, officially confirmed when we got through that next breakout high, which it was, I look for follow through confirmation, which happened on that close. 48.06 would have been the entry based on the band breakout here, right? That saves you from fake outs like this one back here in late September, right? So it tries to break out for one bar, the second bar, one bar doesn't make a trend, one candle doesn't make a trend, the second one confirms it right there at 48.06. Now we're sitting here at 61, right? That's all happened in less than 3 months. So the point is that, of course, you could look at XLE, you could look at the oil services stocks as well, OIH, see they got through a little bump here, but you see that came right back into the DMI test points right at the short-term lows. So I'm out of time for now, but make sure you go to that special link I set up for you to take advantage of a freebie, 10 hours of free content that I previously reserved just for my coaching students. You get it today for free if you're one of the first 100. TimingResearch.com/big trends. Let me hand it back to David so you can get on with our next great speaker and fellow trader. Thanks for having me, David.
All right. Thanks, Price.
My pleasure.
Yeah, thanks for being here. Yeah. So yeah, everyone be sure to hit that link in the chat and get Price's course for free. So that's exclusively through this event. And
That's right, David. We don't do that for anybody else, so we wanted to do that for you. Thank you.
Really appreciate it. So thanks,
Hey,
Price.
my pleasure.
And okay, so yeah, just a reminder, I am recording all these presentations individually, and the archive will be on TimingResearch.com as soon as I can get it processed. And next up is Silas Peters. Silas, are you there? Hey, I think you're still muted.
Hey, Dave, can you hear me?
Yeah, sounds good.
All right. How's it going?
Good. We're having a good day here. How are you?
All right, doing good, doing good. Just watching the markets here, do a little bit of trading, and excited to share some information with your folks here.
All right, sounds good. Yeah, you should be able to share your screen now and get set up.
All right.
And everyone go ahead and enter some symbols for Silas.
Yeah, let's do that. Let me get over to. All right, guys, if you can do me a favor and just let me know in the chat if you guys can see my screen.
Yeah, I see it. It looks good.
Okay, cool. So I guess let me ask you this. So I've got 30 minutes, correct?
Yes. Correct.
Okay. All right. So how's everybody doing today? Hope you guys are doing well. We're going to spend about 30 minutes together, and that will put you right into the last hour of the day on another exciting day. Let me ask you guys this, I guess, before we get started. Are you guys primarily day traders, swing traders? What do you guys, are you guys want me to look at some intraday charts, some swing charts, daily charts, any symbols? I'll kind of let you guys pipe in there and let me know if you have any specific interest. If not, I'll just kind of run through a basket of things. I'll run through some swing charts. I'm going to kind of do what I normally do to my our weekly member sessions, is kind of do a top-down analysis of the major markets that we follow. It's going to be all the indices, dollar index, 30-year bonds, crude, gold, silver, some of these major key global markets. And then what I'll do is then we can, hopefully we have some time. We'll get down into some of the lower time frames, kind of show you, how I approach what I'm looking at and things of that nature. And if you have any specific symbols, we'll take a look at those as well. So quick top down here. This is obviously a daily chart of SPX. I've got over here two other time frames, a 4-hour and 1 hour. So I always kind of start with the higher time frame, showing me daily and weekly levels. And right now we're, with the equity weakness, we're starting to take out some of these older levels that have been in play. These blue horizontal lines, these represent GEX levels, gamma exposure levels. So we're sitting at one right now. We're trading through it. 6,500 is pretty critical there. It's traded 6,495. This is where the market did get, quote unquote, propped up, so to speak, on Friday. We got that big 200-point gap open on Monday, and all the rallies, as you've seen, as we've been rolling over, have been sold, right? So we've been, telling our guys, expect rallies to be heavy. Expect rallies to be heavy. We are in weak or negative gamma conditions. We have very thin or very poor liquidity as well. So what that means is when we have a thin environment and we have negative gamma, that means that essentially all of these moves that we're seeing, are not going to be surprising to us, or should not be surprising to us. And those moves are going to be greatly exasperated because there's less liquidity in the markets. That liquidity, as we start, really start catching the markets falling, those will start to trigger a volatility in systematic based program funds that kick in, and that's kind of what creates that snowball effect to the downside. So right now we're at a fairly critical level. If we kind of peel back a little bit more, we can see that 6,400 is going to be our next major kind of line in the sand. This is going to represent a couple of key levels for us that plot onto our chart for us, and that's also going to coincide there with another GEX level to the downside. So that's basically kind of what we're looking at on the SPX. We're going to see the same thing here on the S&P futures, just a little bit of different numbers here, 67.50 to the upside. To the downside, we do not have a whole lot of things in our way. That's unfortunate for the bulls until we get back down into the 6,200 area. Now, I'll share some other key data with you that you can take it with what you will, but what I'll do is try to incorporate institutional based data points that I get on a weekly basis. Where and how does that match or marry up with what's going on technically? And then we just look to make trading decisions based off that. So I guess a couple things that we can look at is talk about the current equity sell-off that we are in right now. There is a historical playbook that we can kind of keep in mind, I guess, in the backdrop around geopolitical shock. So it's essentially is that the historical playbook for a sharp sell-off during these events or during these shocks is about -6 to -8%, but then finding a bottom on average in about 3 weeks, and then a full recovery in another 3. And that is usually long before the underlying escalation is resolved. So what we're kind of looking at here, the current sell-off is in the vicinity of a typical bottom in size and timing. But as we know, this is probably a fairly unique situation. Equities are going to remain glued to oil prices, and we've got to look for a drop in oil price volatility from extremes as a marker of escalations starting to get priced in. So one ticker that you may want to look at is OVX, which is crude. It's basically the VIX equivalent for oil. And here's where we popped up a couple of weeks ago when that escalation kind of started beginning, and then we can actually see what happened prior to that. But then here's where we peaked, and we're going to need to see this fall a little bit lower before we can get real confident and get more risk on back in the equity markets. So a couple other markets. So we were looking at the NASDAQ here. NASDAQ futures kind of on a one-way ticket to the downside. We're looking at 23,700 as our next, kind of really key area that we need to hold. Below that, our levels, are already in place where we can clearly and visually see, what lies ahead and or what lies above should we do start to flip back. The Dow has actually been the cleanest. It's been very weak, dropping, from 50,000 round number all the way back to 45. You can see exactly where we stopped and where we are now. So I call this kind of in the gray, stay away, or no man's land. There's no real clear picture here until we get back up to 47,250 or back down to 45,400 there on the Dow Jones. Russell, again, all these key levels are mapped out well in advance so we can get an idea or clue of where, if we are falling, well, where could we possibly stop or have a reaction, and then i.e. be looking to become, re-engage in buying again. So we use these levels for areas to get position to the long or short side. But then once we are in the position, we use these as targets. So if we are in a longer term position, we're trying to, take it back what we call level to level. So back there to 26,600, you got to realize and understand that of course is not going to be, it's not a one-way ticket up. We're going to have some bumps and grinds there along the way. I think it's worth looking at the VIX quickly. We go over to VIX. Even with the geopolitical backdrop becoming more and more serious, VIX is not really launching into just an all-out, fresh panic spike. We're certainly holding a bid here. The market is still demanding protection, but it's not behaving like a full-on disorderly liquidation event in the markets. I think the takeaway here, by just looking at the VIX index, is that the tone certainly remains fragile, reactive, and most importantly, well, I don't know about most importantly, but very, very important is just headline. We are in a headline sensitive market environment. So, we are down 90 points, 100 points in the S&P right now. We realize the type of environment we are in. Any headline, any tweet, any news announcement, whatever the case may be, could immediately send this market another 100, 200 points higher. Simultaneously, it could send another 100 points lower. That's just the environment that we're in. So, we look at some of these other markets. Oil, oil right now is the most important market on the board. As long as that condition remains, oil is going to continue to influence inflation expectations. That's what largely spooked the market last week. With monetary policy expectations now shifting, it's going to influence equity risk appetite. And so we want to really keep an eye on oil. We always like to look at oil anyways, but it's more than ever, at least in this time, particular moment of time, it's extremely important. Now, I think if I'm correct, somebody maybe can correct me if I'm wrong, but I think the 5-day peace window or non-strike window, whatever we want to call it, I think that expires on Saturday. I think we have a couple days left. And just note that that happens to fall on a Saturday, right? So it's no coincidence that we get a lot of these types of announcements and these surprise news headlines over the weekend when the markets are closed, right? And that's why we get these big gap up, gap downs like we've been seeing. Even in the overnight during Asia and Europe, we're seeing fairly significant gaps on the U.S. Open. So just be careful and cautious and use defined risk. Structure your trades appropriately. Probably a good time to reevaluate your position and sizing across really all risk assets at this time. So right now, as far as oil is concerned, usually these types, it's a two-sided conversation. Usually these type of events and these price spikes that we've seen are short-lived, but it's really going to be a matter of what happens if we see any kind of de-escalation. So it's not a market that we're looking to kind of go all out and start fading. There are risk calculated moves that we've been trading, and then we're also participating in this on the lower time frames where we can take a slice of the pie, just trading price action during the course of the day, and then being out and being flat, so we can, when we lay our heads down on the pillow at night, we can rest easily and not worrying about 10, 12, $15 spikes in markets like crude oil. All right, so gold, we know, of course, gold, silver, precious metals have been hit hard. Gold just posting its weakest week since 1983, I think it is. And you see this really across the board here. And a lot of folks thinking that that gold and silver is the place to be, the safe haven asset. Well, the environment has changed here. Not only are we seeing liquidations across the board, whether it's margin calls and it's kind of a sell now, ask question later type thing when the markets really get spooked and start to get on that wheel to the downside. The Fed is no longer signaling near-term easing. The market's entertaining now the possibility that energy-driven inflation could keep policy restrictive for longer, or even push discussion back towards further tightening. So if yields are going to rise, then treasuries are now offering yield, gold does not. And so capital starts rotating as a result of that. So at the same time, we start, if we continue to see a bit in the US dollar, stronger dollar, that's also going to create another headwind for precious metals. And so, all that combination there has turned what many assume would be a bullish backdrop for gold into something very different. So it's not being traded as a war hedge right now. It's being traded through the lens of liquidity, real rates, and capital allocation. So it's kind of my 2 cents there on some of the major markets that we follow. Silver, same thing. These are areas that we've been kind of, lines in the sand that we've been outlining and watching. And it's simply, it's not okay, we have a level here and we have a level here and we have a level here and we're going to buy right at that level or sell it right at that level. It puts us on watch. Okay. It puts us on watch and where we expect a market reaction. I'm simply expecting a reaction at those levels. Can they go trade right to the level and bounce? Yes. Can they trade through the level and the reverse? Yes. Can they trade through the level and keep sliding? Absolutely. So these put us on point. You can see we have had reactions, not once, not twice, 3, 4, 5 times. And those are tradable areas for us. Those are tradable areas. We go down to the lower time frame and start to look for opportunities there. And we wait for confirmation, obviously. So those are kind of the key markets I did want to run through. Let's quickly come over here to this is my lower time frame template, and you can see I'm really looking for a move back down into the 65, 20, 65, 15, 65, 10 area. We've completely come back and filled, all the imbalance that was left from when we woke up on Monday. I think it was around 6 a.m. Central. The S&P was up 200 plus points on the news that they're going to negotiate or the war was ending or whatever the headline was at the time. And then we quickly retraced that move throughout the day and through the past couple days, and we are retracing that even further as we speak right now. So the same process that I use over here on the higher time frame, daily, weekly, 4-hour, 1-hour charts, I also use this as my day trading template as well. So I'm looking, to sell at our key levels, and then I'm looking to buy at our key levels. And so right now, we are not at a key level. We're not at a key level. We need to get down into that 65, 20 area. Now, if we come over to the NASDAQ, we are at a key level and we are looking for confirmation. So you can see this is why, patience is key here. Michael, I don't see any stocks. If you typed in your symbol, then yeah, we'll analyze your stock, but I don't see any of your stocks. So until somebody wants to put in some symbols, I want to just keep chatting. And I will get Cardinal for you there, Patrick. So here we are in the NASDAQ. You can see the reaction. This is exactly what we would expect. And now we look for buying opportunities on the 2 and 1. So somebody did ask me to take a look at the NASDAQ, I believe. Day trader, please look at NASDAQ. Yes. So this is what we're looking at. What's your name? Arcost. So this is how we trade on an intraday basis, waiting for us to trade into multi-higher time frame levels and confirmation over here on the 2 and 15. All right. So Rob, let me go back to you. I did analyze silver futures, but you asked specifically for SLV. So here's what I'm looking at on SLV, 5982. Let's call it 5985. That's what I'm going to be looking for. You'll see that from this high down to the last major swing low will not get us right at the 618, but it's pretty close. So all this right here is fair game for a reaction. 618 and a daily level. So we'll call it 57 to 60 will be an area that we'll be looking for a reaction. As far as seasonality of silver, just to give you a little bit more data context for you to work with. I don't know what your position is, or if you have one, or if you're just looking for some kind of analysis. But silver going back to 1970, this is where we are in green today. And these are the seasonal expectations. So it's a little bit of a bumpy ride, a little bit choppy, but seasonally here at the end of March, should see a rise in precious metals up until about mid-April. So it's about a 30-day window or so before it tapers off and kind of trades choppy and sideways through the rest of the month, through the rest of summer, really through the rest of the year. So there's some seasonal opportunities here. You just got to, kind of pick your poison, pick the low-hanging fruit. Let's see, Cardinal. So if we go to CAH, again, this is one that I will call kind of in no man's land. So we've got, we pushed up higher. We turn around here at 228. We're in the middle of a kind of a longer, higher time frame sell signal. And if we do start to break down here, I would say break down below that 205, 200 area, we've got a lot of room to the downside that we could possibly fill. So we got the obvious gap there. We had all of the imbalance left from that earnings gap because earnings gap. So it really could open the door back to 150. I'm not saying that we're going to get there. That's, I'm always, if I'm looking to short a market, I want to look down and to the left. If I'm looking to get long, then I'm looking up and to the left. Basically, I want to look at past or prior price history. And then if somebody like you guys are throwing me a symbol, one, I'm going to go look at the chart and break it down from a technical analysis perspective, but then I'm also going to go plug it into my seasonality software. So Trend Insider, I'm going to say, okay, does this line up? And so if we come over to Cardinal Health and we look at seasonal expectations, we've got data going back to 1983, and you can see that Cardinal Health is following its historical patterns to a T. It's following it literally to a T. Maybe a little bit more strength here than normal, maybe a little bit more weakness than normal, but essentially we're following the path, right? And so that's what we're looking at there as far as monthly average performance. You can see or expect weakness here basically through May. And when we see weakness, these are going to be areas where we're looking to be buying at favorable points on the chart. And then, these areas right here on periods of strength, which we've seen in Cardinal Health. If you see histograms high and full of strength, followed by negative histograms or negative performance, well, this is where you want to be looking for shorts. And so we go back to January, February. This is the ideal time frame. It's the data is kind of forecasting that for you. It's just to be used as a data point. So Michael, as we wrap up here, man, 30 minutes goes fast. Palantir, again, not real clean to me. Not real clean to me. So, I'm looking, I like to look at these kind of upper and lower quadrants rather than trading in the middle. But as far as possible areas here, we could just do fib analysis. And, we want to be buying anywhere, from 50, 618, 786 areas. And you can see that this 50% retracement level lines right up with one of our zones here where we did have a nice reaction back in mid to late February. So right now, we've got this kind of 150, 155 area kind of holding prices. Obviously, the equity markets are weak as well. So it looks like the path of least resistance is probably going to come back and revisit that 138. If we plug that in to kind of see where we are, let's go up to old PLTR. We go. I'm not sure what UMAC is, Rob, but we'll take a look at it. I don't know if I've got seasonal data on that. So we only have data for 6 years on Palantir, and here's where we are. We went kind of counter seasonal there so far this year, but just based on history. We do typically like to look at, at least 5, 10, 20 years, as much data as we can. In this case, we only have 6 years to work with, but it looks like we will be going lower, put in seasonal bottom right there around mid-May. Okay, so based on that, you'd be expecting the market to kind of do this, and you'd be looking for a bounce higher. All right, so a couple more, and then we'll go ahead and wrap up. So unusual machines. This is one that be a first look for me on unusual machines. Let's actually see if we have this in our database. I'm not sure. UMAC. No, we don't have that one. Let's go here. So same thing here, just get drugged down with the broader market indices. As far as next areas of interest for you, what we like to do is just, do we have fib levels that kind of line up with our key zones? And this 10 to 10 quarter area looks a little bit more attractive to me. Is it something I want to buy right now? No. So you can see that we're in the middle of a 3S code pattern, which is our 1, 2, 3 top indicator. That's this right here. That was this cell right here, and that was this cell right here. So it trades lower, goes to target, trades lower, goes to target. Here's a trade, and then we're looking for a target, which happens to be right there at our daily zone and the 200-day. So that's I guess the quick hot and dirty there. Appreciate you allowing me to come in. Let's see what we're trying to do here into the last hour of the day. It's really just been nothing but weakness right here. We popped here on the open, and since then, you cannot be trying to buy this thing. You're buying against thin air until we get lower, and this is what we got down below 65 quarter down to 65.10 there on the ES. Let's go to the old NASCRAC. And same thing here, pop there at the open. And right now we've just kind of blitzing through everything to the downside. So let's go back here and see how we're holding up. So having a hard time, we're having the reaction, and that's the first thing that we expect. Are we getting a reaction? The answer is yes. And now the case is, we can go down to a 1, a 2, 15, whatever, 10-minute, whatever that might be, and start to wait for confirmations. Now let's blow this up for a second, because what could happen, we could see, if things got really nasty, is come down here and see a flush to take out these old lows. If we go back, we have to go back a ways to find anything lower. We just don't have that on that hourly. Let's go over here and see. Yeah. So those are the lows. Then we could see 23,735, which is about 150 points or so away from where we are now. So be careful out there, guys. Just manage your risk. This is a trader's environment. We've got a lot of incredible opportunities across a lot of different asset classes and instruments. Do your higher time frame analysis, and then pick your battles on the lower time frames. And I think as Price just said, momentarily, that hey, cash is a position as well. So if you're uncertain or afraid or whatever the word may be, just not real sure what to do, just be patient. Let price come to you. Let the market stabilize a little bit. Let the headline risk become removed, if that's something that will actually happen. But yeah, that's my quick take on things. Cover a lot, looking at GEX levels, as we said, seasonality, other institutional data points, and then all we're trying to do at the end of the day is use these various data points, line it up with a good high odd, low hanging fruit technical analysis and entry points, and then just get in, and manage our risk appropriately. So that's the key takeaway: manage the risk, make sure you're sized up the way you need to be. And thanks to David and Anka and the Timing Research team for having me on. And can I drop a link, David?
Sure. Yeah.
All right. So I was just gonna. I've got a couple of Telegram rooms if anybody is interested and uses Telegram. This is where I post a lot of my analysis and trade ideas and updates. So what I'll do, there is one of our rooms, and then we've got another one, and then I'll turn it back over to our next presenter. So, right. And then, yeah, and those are free. Just again, sharing analysis, sharing updates. This is kind of what you'll get a glimpse of. Let's see. So just posting some ideas, announcements, videos, stuff that you can hopefully take away from something up. So thanks, guys. Thanks for having me on, David and Anka and the team here. Have a great day, everybody. Appreciate your time. Have a good afternoon.
All right. Thanks, Silas.
Thanks, Dave.
Thanks for being here. And yeah, be sure to hit those Telegram links from Silas, and that's his site again. So, all right. So next up is Dave Landry. Dave, are you there?
I am here.
All right.
Do we want to do camera? I have it ready to go.
Yeah, you should be able to turn that back on if you want.
All right. Fantastic.
And you should be able to share your chart too when you're ready.
Working on that. Let's see. Here we go.
Oh, okay. Yeah, no, it's
Okay.
all right.
Okay, are you ready?
Yeah, I'm starting my recording again now.
Okay, well, as usual, thanks for having me back, David. We go way back. I was the host many years ago, one of the first few shows, and that was a lot of fun.
Yeah.
Anyway, I think we're in a little trouble in the market. I heard Silas call it the NASQUAC. That's what I actually call it the quack this morning. I used to work with a lady that called it the NASQUAC, and I wonder where he got that from. I have to ask him. Anyway, I think we're in a little trouble here, as sounds like I caught the tail end of Silas's presentation, like as he was saying. If you take a look at the Landry light, which is a really simple indicator, and if you guys want me to look at anything, let me know. And in the meantime, I'll just go over the market a little bit, and I'll be happy to look at whatever you want. Let me see if I can get the chat up and running to show chats. Okay, I'm not seeing the chats yet, but oh, here we go. I got the chats. Okay. Anyway, Landry light is simply lows greater than the moving averages, or high greater less than the moving average for downtrend. So if you take a look at like the S&P 500 and you go back to the summer, you can see we had lots and lots and lots of upside Landry light. I'm using a 30 EMA. That's one of my favorite EMAs over the last several years to use. I used to spend a lot of time working with the 20, and then I'll show you bow ties in 1 second. That's another moving average thing. I don't use a lot of indicators. Most of my work is done simply by looking at the charts. I see indicators as more as illustrators if they actually indicated something you'd own the world. However, they can be useful, and they can help you obviously in scanning and to help you see what's already in the chart. Down here, you can see tons and tons and tons of upside Landry light. Again, lows greater than the moving average. A couple of kisses of the moving average. We actually use that to our advantage. That's what's called a Landry light pullback. Let me just show you a quick example of that. We recently got stopped out of KGC and also TFPM, and we played this little pullback way back here to the moving average, way back in March, or was it? I think it was actually in May. It was right here, this little pullback to the moving average, and it makes it kind of cool for scanning, because you can actually set some parameters up. I actually believe in looking at a lot of charts. I look at a couple thousand charts every day. But anyway, so getting back to the S&P and the Landry light, let's go through that real quick, and then a couple other things I want to show you, and I'll be happy to take your questions and look at your stock picks. But you can see we had a long-term uptrend, and then you can see we did have some Landry light, but it wasn't really building much of a trend for quite some time. And again, you want to always look at the chart. So on a net basis, the market went sideways for a long time. I just did a webinar a few minutes ago, Dave Landry's The Weekly Charts. I do them every Thursday at 12 Eastern. And in that webinar, I was talking about, and I say this often, but Greg Morse once said that market tops are more of a process than an event. And everybody thinks they're an event because, oh God, the market crashed. Well, the market might be crashing today, okay, or as of late, but it's been rolling over for a long time. And I look at a lot of stocks again every day, a couple thousand stocks every day. And in doing so, I see what's happening internally, and also look at quite a few sectors, about 100 sectors or so every day, and ETFs and such, just to see get a feel for what's really happening. And the market really hasn't ran on 8 cylinders in a long time. And then you could just see here, we've gone sideways for quite a bit. So you could always just draw a horizontal line to see which direction the market is headed. But notice that we didn't have a whole lot of Landry light coming in to the upside. And now we're having downside Landry light, meaning that the highs are less than the moving average. So if we take a look at the bow tie moving averages, this is simply a 10 bar simple, a 20 bar exponential, and a 30 bar exponential. And I have found when they come together and begin to spread out, I'll show you a better example. We're short VSCO, which is Victoria's Secret, and we're also short Monster. And you can see how they come together and begin to spread out. And with the moving averages, this indicator down here, or illustrator, just tells you how many days they've been in uptrend proper order, the 10 greater than 20 and the 20 greater than the 30. So that was like 120 days or so. But notice that even right here, where it's still green, this market hasn't made a lot of forward progress. You can see this high here was shy of this high. So that tells me this market's having a hard time trying to get to brand new highs. And when it begins to crack, everybody right around here is fairly happy because anybody who bought the stock prior to that level is making money. But when the market begins to crack, this is what I call a transitional setup. It's making a transition from uptrend to downtrend. And when that market begins to crack, it begins to put more and more pressure on the players. And as I said earlier, once you have some sort of trend reversal signal, such as a moving average crossover like this, the bow ties, for instance, or Landry light to the downside, you're looking just for a tiny little rally. Ideally, it'd be great if the market had a deep retrace, faked out a bunch of people, and then rolled over. But with these transitional setups, you're just looking for like a one small bar pullback. Ideally, again, deeper is better, but sometimes you have to be willing to get in on that first little pop. And the reason is if the market begins to implode from there, longer term holders or investors, whatever you want to call them, they tend to look to get out at break even when the market rallies back up, as opposed to selling on the way down. Now, eventually, either through margin or needing money or stress or whatever, they will sell further down the line, and that could really help your shorts work out nicely. By the way, you're not going to get rich on the short side. We have a couple on. They're doing well, okay. We haven't hit the profit targets yet. And that's not the only way to make money in a down market is on the short side, obviously. But that's not the main reason that I like to short. The main reason I like to short is it helps me to see both sides of the market. So I've been seeing this gradual rollover, again, like Greg Moore says, more of a process than an event for quite some time. Now, we've stayed long the stronger sectors throughout that whole time, such as defense and gold and biotechnology and a few other areas like that. But now they're beginning to roll over. We're starting to short, and those older positions, like the golds, for instance, are stopping out. We stopped out of those last week. But anyway, the shorting helps you to see both sides of the market. And again, you're not going to get rich. There's some logistics involved, and I did a whole webinar just a few minutes ago on using puts as a substitution for shorting, deep in the money puts, ideally. But anyway, it is the only way to make money on the short side, in a down market, excuse me. And then, of course, the main reason is it helps you see both sides of the market. So you want to pay attention to these bow ties. The S&P bow tied, and we'll get to some sectors here in a few minutes, but the S&P bow tied a while back to the downside. So that's a daily signal, something you need to pay attention to. And you can see that we went from uptrend proper order to no order, which is yellow, and downtrend proper order to yellow, and then back to red, okay? So red, again, is the 10 is less than the 20 is less than the 30. So this market is looking pretty ugly at the moment. By the way, my nickname in the industry is trend following moron. So pretty ugly. How's that for an oxymoron from a trend following moron? And my bread and butter is trading pullbacks. That's my favorite thing to do. But these transitional setups, I think it pays to pay attention to these bow ties, especially when the market is in the shape it's in now. Now, let me just cover a couple more things and we'll get to your picks. And for one thing, this is the TFM 10% system. And these zones are at 5% and at 10% based on a 50-week closing high. So you can see right here, we made all-time highs and also 50-week highs, obviously. And then we began to sell off a little bit. So this is the green zone is the don't worry, be happy zone. Now, this system will sell when you're 10% or more away from the 50-week moving average. I'm sorry, 50-week closing high, 10%. This is a 10% line right here, and below the 50-week moving average. So right now, the moving average is above the 10% line. So your sell would be right there. Now, this is a little bit more of an intermediate term sell. The last buy we had was right here. The last sell was here. The buy before that, especially in the Qs, was really, really good. The last buy, I think, was right around there. Right around April, we had a buy signal in this signal. And nope, that one got whipsawed out. But I did take the one in the Qs. Let me just show you that real quick, and then we'll get to your picks. So I took this one in the Qs. It was right here. I went long on this bar here. And we had a really good run and got out here. I think it was, I forget how many points it was, but it was a ridiculous amount of points for the Qs. And that was a really long-term holding there. But this is a little bit longer term than what I normally do. But it's something real simple, and it pays to pay attention to it. And it only matters when it matters. And right now is one of those times where it matters. And here's just the genesis or the background of my thinking in this is if a market is going to lose 50% of its value, which it occasionally will, okay? Every asset class will lose at least half of its value at some point in your lifetime. And I've seen stocks get decimated several times and lose over half of their value, okay? I'm old, but I'm not that old. I am from the 1900s. But anyway, a market will occasionally lose half its value. Take a look at Bitcoin, which we can take a look at real quick. Bitcoin recently lost half of its value, okay, as did, of course, Ethereum. So oil, gold, all these markets at some point in time will lose half of their value or more, okay? The NASDAQ lost, and a lot of people are like, well, that's not going to happen this day and age. Well, yes, it will. The NASDAQ lost 70-something% of its value back in 2000. So as a technician, if a market is going down, I want to be out of the market. If a market is going up, I want to be in the market, okay? Or if it's down, I also want to be shorting the market. So that's kind of like just a brief 30,000 foot view of the overall market. Longer term, it's not abysmal just yet. So far, it just looks like a big correction. But if we get 10% or more away from that 50-week closing high, I would certainly pay attention. Okay, let's take a look at a couple of these stocks real quick. ELXS for Patrick. Okay, this is actually looking pretty good for given the situation in the overall market. You can see nice little pullbacks to the 30 EMA along the way. It trades fairly cleanly, meaning it tends to go up day after day after day, and the corrections are orderly. My only concern now is we broke out to these all-time highs, and it's already come back in. Now, this is a pattern I call a TKO, this big bar down. Unfortunately, though, if this pattern was like over here somewhere, I would be much more excited about it as opposed to just kind of breaking out above these recent highs and coming back in. Let's take a look at a couple of stocks that I'm long right now and show you. I'll show you one that recently we got knocked out of, okay? So notice this one made all-time highs here, made like kind of a minor double top, but that's actually kind of bullish when you have a minor double top and then you have kind of a shakeout move. So we got long this one back here on this pullback, okay, to the EMA. Notice it accelerated higher, all-time highs, pull back to the EMA, and we did get shaken out right here. So this was a pretty good trade, but not nearly as great as it could have been. So that's what you want to look for. You want to look for those all-time highs. Let's see, we're long CLMT. Okay, you can see this is the knockout move we talked about a second ago. And that's when you have a market making all-time highs and then somewhere in the pullback, and ideally maybe the first day after all-time highs, you get this knockout bar, and that knocks out the weak hands and attracts eager shorts to the market. And if the market goes back up, you can sometimes do okay based on their predicament. So this stock is working out okay. It's been a little bumpy ride, but it's been pretty bumpy on the long side. What else are we long? Let's take a look at FIG while we're trying to remember what's else. And by the way, when I said we're long, I have a trading service, and those are my daily picks, but that's where I give my daily picks, but I do actually take the recommendations myself. Okay, so as a trend following moron, I would draw a big fat blue arrow on this stock, and it's going, so I would not buy this. Okay, I'm not a bottom fisher. For me to want to buy something like this, it would have to possibly make a bow tie to the upside. The moving averages would have to come together again and cross over, given the appearance of a bow tie. Now, one of my rules for IPOs is this is pre-market, so ignore that bar. But one of my rules is never buy an IPO until day 5 or beyond. So it's day 1, day 2, day 3, day 4, day 5. And you can see by then it never did take out that day 2 high. And a lot of times IPOs will come public and never take out their day 1 high, which is kind of interesting, but that in and of itself could help you to avoid some really ugly markets. So I would ignore that. Just draw you a big blue arrow on the chart. AMD. Now the semiconductors have been looking a little questionable lately, and I'll show you that in just one second. But this stock here, okay, where is it now? 204. Where was it months and months ago? 204. Okay. So your arrow here is sideways. Look at the Landry lights. Downside, downside, none. A little upside, downside, upside, downside. So this is a stock that's just chopping around. There's nothing for me to get excited about here. Let's take a look at Apple. Oops. Okay, Apple. One thing I mentioned earlier, and I mentioned quite often in the webinar earlier, was never buy a market unless, as a general statement, okay, there might be some caveats here and there, but as a general statement, never buy a market that is below its 30 EMA, okay? And if you go back and look at like Bitcoin, for instance, I was just talking about this earlier, kind of last week at Bandcamp. Notice how long, I didn't mean to do that, but notice how long it's been below that 30 EMA. And notice from up here, like 110 round numbers, okay, all the way down to 90. So it lost $30,000 and it stayed below that EMA the whole time. And then you can see this little green here, it barely got above it. And then it went back to selling off again. So from 90,000 down to, what's that, 60,000. So you can see it's been a pretty bumpy ride down. I think around 95,000 or so. Don't quote me on this, but you can look at my X feed and see. I put out a few tweets saying it's always darkest right before it gets more dark. So if a market is dropping like a rock, kind of like that FIG stock, there's no reason to catch that falling knife. I think I mixed metaphors there, but that's okay. But anyway, like the Apple, for instance, notice this knockout move here. That's kind of bullish there to the 30 EMA, and notice how it popped higher from there. And then in this pullback, it just kind of didn't really materialize and then roll back over. So I would avoid those for now. And let me shift gears just really quick, and I'll show you what I was talking about with the semiconductors. So if we take a look at the SMH, okay, you can see that we have a bow tie to the downside, meaning that the 10 is less than the 20 and the 20 is less than the 30. 10 simple, 20, 30, or exponential. And of course, we're selling off hard today. So the semiconductors overall are looking questionable. And if you take a look at the Most other sectors, there's a lot of sectors like software, and the list goes on and on, but internet software, that's software, you can see that's in a pretty serious downtrend. Just draw your arrows or look at the bow, see the bow tie here, okay? Way up here. And again, draw your arrows and just look at the chart, obviously. And then a lot of it, medical devices, you can see breaking down. Transports were just at all-time highs, and then they've broken down. Gold, for instance, we rode gold forever, and we just got shaken out of our last position last week. Okay, AHCO. This one's kind of all over the place. Okay, again, it's trying to break out. It would be hard for me to get excited about this. This is medical devices. We just looked at medical devices. They're headed lower at the moment. So I would avoid this just because it's kind of all over the place. It looks like an electrocardiogram. If you look at a chart, you kind of hear a beep, 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 beep in the back of your head. You want to avoid it. Let's take a look at the Rusty. The Rusty was just at all-time high, so it's a bit of a bummer. You can see it's bow tied to the downside. It's retraced up a little bit. Now it's selling off again. Looks like it wants to test at 200 at the least. You're welcome. Banks have been abysmal. They were at all-time highs not that long ago. Then they have imploded. Major drugs, none of those areas, just at all-time highs, but then has begun to implode in earnest. And then again, look at your bow tie moving average. Also, I don't really pay a lot of attention to the 50 simple and the 200 simple, but when the market gets a little questionable, like now, I do. And you can see I have them plotted on this chart. Now, again, in my analysis at night after the market closes, I'm looking through charts really, really quickly. I'm looking at, like I said, a couple thousand charts every night to get a feel for what's going on while I'm searching for setups. And usually when I speak in person, I ask if there's anybody in the audience that's a musician. And usually a few people raise their hand, and I'm like, well, how'd you get good? And they look at me like I pooed my pants and say, well, I practice, dumbass implied. And sorry, Dave, I hope I didn't demonetize you. But if you want to get good looking at charts, look at a lot of charts and see how they move, and you'll get a feel for it after a while. And you'll start to recognize reoccurring patterns, such as uptrends, downtrends, and sideways. But anyway, so a lot of these areas were just at all-time highs, have now begun to implode. Max, for instance, topped out a long, long time ago. And I don't trade directly off of classical technical analysis, but I do use it as sort of a backstop for what I do. So if you got a big picture double top or inverted cup, or in this case, like a head and shoulders, and then you see some sort of setup afterwards, like a bow tie or whatever the case may be, then it might be worth going after that market. But you can see the mags have been in trouble for a long, long time. Just throw a dart. Telecom is breaking down in earnest, well below that 200 simple moving average. So that's looking pretty ugly. About the only thing looking good would be the energies and the all service stocks. But as not the last week at Bandcamp again, but even within these sectors, such as all service, I am seeing some shorts that are setting up. So not every stock in the sectors is doing well, but for now, this might be our only area where we might find some opportunities for now. Let's see what else is going on. Again, as you go through these sectors, they just look at absolutely ugly. Look at the health service, a healthcare select fund, whatever that is, but it's health service related. You can see, again, a bow tie from these high levels. It's imploded for some time. Let me take a look at the portfolio. Oh, PL, that's one I wanted to talk about. So we take a look at PL, and that'll explain a lot as far as the methodology is concerned. And let's get back to the other charts while we're doing that. Let's go ahead and do, so I can show you the Landry light on that. So back here, you can see that, first of all, we had nice upside Landry light, okay? The lows are greater than the moving average. Notice that this stock is accelerating higher, or has been accelerating higher before it pulled back, okay? And it has persistency. It tends to go up day after day after day. You could draw a line and intersect a lot of the bars. Now, when it pulls back to the moving average, we look to get long, and I think we got long right on this day here. And it took a little while, but eventually took off. It's getting whacked a little today. We did take profits on this gap here. The profit target was right around here or so. and we were able to get a little bit off on that. That video will be posted on YouTube early tomorrow. So if you want to check out a lot of these or every setup that I mentioned recently and when we took it, you can also find the archives to these at davelandry.com/archives. And you could also find the newer ones on YouTube at youtube.com/davelandry. And the thing that I've been talking about a lot lately in my webinars is that the missing piece for a trader is having someone tell you what they're going to do and then having someone do it exactly for the most part, and then seeing where the chips fall, where they may, good, bad, or indifferent. And I was really lucky early on because I was doing some programming and research, and I was doing okay trading, but I wasn't sure. And every time I had a loss, I just felt worthless, and I had all these psychological issues, as we still do today as traders. We all do, right? But the thing is, you seeing someone else do it and go through the ups and downs really was instrumental and helping me out. And that's why I've been showing these trades that I recommend, and you can go and look at those trades without any hindsight at those aforementioned links. Okay, so the question is, PO gap was on earnings, so you bet on earnings? No, I ignore all news. So let's go back to that KGC, which I think we made 100% on, okay? So we got in right here, as I said earlier, back in May. So there was like, say, 1, 2, 3 earnings, 1, 2, 3 earnings, 1, 2, 3 earnings, 1, 2, 3 earnings, and then maybe some more earnings in here. So I'm not betting on the earnings. I'm betting on the big blue arrow, okay? And in this case, it was headed higher. So I played the pullback back here. It doesn't look that impressive, but if you zoom it in, you can see the stock was at a pretty good uptrend. It's a gold stock, so it's going to be a little choppier than others. And the idea, I'm slotted as a swing trader because I think it was in title of one of my books or two of my books. But the reality is, I'm willing to hold longer term. I think if you just hold shorter term, and Michael, I get you, man. I'm picking up what you're putting down, because if you did trade shorter term and then you got whacked in earnings, let's say you were short that market and it gaps up 10 points or whatever the case may be, you're going to be a hurt and pop. But if you're holding stocks longer term and occasionally hit 100% or 200% or even more, then you could ride out some of these earnings and everything else. And if you get whacked, you get whacked. At least you made a lot of money along the way. Now, keep in mind, we are taking partial profits at kind of more like a swing trade, short-term profit. But then we bring the stop up to break even on the remainder, and then we trail that stop higher. Okay, HL. That's going to be a minor. Okay, so this is a market that's topped out. Let's put a bow tie in this, and I think we just have a few more minutes, but we should have time to get a few of these in. So let's get them in quickly. Okay, so here's, oops, that's not a bow tie. It's hard for me to see the screen with all these lights on. Here we go. Okay, so here's a silver stock, right? And look at this beautiful trend all the way up, okay? And nice little pullbacks along the way. This would have been a great stock to play on the upside, but now it's in trouble. So let me give you an example. We're short AG, or I'm sorry, we're not short AG, but AG is a potential short, okay? So look, all-time highs, not that long ago, you got a bow tie to the downside. This thing's pulled back a little bit. I have puts on this, okay? Full disclosure. So I do have puts on this, and I'm looking to take partial profits on them. But you can see all-time highs, bow tie to the downside, your first little pullback, you're looking to get short. Monster would be another example of that. Okay, we got about a minute left. If there's anything else. Okay, Monster, I don't know if I mentioned this one earlier, but yeah, look at this beautiful bow tie, okay? All-time highs. Everybody's happy here. Okay, my technical analysis is not that technical. I don't believe in a lot of the mumbo jumbo out there. I'm not gonna throw anybody on the bus, but I know a lot of people, I can't imagine they're making any money based on their analysis, but I just keep it simple, and it's based on the psychology of the market participants. So at this new high, everybody in the world is happy, okay? But when this stock begins to crack, anybody who bought at that level is losing money. And as it drops further, it's putting more and more pressure on the people. So nice little pullback here. We went short on that. We're looking to take profits. I think it's a ways away, about 8 points below where it is now on that one. But that's the idea with these transitional setups. And I would recommend you do that. What does the indicator use with the triangles? Okay, this down here is just simply a count of how many days the moving averages were in uptrend proper order, meaning the 10 is greater than 20 and 20 is greater than 30, 20 and 30 exponential. And then when they flip to the downside, it begins counting to the downside. In the Landry light, I'll show you real quick. That just counts the number of bars that the lows are greater than the moving average or the highs are less than the moving average. So it looks like I'm out of time. Won't be able to show that one, but you get the idea. So the lows are greater than the moving average would be upside Landry light, and then the highs less than the moving average would be downside Landry light. I'll try to show one real quick. We have time. Landry light, 30-day. Okay, so right here you can see S&P 500. You can see the count is negative 18. So 18 bars, the highs of 18 bars have been below that moving average. Well, thank you, David Cosmitter, for having me back again. I love doing these shows. Thank you so much. Thank you guys and girls for attending. I appreciate that. If you have anything unanswered, Dave at DaveLandry.com. You could also reach me at DaveLandry.com, and my newsletter is DaveLandry.com/newsletter. So thanks, everyone, and may the trend be with you.
All right. Thanks, Dave.
Thank you.
Thanks for being here.
Appreciate it.
All right. Yeah, so that was Dave Landry, DaveLandry.com. And then next up is Dave Wise of RightLineTrading.com. Dave, are you there? Back-to-back Daves for
Wait a second. There we are.
Okay.
Should hear me
Yeah.
now. Okay, good deal.
Uh,
All right, good afternoon.
yeah. Yeah. Didn't
Yeah,
we,
yeah,
Landry, didn't
right.
we have a joke about that back in a long time ago that we'd try to have a all Dave show?
There's a Kids in the Hall song. These are the days I know.
Yeah, exactly. When Dave Osmond used to be on, and maybe someone else.
We have to make that happen. Yeah. All right.
Yeah.
Thank you.
I guess I'd fit right in.
Yeah. We'll have to do that. All right. Okay, Dave Wise, I see your screen now, and
Yeah, okay. Pop up the
your
chat box here.
yeah,
So I can move that out of the way and so I can watch it. All right.
All right.
Okay, all set.
Okay, I'm going to start my recording again, and
Okay.
then you can start your analysis. So I am recording again now.
I appreciate it. All right, everybody. Again, my name is Dave Wise, and I have a trading room with Right Line Trading that I do options, mostly option trades. And I use a piece of software called the SPY Super System that I'm going to show you, and I'm going to do most of the analysis on this chart and some TC2000 charts for analysis of stocks. Just briefly, I'll show you a little bit about the SPY Super System here, so you'll know what we're looking at when we see this. We've got some indicators here that let me know whether institutions are in a trade or not. I have a current time frame momentum here, a multi-time frame momentum here, and a long-term trend here. And this is depending upon the time frame I'm on. This is a 5-minute chart I'm looking at on the SPY. And you can see here it was mostly red. This is red and yellow are bearish, blue and green are bullish. So this is the charts we'll be looking at. If we're looking at a swing trade, we're going to be looking at multi-time frame momentum, current time frame momentum right here. And up here we've got the pricing. And we have a few nice things on here because I do a lot of intraday trades as well. We do what's called SPY Super System trades and trades that are what's called UMCAT. And it's basically quick intraday trades off the 5-minute chart. We get the VWAP right there, the pink line. The red line is the 15 EMA, and the 8 exponential moving averages right there. And those are the 3 that I use on an intraday trade basis. For swing traces, we would switch to the daily chart. So that's the chart we'll be looking at. Again, I have a trading room that's open all day long from market open to market close. Had to actually leave a little bit early today to come out and do the presentation. So I got chat box here, and I will see if anybody wants to look at some charts. I'll be more than happy to do that. Again, I'm going to be looking at look at the SPY Super System here for any particular symbols you put up. As I say, right here, we're looking at the SPY right now. ISSC, Patrick, ISSC, okay. Look at it right here. Right, so ISSC Innovations. This is a 5-minute chart on it here. You can see today it was down quite a bit. And if I switch this over to a daily chart, I'll be able to tell what it looks like more for a swing type basis. It looks like a pretty terrible trade, a pretty terrible stock to trade long. But this would be one that's a nice short. And one of the things that this particular piece of software picks up is, if you notice the color of the candles, red and green are standard ones. If you've got candlesticks that are white, that's a high volume bullish candlestick. Candlesticks that are yellow, those are high volume bearish candlesticks. So this tells you that if I look at this, I can see right here when this switched over to yellow and red, that the institutions were coming in, and I could see they were coming in with a lot of force. So this is actually a very excellent setup right now for a swing trade to the short side, Patrick. All right, and DAKT. All right, this DAKT, this is a daily chart on DAKT. Also bearish. It's been sliding down here for quite a while. You can see, but kind of compressing here right now. So what I look at on the daily chart here is I look at the 8 exponential moving average and the 15. When the 8's trading below the 15, it's a bearish trend. So we're in a bearish trend right here. But it's moving up, and the 8's trying to get back above here. So I'd be a little hesitant, even though we're showing institutions selling this, I'd be a little hesitant. Or if it opens red tomorrow, I'd be perfectly satisfied with taking this as a short for a swing type trade. And when we're looking at the daily chart, we're looking at swing trades. Here's the 5-minute chart in it today, and you can see that it was pretty bearish all day long. All right, DFTX. Okay, let's take a look at DFTX. All right, and again, this is a 5-minute chart on DXTX today. It's actually up pretty nicely today. So let me switch over to the daily chart so we can see what it looks like for a swing basis. All right, so here's DXTX. I'm sorry, DFTX right here on the daily chart. Now, the thing that concerns me about this stock for a long is, well, there's a couple things. There's these really big wicks on the candlestick. The 8 and the 15 are together. But I've got right here, down here, where I have my current time frame momentum. This is showing what the institutions are doing on a daily basis, and this is showing what they're doing on multi-day. They're still kind of bullish on the multi-day, but this is switching back and forth between yellow and green, green and yellow here. So I wouldn't be taking this long until this switches back over to blue or green. I wouldn't touch that one for a long yet. Now, one of the things I actually do is to do some more detailed technical analysis is I actually switched to a trading platform I've got. Well, it's a charting platform. Call it DFTX on TC2000. This is TC2000 right here, which I use for charting, and this is a daily chart on it. And I have some other things on here: the 200-day moving average, the 100-day moving average, the 50. You see, it's very bullish. It's above all of those moving averages. But the only thing that I would be waiting for here I would be waiting for the current time frame momentum to switch over to green before I take it long. That's my only caveat on something like that. Okay, AMD. All right, well, AMD chip stock. I think we're all pretty familiar with AMD. This is the daily chart on AMD. You can see what it did today. Had a big move up yesterday because they had a deal, and today it sold off pretty hard, along with the rest of the semi stocks were all down today. NVDA was down today. AVGO was down today. Again, but he's showing you right here that it's short as far as the institutions are selling it is concerned, right? But I'd be much more interested to take a look at the daily chart on TC2000 to see what it looks like over here, to see if it's running into resistance levels or has support levels. So this is where it is right now, right? So this is a big move up yesterday this is a daily chart, right? So there's a 100-day moving average is the blue line. The 50-day moving average right here is this red line. And you see it went through both of those yesterday, and it's fallen back below both of them today, right down to the 8 and 15. These become support levels for this. So I wouldn't be touching it short yet, but if it breaks below this 15 right here, this orange line and the 8, if it breaks below there, then I would be interested in taking that down to the 200-day moving average as a short. That's a pretty big candle right there, but I wouldn't chase it until it breaks down below there, right? And again, if I look at my SPY super system, it does tell me that yes, the institutions are selling off on AMD right now for sure. Okay. We're on OKLO. All right. One stock I've traded quite a bit. Again, I do options when I trade. I'm doing puts and calls, straddles and strangles, debit spreads and credit spreads mostly. So a lot of the trades we take are intraday trades, and then we take swing trades. We actually have an alert service where we send those out. Okay. So this is OKLO. This is a daily chart in OKLO. Pretty ugly. If you look across here, current time frame momentum, multi-time frame momentum, this shows you that the institutions, they've been selling this off, and they've been selling it off for a long time. We don't have an awful lot of high volume candlesticks on it. We have a few interspersed, but there's not stacking yellow candles. But this is still a pretty nice short setup on OKLO. And I'm assuming you're talking about this on a swing type basis. Definitely a short setup. It doesn't have any earnings till the 12th of May. And you've got as far as I'm concerned with the SPY super system here, you've got the go ahead and put this on as a short, whether you're just shorting the stock or you're using puts. But any of those will work for you. Okay. Okay, and I do want to show you while I'm waiting here for it comes. I want to go back to the 5-minute chart and show you something as far as how we trade intraday in the room, which we trade puts and calls, and we trade a couple of different methodologies. One called the SPY super system, which is we're using the current time frame momentum only to see what the institutions are doing right now. Right, this is what we look at. And this is the one that's going to tell us whether we get into a trade or not get into a trade. So if I go back and look at OKLO right here, this right here would be a trade that we call boomcat or out of the money. I use an out of the money puts, and I only do this on something with momentum and a catalyst only. And so this would be one right here. You see how you get this big flush down, big high volume candle, went from selling to buying, right? Green, yellow, buy it right here. You take this, you take puts out of the money. It's trading at like 52.49. You take like a 52 or 51 put, you write it down, and you get out right here. And that would have gone up a lot in price, an awful lot in price today. Well, I'm showing you that. I'll show you the one that we did use today called Meta, and everybody's probably familiar with Meta. Meta had several different situations today, but this is where we took it this morning. We took it this morning as it compressed right here. Notice the institutions are selling the heck out of this thing, right? And so I was looking for a break. This is the SPY super system that tells me right here that the stock is breaking down. That arrow tells me it's breaking out of compression to the downside. And notice every single candle is yellow. These are high volume candles on every single one of these 5-minute candlesticks. We took it here. I took an out of the money puts on this. And I get into that trade for $595, $5.95 a contract, because these are pretty expensive. It's $547 stock. It's paid $595. You get out at $995 and then $1,095. Just in this 15 or 20 minutes move right here. So about 80% to 90% profit on that particular trade on Meta. That's what that intraday trading will do. But we do intraday trading and swing trading, and I assume most of the folks that are asking right now are asking for swing trades. So let's take a look at that. Rob, our cat, all right. Okay, our cat right here. All right, so this is a daily chart on our cat. And if you look at the price action, one of the things to judge when you're looking at it, in my opinion, when you're looking at a trade, you want to take a look at what's called the context. How is this tracked from trading? You can see that it had a nice run up back here. See all the white candles? Big volume. This would be a perfect place to get in right there. It goes long. You take it right there and you just ride it up. It stays above the 8. Then you get a reversal candle and you get out. But right now, we're getting a lot of wicks and tails. This thing is chopping all over the place on the daily chart. You've got mixed signals down here. You've got multi-time frame momentum that's telling you the institutions are still buying it, but on the current time frame momentum, they're now selling it. So this tells you that you want to stay away from this stock. You don't want to trade this stock at all. It can go either way, but right now I wouldn't be touching it. And you can see the big wicks and tails. That tells you there's a lot of volatility in there. you probably want to look for something with a little bit more consistency in the move for a swing trade, something that you can stay in, and you're not going to get flushed out on a big wick or a big tail on these particular stocks. Okay. All right, so again, this is the SPY super system. So this is where I will go ahead and analyze in the room every day. People call out the trades they're interested in, ones they're looking at. Like I said, we traded Meta today. We also traded Baidu today to the short side. Baidu is a pretty good short setup on the. It's a good short setup, by the way. Baidu is a good short right now. Baidu is a good short on the daily chart for a short-term swing trade. As you can see it right here, everything's red. It's breaking down. It's below yesterday's low. This is a very good setup on Baidu. We took it today just on a 5-minute basis. We took it as an intraday trade when we saw the breakdown. I didn't take out of the monies in this. I took in the money on this because I didn't have enough high volume candles. So I took in the monies in this, and we made some money on it, decent money. QCOM. Hey, Rob, QCOM. Good old friend QCOM. This one's been a little bit. These tech stocks have been tough, very tough. This QCOM here in the 5-minute thing today, you can see it's actually up just a bit today. But when you switch over to the daily chart, it's telling you that this baby is being sold. QCOM's being sold. We go back and look, see the gap down here. All right, gap down, and then pushing sideways, but it's definitely bearish. Now, I personally wouldn't trade it because it's too much chop here. To me, it's too much chop. Notice the 8 is below the 15, so it is bearish, but there's too much chop here for me. So I'm not going to trade this, but I'd be interested in it. But if I do trade it right now, I would want to trade it. I would want to trade it short. But if I look at it on my TC2000 right here, so I can get a good idea of where it is on the chart itself, you notice that it's run up through the 8 to the 15 and stop. You'll notice how many times these stocks stop at the 15 EMA. These 15 and 8 can work together. I work together when I'm I use these together when I'm doing any analysis. And if stock goes through the 8, I wait to see if it's going to go through the 15. Many times it does not. It'll go up and come down. So if you short this and it doesn't get through the 15, you can probably short it again. But here, I'd be waiting for it to get below the 8 and probably below this level right here. You see that level on the chart? 127.76. That's a double bottom. You can see the double bottom right there. That definitely can be shorted, but I would be waiting on this one until it actually shows some indication that it's going to go back down again. All right. We got about 3:46. Got about 14 minutes to go. And while I've got some folks here, I do want to just show you while I can. I'll show you the if you want to be a member of the live trading room, this is what you get right here. And I think there's a link for it, but this is Right Line Trading. That we do quarterlies for the folks who want to be on the trading room and the text alert service. You can get in for 2 weeks free trial, and then it's quarterly $3.96. And then we have annual memberships and also one-time deal. This is where you can get in for good, for the forever on this particular thing. This gets you access to the room, the alerts, all of my training. I have about 31 training videos on all the different strategies we use, and also a private Discord room. And this is the software. If you like the SPY Super System software, this is where you would get it, and it's right there in the chat box right now. This is where you would get the SPY Super System. This runs on Thinkorswim, but you don't have to trade on Thinkorswim. $14.98 for a year and $19.98 forever. And again, this would look exactly the same as the screen I was just showing you a minute ago. This is the SPY Super System right here. These are stocks that are cascading up. These are relative strength stocks, relative weakness stocks. These are swing bearish stocks. All you have to do if you want to see how they look for a potential trade, you just click on them and it'll take you right to the chart. There's your daily chart on CDE showing up right here as a bearish setup. Is Meta, that's a bearish setup. Look at that Meta today. Again, this is bearish. ON, another one that's bearish. So this will give you a list of stocks to short. We'll also have one here that's the One Wise Bull. All right, so just click over here to One Wise Bull. Right down here. and it's going to show us anything that we might find is long. So we're still looking at Marvel, looking long. And what I do is when I click on these, I look to see if I've got green and blue. They have to have green and or blue on the last two indicators right here. You can see turn is a good one. That's a cheap stock. Well, that's $53. That's not too bad. There's Oxy. Most of the oil stocks are up today. Oil up, PBR up. These are mostly oil stocks that were running up. Right. So those are that's with the SPY super system. This is what it comes with them. What's the PC requirements to run TOS? They're really not. It doesn't take up much requirements at all. To run Thinkorswim is really it doesn't take up a lot of processing power at all. I mean, I run Thinkorswim over here. I don't trade on Thinkorswim, by the way. I trade on Tradier because it's flat fee. I just pay a fat fee each month, and I don't have to pay for commissions, which for me is a big deal because I trade thousands of option contracts even in a week, and way more than that in a month. So that makes a big difference to me. But yeah, this is Thinkorswim, and you don't have to pay for Thinkorswim. If you buy the software, it gets loaded right on. Brightline will load it on your machine. They'll take over your machine and put it on there for you. It'll look exactly the same as mine, and you'll get any updates to it. We just did add these colored candles to it, which was pretty. I think it was very, very helpful. We put these colored candles on here. Somebody wants to see FCX. All right, sure. Let's look at FCX. Now this is Freeport McNamara, and this is copper. All right, this tends to trade with like gold, which was down today. Silver was down today. FCX is, as you look at the daily chart, you can see it was down today. It's been very choppy. Going back and looking over the thing, but this has been tough to trade because FCX again does trade as a precious metal, even though it isn't. It trades with gold. You can see what gold did today. Big move down in gold today. Big move down in silver today. And you can see gold is selling off. Institutions are selling. Institutions are selling. My philosophy on trading is if the institutions are not selling or not buying, if they're not in a trade in force, and I mean in force, in there with huge amounts of volume, then typically I don't want to be in it. I only want to be in these trades if the institutions are in them as well. So we take what we say what saying we have is we trade the best, we skip the rest. And what the best is to us is stocks with institutional volume. In other words, institutions are trading them. We've got the current time frame, multi-time frame momentum lining up. And the stocks have strong technical setups, and those are the best ones we find. We also trade relative strength and relative weakness, which means how is the stock trading in reference to the SPY. That's not RSI. That's how is it trading relative to the SPY. So the SPY is moving down and your stock's moving, stacking green candles moving up. Those would be relative strength. Anything here that pops up during the day and this changes all day long are going to be stocks with relative strength. And you can switch this cascading up and cascading down scan. They can be switched to daily charts. So you can look at cascading up stocks on a daily chart, which would be like three or more green candles stacking up, 3 or more red candles stacking up. Right? I won't go through each one of those things, but it's very, very useful to find the intraday trades that we take. I mean, if I'm looking to do an intraday trade, like an UMCAT trade, out of the money catalyst that's got a lot of volume, or a SPY super system trade where I'm looking just to take it as it either goes down with red here or yellow, or blue and green and moving up, then I want to know what these institutions are doing. So it's important to me when I click through these, I can get an idea of what stocks to trade. Today, Meta came up right here. Meta was on this list, so this is how we were able to find that Meta trade. So this gives us the stocks to look at. Then you have to look at the chart, obviously. This is a daily chart right now, but if I switch it to 5-minute, what you're going to see on 5 minutes, if I just go to the current, this is going to be the last trades of the day because it's going to be stopped right there. But there's Apache moving up, EQH moving up, and I can tell when I look at this, okay, I'm getting high volume candles. So these are nice setups. And here's ONDS, nice short to the downside right here. High volume selling on this stock, red across the board, a beautiful short setup for an intraday trade, and most likely for a swing trade too. I'd have to look at the daily chart. See, yeah, it's looking like a swing trade as well. There's a potential for it. So that's how I find these stocks. Pat, MGM. I'm sure. Let's look at MGM. Okay, daily chart on MGM. This is a very odd looking chart. Okay, this is daily. You see, you have big yellow and big white candles. You got a lot of volume moving up, volume moving down, volume moving up, volume moving down. This thing is chopping all over the place. It's basically just this is a giant. This SPY super system puts this shaded area in. That's called a dynamic compression zone. So this shows you stocks that are in compression. This is a pretty hideous chart. Now it's showing buying here, right? And I'd be interested to see what this looks like on TC 2000 as well. So I would just switch over to that. And there's where I see it, what it looks like. Whoops, that's not TC 2000. How about MGM? Is MGM. This is not a pattern you want to trade. You do not want to trade this pattern. You could see that on TC2 and on the SPY super system, wicks and tails all over the place. This is a mess. When you look at a stock to trade, if you're looking to take a swing trade, you really want to see some nice, smooth price action on a stock. It's consistently. If we traded GLW a while back, look at this GLW. This is the kind of pattern you want. It's riding along the 8 exponential moving average with high volume candles. That's a beautiful, beautiful setup on GLW. And multiple times this year, GLW has done that. This is a pretty nice setup right there. This was a beautiful setup on GLW, and that's what you want. You want to be able to look at it. You should be able to look at a chart and make a determination by just looking at the chart of what direction it's likely to go. If you look at MGM and say, I have no idea where this is going to go, stay away from it. You don't have any feel for that. Look at something that's going to give you some confidence, and then I use the SPY super system indicators to tell me whether that stock is likely to be a good trade or not. Is Wolf, okay, this is the daily on WLF, TeraWolf. Kind of a bad day today on TeraWolf. It's what's this? Yeah, this is a capital market. Yeah, capital markets have a little pressure again. Very, very choppy. Very, very choppy. Now it is showing green here. It's showing yellow in the trend, but this is more important to me. It's showing green. But if I'm in a stock and it's green, but I'm getting this kind of an action right now, I'm going to wait. I'm not going to touch this right now. I'm going to wait to see what it looks like. It's right down to the 50-day moving average, by the way, which is likely support. And you see how they had this big move up and then a big pull down. It's very difficult to trade that stock. Okay. Okay. See anybody any other ones out there? Again, like I said, the ones I traded today was Meta and Baidu. They were pretty. Those are pretty nice. I did have a swing trade in Zoom, ZM, that I took off today. This was a trade in Zoom. If I go to the daily chart, Zoom actually was moving flat here, and it popped up today. It doesn't seem like much, but actually I got about a little over $100 a contract. That is the reason I took it was, you see this. I was looking for this gap fill here, and it popped out of there today, right there, and it got me profits in it. I'd been riding it along this 8 exponential moving average here. It was blue, and it was green here. It was red here, and I was trying to intraday trade this, and it turned into a small overnight swing for me, but worked okay. All right. I'm getting close to being out of time here, so see if there's anything else here that strikes me as a trade. I did take some stock, some position in ERAS. I think this is a very nice swing trade. You look at the daily chart, see how nice this is. It's moving up, pull back a little bit, and I bought it on this pullback with this bounce right here as we moved up to blue, and I'm riding that thing up. But I didn't take options in this. The options were terrible, so I took shares. We talk about that in the room as well, whether it's tradable by stock or options. Most of the trades we take are all option type trades. All right. And see, okay. Don't see any more questions here, so that's good. I think we've covered most of it. I think that the key thing here is to understand that we're taking trades that have institutions in them. Institutions are driving them. Those are the ones we want to be in. I don't really want to be in trades that institutions are not in. So I've very focused on these current time frame and multi-time frame momentums. ZS, Rob, you want to see ZS? Okay. Z-scaler. Oops. Z-scaler right there. All right, so here's Z-scaler in the daily chart. It's, you know, I don't know which way you like this. It looks pretty weak to me on Z-scaler on the daily chart. It's been coming in pretty hard. We had a lot of this is a lot of crazy action here. Again, can you predict the direction of where this is going to go? I can't. I cannot do it. All right, I can't do that. Cisco, I'm about out of time here. Is Cisco? Cisco, interesting, had a big pull down here. You can see, and it's trying to recover. Here's what you got right here. See this gap? It's in a gap. It's in the gap fill. It's got to get into this gap and stay above there. Okay, it just broke above there today. It's got to stay in that. Then you've got room up to here. So you could take it long,
Right.
but the institutions are.
Dave, sorry.
Okay.
I'm going to cut you off there.
No problem.
Thank you for being here. So.
Oh, I appreciate the time. Thanks very much. Tried to squeeze in as much as I could.
Yeah. I try to let everyone go right up to the line, but
good deal. I appreciate it, David. Hey, thank you very much for giving me the opportunity to speak here.
Yeah. Dave Wise is a first-time presenter here on Timing Research. Some of the other guys from Right Line have been on other events, but it's Dave's first time. So thank you for being here. And all right, and next up is Harry Boxer. Harry, are you there?
Well, I'm here. Can you hear me?
Yeah, sounds good.
Okay, I got to share. Got to get a screen share here.
Yeah, you should be able to share now.
Let's see. Where's the share? There it is. Okay. I'm not clear which is the right one. Let's see. Tell me if this is. You see my index charts.
All right, it's loading. And SANM.
Right.
Okay. All right, so you're ready to go now?
Sure.
All right. I'm going to start my recording again, and then you can start your analysis. So I'm just double checking everything. Looks good. Okay, I'm recording again now.
Hello again, everybody. It's Harry Boxer, the technical trader at TechTrader.com. And we at the Tech Traders we believe in trading what we see, not what we think. We're technical traders. We trade patterns. We're pattern recognition people. I look at 1 minute intraday charts for my day trades. I look at 5 and 15-minute charts for my swing trades. We do both. Today I put out 3 new short swings. We can go over them a little later, but I'm more interested in finding out what questions we have and go ahead and answer and do analysis for your trades, folks. So if you have something that you want to look at, go ahead and do that. David, I'm not seeing the chat. Okay, I got it now. I got it now. I got the chat. Okay, so it looks like and Patrick is asking me about EVR and SNEX. Folks, if you're in with me, please post whatever chart you want. We'll go give you a complete detailed look for it. EVER, that's Evercore Partners in the Capital Markets Group. Now, anytime I have a stock that's that strong, I look for support levels, and when they're violated, I'm out. This is this would be for me a stop out under 298.3. Subsequently reached down to 265 and bounced right back to resistance. Underlying technicals look terrible, quite frankly. I look at this as being a bear flag, and I look at this as a stock that could easily go lower. Right now, we're looking at a very distinct down channel being formed off the high from January when this stock reached all the way up in the 388 range. It's currently 100 points below that, but quite frankly, what I'm looking at now indicates the possibility that this could go down to about 2. Let's see. I'm looking at a target around 252, 255. And if things get really nasty, maybe even down in the mid 220s. So, Patrick, that is not, for me, conducive long. And today in particular, you can see it had a little bit of a reversal, but it didn't close terrible. Let's just say this, though. I would cover if it went back over 300, probably. But right now I'm seeing an avenue for this stock to go lower. For SNEX, we got about a 50% fib retracement, a nasty little drop. The stock ran from mid 50s, excuse me, to high 80s, so like about 33 points, and then pulled back down to 67 and change for about 21 points. So that was exactly a kind of 0.618 fib retracement. Now the bounce back, very intriguing, has filled this gap there, or just about, not quite. Yeah, take a look. The bullish part is that it's been up for 5 days in a row and it closed above the 50. That's bullish. I know this company very well, and I would be inclined to sell the stock. My take, okay? And I could be wrong, but my take is that both of these stocks are negatory. This is an opportunity to sell the stock. I will say this, though. This move off the low is very bullish in terms of having strong volume on the upside. And let's see if we can get through resistance first. Your next resistance and target will be 82, then a retest of 88. But for now, if it fails here, it could easily roll over and even start a new downtrend. Got to be careful with that. Okay. We have some more questions. VG to everyone. NVIDIA. Well, NVIDIA may be in trouble, and the whole market may be, quite frankly. If you look at some of the leaders, NVIDIA, if you just go back to July, August. Back here in July, NVIDIA hit 164. 2 months later, 164. In December, it pulled back not quite as deep to 170. And then it tagged 171. Recently, 171, and today, 171. You can see a theme here. This is a massive top formation or a massive consolidation. If NVIDIA doesn't hold it here, I'm looking for a retest of 164 quickly. That's 7 points. And if it breaks that level, we're talking about a waterfall decline into the low 150s. And I would not be surprised to see that, quite frankly. So I'm negative on all three of these stocks I've seen so far. SC looks even worse. This is on my Tech Trader swing shorts. Okay. Wow. Yeah, that's brutal. I put this as on my Tech Trader swing shorts, and I'll show you why. One of the great looking bull trends from January of 04, when it was mid 30s, and it ran to 197. Obviously, anytime you go up sixfold in a year and a half, 2 years, you're subject to a top and a breakdown. Mini head and shoulder top, there's your breakdown. Didn't break the channel until it broke through here, but it formed a bear flag, broke down, stair stepped its way lower. The rally back failed, and it rolled over and did a bear flag, bear wedge, and a spike down. I actually told my people to cover the short. When it hit 80, we then subsequently went into the mid 90s and backed off again. This looks terrible. Terrible. Is it a buy here? I would say not until it. Look, you don't want to catch a falling knife. Anytime you're in a downtrend like that, you can assume the trend will continue. The trend is your friend. The major break came here, and it came with a breakaway gap, and it didn't even snap back enough to test that gap. It then rolled over, and there we are. Guess where the target is? 65, 58. I'm not kidding. You got to be really careful with this one. All right, VG? It's a Tech Trader swing short from up here. I don't like the look of this at all. Too many stocks long that still look good, even in this lousy market, to be trying to pick a bottom. Is there a double bottom here? Sure. But do I think that is telling me anything? The only good part about this pullback is it came on much lower volume than we saw on the spike low here. So sometimes it's a successful retest. But until I see upside volume, really good upside volume, I'm not interested in the stock at all. Let's go to Microsoft. Not pretty, folks. Not pretty. I want to show you the Microsoft double top that I told all my people here when it formed that bear flag, that if it cracks that level, this could be done. Well, it took a couple months of bear flagging, bear coiling. It broke down. It snapped back, I believe, on earnings. then it got crushed. Then it bounced, made a lower low, and now another lower low, to the point where this stock has literally gone from 553 to 365, lost about 180 points in a very short period of time. Where's your target? It has to be the April low, 350. Nope, 345. This is vulnerable for 20 more points on the downside. I'm not kidding. If I'm seeming like I'm bearish, it's not. I'm just telling it like it is. You know, they don't call me boxing shorts for nothing. I really think that the market itself is in a very, very extremely vulnerable state. Until the war is over, you know, and that could take weeks or months, the market could continue to go lower. Folks, if you have any more symbols, please post them. GILT. I know Galat very well. As a matter of fact, this is a tech trader swing from 7 3/4 right there. When it popped back on July the 9th, I put out a swing short, a swing long at 7 3/4 with targets at 10 and 14. Well, we reached 1495 by October 15th and came down. When it broke back out, I put out a new swing with targets at 17 and 20. When we reached 2038, rolled over hard. Now it's got what I would consider a rising wedge. The underlying technicals don't look great. Now, one of my institutional clients is really good at picking fundamental picks. Indicated to me he thought this could be 25 to 40 in the next year. I wouldn't be shocked, but there's an awful lot of big bars being traded here on the downside. And I would say until and if it gets over 18 again, it's suspect to a pullback. Careful. I do like this one better than anything I've seen so far that's been given to me. And it's a tech trader swing, so I like it. The FTX, well, that's also something I've been watching carefully. Every weekend I do a weekend webinar, about an hour's worth of the top stocks that I see trends on. I go over the long, shorts, indices, technicals. So I invite everybody to come join me for a couple of weeks for free, no credit card. Just come on in and do TechTrader.com, join up for a couple of weeks and enjoy and make some money for free. No credit card. All right, anyway, DFTX is something that I showed last week. I love this long-term chart. There is a double top, however, at 19, 62, 65, 67, up in that area. I'll tell you what, though, this is one of the better looking charts on Wall Street. Take a look at this. With the market coming down the way it is, the stock's making new highs. My intermediate target is 24. Longer term may be higher, but for now, once and if it gets to 1965, I can see a move to 23, 24. I really like this one, Pat. That's good. Walmart, yikes. I mean, not Walmart, Waste Management. Well, it's just another example of a large cap stock that did great for a while and broke. Quite frankly, the snapback today, I'm not sure what the reason was. But in this market, it snapped back to resistance. It did it on low volume. You see the volume here? Anytime a stock breaks and goes back to resistance on low volume, for me, it's a sell. And note that the stock got up to 231 and finished under 227. Yeah, it was up 194 or less than 1%. Big deal. But this is a topping pattern until it shows me it can get back above 238 or something like that with volume. I'm not interested in this stock at all. I'd be a seller on this bounce. LEU. Well, it was a big pick of ours back in here when it broke out of the base. It then ran like crazy from, the April low when it reached all the way down to 50. It literally went up tenfold. 50, almost to 500, 460. So ninefold. Okay. Right now, this whole group is broken. I don't like when I see a stock break a channel underneath the moving averages, underneath a double bottom price support, and what I call forming a bear flag. folks, that whole group, including the nanonuclear stocks, etc. This to me is a bear flag, and I would go short, or I would sell it on the premise that you might start to see this stock test the August lows. That's 162.64. This could be vulnerable for 30 points right here. I'm not kidding. Be very careful with LEU, okay? You got that, Rob? For Marie Pell, ABL. ABL isn't, I don't have an ABL. Is that something missing in that symbol? I don't show ABL. I show ABL EDE, but no ABL. So I can't give you a quote on that unless I have the right symbol. Lilly, yeah, this is a stock I've been following for a long time. This is a broken stock as well. Now look, Lilly has had a big move. From the August low, 623, it reached 1100 and change, 1133. So we went up 500 points in 5 waves up, formed the top and rolled over. Now, is there support underneath there? This is a great company, but I think there's problems there short term. Right now, that's a terrible looking chart. And quite frankly, I can see a move to 8.5, maybe even down to 800. Keep an eye. I mean, look, if he gets a rally back on low volume towards 950, 60, I would sell the stock. Just be careful. This is at a big move. In 5 years, we've gone from 132 nearly tenfold. Seriously. Don't be lulled into the fact. The chart tells me to sell it. So exit stage left. For VVLO. Is that Vanguard Global Venture Factor? I don't know what that is. I don't see a VVLO. Again, without a better symbol, nothing I can do for you. Petrobras, PBR, overbought, but bullish indeed. Look, here's a stock that in January alone was trading down about 11.5, and it's doubled. On a longer term chart, and here's your weekly. That's what the chart looks like. A lot of resistance up here, going back 10 years. But it is the 10-year high. It's a tough call. It's so extended short term. Now, if you're looking at momentum alone, 23 and 25 might be targets. If you see anywhere near 24, 25, you better sell it, because looking at 1, 2, 3, maybe 4, I think the fifth wave, any war problems with the war and run up in oil that takes this up into that area, I think should be sold. That's my take. Oh, you talk about Valero, VLO. Yeah. Well, it's another beautiful. It's a beautiful chart. It's one of the few groups in Wall Street that is doing as well, obviously because of the war. Always keep in mind where a stock has come from and how far it's extended. Now, in 2020 at the low, this is a $30 stock. It's now eightfold. And most recently from the April low, 99 to 250. So it's up 150%. It's also at the channel top. Now, I'm a little worried about all these oil stocks, because if something happens with the war suddenly, they're going to all dive. And look at the big red bar here. It tells me the institution was exiting. Can it go higher? Sure. What I would do, though, is I would stop under here. Don't let it get under 230. Okay. Do not let it get under 230. Stop half there if you like, half under 214, 213, because you want to protect your position. Those are support levels and stopping points. Okay, hang on a sec. APLD, wow, this has been a really interesting stock for a long time. But, we traded this stock. This was a tech trader swing from many times. Most recently, it double topped, came down. This is the tech stock that did not do what I would like it to. A lot of the stocks that I follow, like AOI, AXTI, and all the ETFs for these tech stocks, have done very well. Take a look how this has been negatively diverging. And so for me, I would avoid this stock. Barry, if and if you're short, stay short. If it gets under 24.40, it could fall apart. Well, I have a target of 19. Only if it gets above 29.45 would I even be interested in the stock, and it better do it with volume. Pat, about MGM, I know the prior person took a look at this, and he was. I don't know what that chart he has is, or how we could possibly read a chart pattern based on that. But let's just say I have a better feel for it, what that looks like right now. This is a V bottom in April with a right-handed extended pattern. One of the big keys to this pattern is this and this. This is a year and a half long coiling wedging type pattern. Basically, in this period right now here, we're going to need a price volume surge, combination of price and volume above 39, 9.25. Once you see that, then maybe the stock goes into the, I would say, low to mid 40s, maybe high 40s. There's a double top up here at 47.8, which would be my target. On the downside, you see these spikes under 33.5, 33.40. For me, is an exit point. Yeah, I can see this. It's in the trading range for the last 6-7 weeks, and it's a difficult call. For Sabina, RLMD, which is, by the way, it's a tech trader top. Every year I put out top 20, 30 picks. This year I made it to top 26 for 26. RLMD is on it. At the time, was trading around 3 3/4. As you can see, it's kind of doubled. Got up to 750. And now it's got a beautiful bull wedge. However, Sabina, support 580 here, 582 there, 580, 568 there. You don't want this under 568.70. But what we do want to see is a follow through on this move here. Target 7.5. We get to that. Mid channel target is around 9.5 3/4. This is a beauty, and it might be even bigger than that. I like this one a lot. MIKZ, what the heck is that? Is that the correct symbol? Never heard of it. I don't have any MIKZ. If there's if it's a wrong symbol, please post a new one. Oh, NUKZ. Okay, well, this is an ETF for the nuclear renaissance. Well, dangerous. Sabina, you better be careful with this one. Let me show you what I see. This is a left shoulder, head, right shoulder. Rounding top, head and shoulders, whatever you want to call it. But today's pattern, a bearish engulfing bar, tells me we go lower. Matter of fact, I should put this on my short list because that's what it looks like to me. My target, 61.2. Below that, if it breaks that level, 56.7. Don't like the look of this. Notice that the moving averages have rolled over. The stock got up to it and reversed sharply today. Bad sign. Be careful. ALB is setting up a head and shoulders as well. This is a long range up, a long-term uptrend, but look at the left shoulder, head, right shoulder. Now, I'm not saying it's over because head and shoulders are not head and shoulders until they break down. This could be a bull coil. See it? Too many times people will look for head and shoulders and they find a pattern they think is one that's not. This is your shoulder line. And if this gets above 196, that's a long way from here, that's where this negates this pattern. But anywhere in this range, if it rolls over, and especially if it takes out 156, look out below. I would target 140 and 120. On the upside, if it breaks the recent pattern above 184, it might retest a high. I also want to point out that this is an island reversal, meaning it gapped up one day and down the next day and left an island. That is very bearish. Okay, so for me, I would be careful with this pattern, very careful. Okay, STZ. Nothing to see, move on. I mean, what I mean by that is this is ugly chart. It has been for a long time. I realize it's consumer products. I realize it also broke out from its downtrend line. It's forming a little pattern here. There's so many better looking charts. Resistance, 167.8. If it gets through that, 180 and 198 would be targets. Stop under 144, period. And Boeing for Marie. Boeing is going, and it's not going in the right direction. Yeah, this stock is in a really bad downtrend. Well, first of all, after a nice uptrend, there was your support, and there was where it should have been stopped. Notice that bar in the failure. It's that secondary support. It's at this gap here. It just about filled it. It might bounce because it's oversold, but I wouldn't be shocked if the market goes lower. That this retest the November low near 179. It's 15 points vulnerable here. And this action here, look at an hourly chart. Check this out. That would be a bear coil. And this stock looks ugly and lower to me. Take a look at the trend, short term. Down, baby, down. Trade what you see, not what you think. I don't care what you think about Boeing. I don't care what anybody thinks about it. It's in a bear trend. Anybody else have a question for me? Just have a few minutes to go. So anybody else with a symbol? Okay. HCSG. If you love my analysis, Barry, come to thetechtrader.com, sign up for 2 weeks for free, no credit card, and see what we're really all about, and see about the phenomenal day trades that I put out today in this shitty market. Okay, I had, let me just show you these 3 winners from today. EEIQ, check this out. This morning, when the stock popped and pulled back and then broke back out, we went long around $5. Within minutes, it had gone all the way up to 1270. We stopped out at, I told some people to sell it in the 11, 12 range and with a stop at 980. The stock never did much the rest of the day, but it was a great, great quick trade. KOD, one of my big trades. They had some drug news. The stock popped, formed a wedge, broke out of the wedge here at 32 and change. We put a day trade on it. After hours, it's 41. That was my target, 41. And AIFF was special. Pop coil broke out. We put a day trade on it at 220. It made it up to 320. See, these are the kind of intraday day trades to do at thetechtrader.com. Anyway, go back to your questions now. CoreWeave, CRWV. Well, 1, 2, 3, 4. This is either setting up a nice base or it's setting up a wave 4 for a big hit to the downside. If the market gets hit, this is vulnerable. First to test 60, 62. Oh, sorry, first to test 70 and then 62. So I'd be careful with this one. It's underneath the moving averages. It's not showing me anything. There's better looking charts. Be careful. If you love the company, that's great. Don't love the stock. Snow. This is a tech trader bear stock. It's on my bear list. Why? Well, first of all, uptrend broken, bear coil, breakdown, 1, 2, 3 snapbacks, failed to get back above 185. It's back to support. And this one looks like it wants to go lower, doesn't it? Doesn't it? Ugly. Target 138.40 and 125. And I'm not kidding. I think it gets there. That's how bad that looks. Okay, Rob? SATL, SatLogic. This is one that we traded a couple times in the last week. It's now been up for 6 days in a row in a lousy market. Always a good sign, right? Relative strength. Look at the hourly chart. Powerful. And if this ever gets above here, above like 6 3/4, it can go to 7, 8, 9 very quickly. It's a very powerful chart. Is it extended? Yeah, but are you going to use stops? You better. Stop under 540, period. Stop under 540. Does it look good? Yuxin, it looks great, but it's overbought and extended. In this market, vulnerable. Nevertheless, momentum is strong, and you can keep it with tightening stops. Use an hourly chart. Would you stop right about there? I would stop at 5.5. Okay. Anybody else, real quickly? We are out of time. David, we have Sonny coming after me, right?
Yeah.
So it looks like I have to run. I'm
All right.
finished.
Yeah.
Okay, so
Thanks, Harry.
folks, just want to say that go to thetechtrader.com, sign up for a free trial for 10 days. No credit card. Just come in and join the party. I think you'll have a lot of fun, make some money. And if you like my analysis and you like the way and you like my style, come join me. Talk to you guys soon. Thanks for being here. And Dave, once again, thanks for inviting me.
All right. Yeah. Thanks, Harry. Thanks for being here. Great analysis. And
I love your style, Harry.
Yeah, thank you, Sonny.
Yeah. And
all right, this is HB out. I'll talk to you later. Bye.
All right. Thanks, Harry. All right. And then here to close out the day for us is Sonny Harris of MoneyMentor.com. Sonny, you should be able to share your screen now.
Okay, let's see. Share. Do you see it yet?
It's loading.
Yeah, it's got green all around it. It says it's there.
Oh, okay. Yeah, now I see it. So, all right, are you ready to start?
I'm ready anytime you are.
All right. I am starting my recording again now.
Okay, fantastic. I'm Sonny Harris. I have moneymentor.com. That's my website. I'm a mathematician, and I've been trading for 45 years. Not quite as long as Harry, but a long time. And I've written 8 books about the markets. And what else do we know? Oh, I do a free live trading room every morning for 1 hour, 7:30 to 8:30 Pacific time. Just send me an email and I'll be happy to send you the links. This morning, we didn't do any trades because my computer kept crashing. But on my personal account, I made $35.78 in 2 hours. So that's not half bad. Let's see, I am a mathematician. I've been trading for 45 years. I've written books. What else do I say? Let's share the screen. Why is it sharing, David?
Sorry, what was that?
I don't see my screen on all I see is Sonny Harris.
I'm seeing your chart.
And then I see trade out loud.
It, what are you
I'm
trying?
looking for it to show my screen.
It is, I am seeing your trade station.
You are? That's very interesting. I'm not. Okay, we'll just go on like I do then. All right, the indicator that I created 40 years ago was designed to take into account that moving averages are slow. They're untrustworthy because they cross over and over and over, giving you false signals. And I found that with moving average, I could lose money pretty effectively. So I created a moving average that doesn't do all those crossovers. You see here, there's no crossover, no crossover, no crossover, no crossover. It tells you to stay long this whole time up to here. So it's called my dynamic moving average. It's the purple and gold lines are the dynamic moving average. And I call it dynamic because it changes its values, lengths, fast length and slow length, with every tick of the market. You see over here, it's getting farther apart. Here it's very narrow and close together, and then here they're farther apart. And that is shown by this histogram at the bottom. You'll see these bars are the measure of the distance between the purple and gold lines. So as they get better and are purple, it's telling me that purple is on top up here. When it turns green, it says purple's still on top, but we're losing momentum. See, it's starting to move up. And so it's questioning, should we still be short or not? And then we've got solid purple again, so we're short. And here's the green again with the prices getting shorter, difference getting shorter. So it's coming back up again and threatening to go up, but not yet. Then the bands, the sunny bands, are this blue line right here, blue channel line, and a green channel line. And they are 1.2 and 2.0 average two ranges from the DMA, which is dynamic moving average. And because the DMA is dynamic, calculating its own links, then the ATRs are also dynamic. So you can see this doesn't look like Bollinger Bands. Bollinger Bands mirror each other, top and bottom. And these don't. You can see this has a nice turn in it. This is kind of flat. So they're not just a mirror image of each other. And they're separately calculated based on who's on top, purple or gold. So they're kind of fancy. And then I've got at the bottom who's on top, which is a series of dots that shows me purple, 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 so that I can look up here and see. I can't see because they're so close together. I can't see who's on top. So I made a little indicator that plots dots to show me who's on top. Gold, gold, gold all the way through here. And now we're back to purple again, going south. So if you'll give me some symbols, I will analyze them with sunny bands. Let's see if there are any symbols in here yet. No. Symbols, please. There's one, INCY. All right, INCY. There we go. I think. Let's try one more time. There we go. All right, this one's just going south, and I'm going to draw what I call attractors. All those lines that Harry had on his charts, those are all attractors. They're all significant levels where price is likely to return to. So you can see right here, there's a wick that goes up to that level. Then there's another candle here that gets rejected and it comes back up again and finally breaks it. That's an attractor. It's hit again over here. I draw attractors at the preponderance of price activity. So if there's a lot of price activity around a certain level, then I'll draw an attractor. And we hit it again here, hit it, hit it, hit it. It's coming down. Now it's trying again. We've got two wicks coming up and touching the attractor. The likely thing to happen here is it will come up and touch the DMA, break the attractor, touch the DMA. And then when the DMA is touched, I consider that to be a barrier to further movement. So what typically happens, and you see it over here, touches the DMA and bounces, touches the DMA and drops, touches the DMA and bounces. So anytime you have a flat DMA like this, you can expect a lot of whipsaw activity. So that's what I'm expecting over here. I'm expecting the DMA to flatten out, price to jump up to the DMA, try a little bit above it and fail and come back down. Does that make sense? DFTX. Oh, that looks, did I write that down yet? DFTX, I did. That looked like a good one from Harry's analysis. So I'm thinking maybe I better look into that one with Sunny Bands and see what's going on. Just drawing a tractor right through the yellow dot. You see it hits it and comes down, hits it and comes down, hits it. And they've got a big wick on a down bar and hits it again, and now we're right above there. So that's an attractor. And I think what's going to happen here is it's going to, the slope is still positive on the DMA. We've got a gold bar on the histogram. So I think we're likely to go up and touch the upper outer band and continue. Let's squeeze it up a little bit and see what we've got. So we don't have anything behind there, so this is new territory. So I think we're going to go up, and we could go up. We're at 1894. I think we could go up close to the 22 level on this one. Let's see what else we got. Veil. VALE. And that one's going south. So let's draw some attractors. We've got one here, the yellow dot. The yellow dots, by the way, are my PHW, or potential hourly wage indicator. And what it does is mark all the turning points, any significant turning points. And then it writes right out here at the end, it writes some words that are important. It tells you what the ideal profit is if you trade all those yellow dots. The PHW is 60% of that amount, because I figure I can trade something and leave 20% on the table going in and 20% on the table going out and still make 60% of the move. So that's $33. There are 31 ideal trades, and the date span is 3/26/24 to 3/26/26. So that's what the yellow dots are. They mark the perfect trades. They don't mark the likely trades, because it's very difficult to do that. Anybody that's been trading as long as Harry and I can tell you this is a tough job. It's a tough job, tough way to make easy money, I guess you could say, because it's a difficult process. All right, so this one comes up right here, almost touches the DMA. Purple's on top. We've got green bars on the histogram, which tells me it's losing momentum on the downside, potentially going up. So it'll come up more than likely and touch this purple line, which is at 1564, and then fall back down and then make another run at it. And if it goes above there, we're looking at 1629. Let's see, did I have any symbols up above there? I do. I don't know where my symbols start and where Harry stopped. GILT. Well, that's about as flat as you can get. You see how the price is going above the DMA, down below it, above the DMA, down below it, up and down. And until it stops that, it's not going anywhere but up and down. And we'll get some horizontal line here. Right here's an attractor. Hits price, the price hits it there, price hits it there, and then comes over here and hits it again. Then it falls through it, hits it again. So you can see this barrier to further movement comes up to the DMA, and it's the barrier again over and over. So what am I going to guess it's going to do? Let's see. Larry Williams says, anything you do when trading is just a guess. You're either going to be right or you're going to be wrong. So that's why I say this is my guess. I think it's going to go up to the upper inner band again at 18. And I don't know how long it's going to go sideways there, but when it does, it's going to try to come up to 18, does it say 1887? or fall and go back down to the attractor, which is at 1477. So watch for it to move above the DMA and come up toward this upper inner band, and then you'll have some movement. Now we've got waste management up here. I used to do a lot of trading in waste management. I like it. But I don't trade stocks nearly as much anymore as I used to. I trade them much longer term. You know, I look for a couple of weeks to a month or two in a stock. Whereas in futures, I trade the S&P 500 futures, and I trade them on a 5-minute chart, back and forth really fast. But waste management was one of my favorites. You can see the attractor there. That look at the yellow dots. They go right through here, 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 and goes through and comes back, here again, and then over here we have stumbling right there around the yellow dot and the turn in this at this DMA, which is a barrier to further movement. And so it comes down, it hits the lower outer band. Now my signal for taking trades on the sunny bands is when it has been going down on red candles and it hits the lower outer band, then you watch for the first blue candle, which is right there. It's a doji. And then the second blue candle, we watch where it closes. And if it closes higher than the close of the prior candle, prior blue candle, then at the close of that candle, we go long. So that's a sunny band sell buy signal right there. And if you take that signal, expect it only to go to 233.5 or so as it comes up to the DMA again. Okay, let's see, more symbols. TER, please. TER. Teradyne, oh, nice. Well, this one has a flat DMA. It's come up above it and hit the upper outer band, inner band, sorry. And now it's broken down and come down below it. There's two red candles, one there and one below that. So I would be taking a short tomorrow morning, looking for it to come down to 266 and something. And then we'll probably resume the see, we've got up move going all along here, up, 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 up. And then we hit something. There's probably an announcement in there somewhere. And I would be expecting to see it come down to here and then bounce back up to the upper outer band. Caterpillar Inc. Caterpillar Inc. used to have a big facility that was very close to where I used to drive to work when I lived up in San Jose and worked at Lockheed. Great big Caterpillar machines all everywhere. Brand new, painted yellow. They were gorgeous. This looks just like Teradyne. I could say exactly the same thing. It's been going up, up, up. We've got an upper outer band, a decline, DMA, lower outer band, DMA again. So I think we're going to stumble a little bit more and then go up to the upper bands. Yeah, that's what that looks like. AMD and CAT, AMD. Archer Daniels movement, is that what that is? No, advanced micro devices. Okay. Well, this is very noisy over through here. Let's see if I can find an attractor. So we've got one up here, that's clear. Come on, let's have a look. We've got one down here, which is a kind of loose one because you see this is above, this price is above the attractor, and this price doesn't quite make it up to the attractor. But I can feel the magnetic pull, it just didn't quite make it. And then it hits here, hits this one here, hits it again, again, and then makes it up above the DMA and then back down below it. So having gone up above the DMA, I would see it to be likely that it would go on up to the upper outer band, which is at 232 and change. So let's look for 232, but first we have to get past this red candle and make some blue candles. I have my candles blue because the sunny bands are green. And if I had green candles on a green background, it wouldn't work so well. So I use blue and red candles. And then I have an indicator that for intraday charts, it plots the candles light green and light magenta instead of red and blue. That way you can see them and you can easily tell what time frame you're in, whether it's the day session or the night session. If you're interested in any of these things, and answer also to this guy who just messaged me, moneymentor.com. Did I spell that correctly? Or you can email me and we can talk. No. Hang on just a second. Sunny@moneymentor.com. I think I typed that right. Yeah. Oh, I put bomb. Try it again. Got it now? Okay. Sunny@moneymentor.com. Or you can give me a call whenever you want. My number's right at the top of my website. Anybody can call me on my cell phone. Sunny bands are very different from the Bollinger bands. If you put them one on top of the other, you'll see that they don't correspond. And that also Bollinger bands don't really do the job that sunny bands do. Let's put them up there for a second. They don't really do the job that sunny bands do in hugging price. Bollinger bands go way outside and then way inside, and they are created from statistical formulas, not dynamic formulas like I have. Bollinger bands, here we go. Bollinger bands use standard deviation, which is a statistic that says where it's likely to go next. And I'm not these bands, my bands, where do Bollinger bands go? Come on. Let's try again. Bollinger bands. Okay. Oh, they're there. Okay. So you can see here how this goes up, and sunny bands squeeze that price and it goes right up to the upper outer band. On Bollinger bands, it's squeezing price right in through here. So you expect a big move, but you don't know which direction. And this Bollinger band goes way down here and up and out. See how it doesn't hug price? So it's questionable which direction you should go. Or at least it is to me. Maybe I don't understand it that well, but the statistics instead of the dynamic capability is what I trade with. So I don't use Bollinger bands. I've used them in the past and not done so well. Okay, let's take them off of there. All right. Who's on top tells me who's on top, purple or gold. The dots are colored gold if gold is on top in the moving average, and they're colored purple if purple is on top on that moving average. And it makes it easy for me to see. That's why I put it on there. And okay. Is this Nokia? Yep. All right. Flat for a long time, then it moved down, then we've got it up with a great big candle up here and a pullback at new highs. So let's put an attractor on that. And you notice I don't put them at the wicks. I put them at the body of the candle. So Nokia doesn't, that's interesting. It's not a very high price. It's just $6.26. But I think now that Nokia, that's drawing horizontal line, I think that Nokia is going to go back up here. That's kind of an easy shot. It's now at 828. It's going to 865. Excuse me. And let's skinny this down a little bit and see if we can see anything above there. One of the things I like to do is put Fibonacci retracement lines on things. So let's go from here to, and I use the wicks for Fibonacci, whereas I don't for much else. So it says 935 is the next target. Does that help? Let's see. Anybody got any more questions or symbols for me? Where can we purchase your dynamic moving averages indicator? You can get it right on my website, which is moneymentor.com. Got an order form there. CER, I got A. Did I get AXTI? I don't know. AXT. Well, I don't think I did get that one, but that's quite a move. It goes along here sideways forever and ever and ever, years. And then it starts climbing from about $5. I don't know, from $1.73, climbs up to 67.97. This is likely at this point to come down and touch the DMA, which is at $50.63. So there's a good chance it'll come down and touch that and bounce. And let's see how far we can go. Let's grab the Fibonacci lines again. And we'll take something down here low and go up to this high. Okay, so that brings price down to 55.88 and then a bounce. And let's see if we can, and then $90 is the target after that. See, I keep plus and minus Fibonacci retracements on there for the percentages so it can do above projections and below projections. Let me show you my Fibonacci projections here just for a second. Settings. So see, I have the standard ones, 0, 100, 23, 38, 50, 61, 76. And then 123 is a projection higher. 138 is a projection higher. Minus 23 is a projection lower, and minus 38 is lower. And I do light blue lines because I want the main lines to stand out from the other ones. So if you want to take a screenshot of that, you can see what I used. Okay, so I'm looking for a run to $90. I'm going to write that one down too because I'm going to buy that one. I like that. TER, didn't we do TER? Teradyne, yes, we did. Let's put the Fibonacci on that. Maybe that's what you'd like to see. So we're going from here up to here. And we'll get our arrow pointer back. And then you see that the next move above there is at 409. I don't think we're going to hit that in the next week or two, but that's a good projection. And 23 is below it. So it, as I said before, when we looked at this one, we've got two red candles that could easily come down to the lower inner band, or if it's strong enough, the lower outer band, which is right down here at 268 and change. So I think this one's going to do a little move on the downside, touch the band, and then go back up again. What else do we have? I've got 3 new messages. GLW, please. Corning, Glassworks. And this would be the same as Teradyne. It looks the same pattern. So we do a Fibonacci line from here to here. Yeah, see, it's almost down to the 23.8% right there. So it'll surely come down to that level, I would think. And then, because it's also at the DMA, but purple is still on top, you see. The green lines on the histogram are showing us that the momentum for short trades is withering. So we're likely going to go up again. So we hit this lower inner band over and over again. We came up, hit the upper inner band with a wick, and then made a red candle. So I'm expecting a second red candle, touch of the lower inner bands, and then a move up. RTX. Am I almost out of time, David? RTX.
Yeah, you have a couple minutes, but
Okay.
you're closing out the days for us. So if you want to take a few
Oh, okay,
minutes,
cool.
you're welcome to.
All right, thanks. So let's go drawing retracement lines. We'll go from this low right here up to this high. And you can see we're down to the 23.6% right there. We're going to hit the lower outer band. My guess about this one, because you see what's done to the DMA here, how it started to turn down. When it turns down like that, it often will, well, that precedes price movement to some extent. So we've got 3 purple bars here. I expect more. So I'm expecting, because the DMA is turned down, that we'll probably go down. Here's an attractor at 181.20. Here's one at 188.14. I'm expecting that 188.14 on a move down on RTX. T. And that's just about the same story. We've got sideways, 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 a move up, a move down, and then this nice big move up. Touch the upper outer band, 2 red candles, we go short, 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 short. And now we have 2 blue candles, sorry. So we've got, hits the lower outer band, turns blue and moves up, second blue confirms, and now we're going to the DMA at the very least. So we're moving from 628 up to 641 to 43, going up to that level, and then it will decide what to do, go above the DMA or turn and come back down. I'll take one. Oh, there. We got 2 more symbols. I'm going to say I take 1 more symbol and then we're going to quit. So AG. Let's get some horizontal lines. We've got an attractor here. Lots of attractors there. And now we'll get the arrow. And let's see, down, up, DMA, up, lower inner band, up, lower inner band again. Now it drops below the lower outer band, but you see how we've got 2 blue candles here? One that penetrates the DMA, but just slightly. And the second blue candle goes on up almost to the upper, lower inner band. And then we've got 2 reds. So the 2 reds these 2 blues would tell me it's a buy signal. But on the next candle, is that a confirmation? No, it turns red and leaves a gap and it moves down. So that's not a confirmation. And neither is this. So what are we going to do? Chances are it's going to touch this lower outer band and go on up to the DMA. Can't guarantee that, but it looks likely. Yeah, it looks likely. FCX, and then I'm done. And that's very much like the same thing there. I mean, since it is, after all, a conglomeration of stocks that we're looking at, it would make sense that they all have a similar pattern, or a lot of them do at least. Okay, so we've got an attractor that goes through this yellow dot and through all this sideways price activity. It's very volatile, a lot of up and down to it, but it's sideways. Sideways is what we call sitting on hands in my live trading room. That means don't do anything. Cash is a position. So sometimes we'll sit for 20, 30 minutes before I take a trade, because if I don't have a signal, I'm not going to do it. That's how I have 90%, 95% accurate trades in my live trading room this year. Why don't we put that in here? I call it TAWS, Trade Along with Sunny. And if you want to text me that, TAWS, just text me TAWS. I will set you up so you can come to it. Yeah, okay, that's my cell phone right there. And if you want to call and talk, that's good too. If I don't answer, it's because I'm talking with someone else, and I'll call you back if you just leave me a call me message. So, okay, we've got this going up, touching the DMA and failing to go down further, going up again to the tractor, back down below the DMA, and then we go down to the lower outer band. We've got two blue candles, and then there's a red, so it doesn't confirm the two blues. If we got another red and it hits the DMA, I'd go long. If we got another red and it comes down, I'd go short. And as they say, that's all she said, all she wrote. We have any more questions without symbols? Just a question? Be happy to say anything you want me to. It's been a pleasure meeting with you. I wish I could see you. In my live trading room, we trade with cameras on, so we can all talk. And while we're waiting for a trade to set up, we'll talk about all kinds of things. All right, everybody. Thank you so much, David and Anka. Thank you so much. It's been fun.
All right. Thanks, Sonny.
Thank you.
Great analysis, and thank you for closing out the day for us. So we had 14 great sessions today, and that is it for today's event. Let's see. I'll post Sonny's site there one more time, so be sure to check that out. Let's see, a couple other random things here. I got this NVDA options trading ebook that you might find interesting if you want to check that out. You can now add timing research events to your calendar if you want at the link I just posted there. You can also get timing research updates on Telegram, Substack, and YouTube at those links. And let's see. So for today's archive, I did live stream the whole event to YouTube. So the full archive, the full unedited, cut live stream is available instantly at this link that I just posted. And then I am working on processing the individual recordings, and those will be available at this link as soon as I can get them processed. But anything you missed today, the full, what was it, 7 hours, is available instantly on YouTube. All right, so if you enjoyed today's event, mark your calendar. I think we're going to do another one on April 15th, but I'll have more information about that soon. Also, let's see, what else? And then also mark your calendar for May 5th, 6th, and 7th. We're going to have another Synergy Traders event, and the theme for that one will be Active Traders Playbook. So that should be interesting. So that'll be May 5th, 6th, and 7th. And again, the next AYT event of this format that we had today will be on April 15th. So, all right. If anyone has any questions, let me know, or you can reply to any timing research email that comes to me directly, or go to the timing research, the contact page on the timing research website. So, all right, that's it for today. Thanks, everyone.
David, what
Thanks
were
again,
the dates again for May?
Oh, May 5th, 6th, and 7th. So
All right, great.
I haven't started scheduling that one yet, but I will let you know.
I'm going to put it on my calendar because I schedule pretty far in advance sometimes.
Oh, okay. Okay.
Thank you.
Yeah, hope you can join us. Yeah, trying to think if there's anything else I can share. Yeah. All right. Yeah, that's it for today. Thanks, everyone.